watching NDTV Profit and this is Ask Profit. I am Mahima Vachajani and with me is Puneet Zaveri. Let's take a quick look as to how the markets are doing before we get on to answering all the queries that you have on the show for us on the show today. The Nifty 50 is up by about 0.12%, not doing much in trade. We did see a sharp rally on Friday where the Nifty did cross at 25,900 levels. But today, it's holding and sustaining those 25,900 levels is what we're seeing on the Nifty 50. The Bank Nifty also, doing fairly well in trade today, much better than where the Nifty 50 is, up by about 0.7%. In terms of where the levels stand, slightly above that 58,900 levels for the Bank Nifty. But let's try to pull up the Nifty 50 heat map and see as to what are the counters that are, doing well in trade today and what are the counters that are putting pressure. You have topping that chart, you have names like Bajaj Auto, Axis Bank up by about 1% each. But you have counters like Maruti Suzuki also doing fairly well in trade today. So auto names doing well. You have NTPC, SBI also in the green. However, there's recovery seen in the Bajaj Finance as well, up 1.8%. But something that's not doing well. You have counters like Max Health, which is down by about 0.7%. Tata Steel down 0.7% as well. Tata Motors PV down 4% as well. Interglobe down 0.6%. Ultratech down 0.6% as well. But let's try to pull up the sectoral heat map and see as to how sectors are looking like right now in trade. Most of them in the green. PSU Bank leading that chart, up 1.7%. Private banks also up 0.7%. So largely both private banks and PSU banks contributing towards that gains in the Bank Nifty, but largely contributed by the PSU banks. But something that's seeing a tad bit of profit booking, you have your Nifty IT, Nifty Metal, as well as Nifty Healthcare. Nifty Pharma almost flat, but there's gains seen in Nifty Oil and Gas as well as Nifty Consumer Durable as well. Let's try to pull up the advanced decline ratio and see as to how that's looking like, because that will give us a flavor as to how the broader markets are doing. It's in the favor of the bear. The ratio is almost that 2:1 mark, where 1,500 odd advances versus that of 885 decline. So slightly below the 2:1 mark, but that gives us a picture that broader markets are not that bad either.
Sorry, did you say favor of the bears? I think it's advances.
Favor of the bulls, sorry, my bad.
The advances are 2:1 almost in terms of the bulls today. Lot of individual movers which are giving some key comfort to the market, something like an Idea Forge individual mover as well. Let's quickly look at the BSE 500 and give us that perspective as well, because it is almost the fag end of the earnings season that we've seen the reactions come in. Tata Motors on the passenger vehicle side largely reacting on numbers. Narayana Rudrale as a similar reason as well. What's interesting is something like an Equitas Small Finance Bank as well, because the earnings were already in the picture. Maybe the valuation or something like Utkarsh is rubbing off on a positive way on something like Equitas Small Finance Bank. IRB Infra, Mastech is also up today, as well as something like a City Union Bank, and we did put out the flash earlier for City Union Bank. Very interesting key aspect on that company. Astral as well as something like a Supreme Industries is also in focus, because PVC prices have again been reduced by Reliance, and that will have inventory losses for the company. But let me welcome in Saurabh Jain, Equity Head Research at SMC Global Securities, as well as Kunal Rambia, the Fund Manager and Trading Strategist at The Street. Gentlemen, thanks so much for joining in for today. And let's go across straight to our first caller. And this is coming actually from Dubai. Amit is dialing in for a stock query. Amit, very good morning to you and welcome to Ask Profit. What's your query?
Morning, guys. Hope everyone's doing well. Quick one. I'm a great believer in the banking sector. I have a lot of exposure. I have holdings across the spectrum. But today my question is on Kotak Mahindra Bank. So I have about 100 shares at 1,800, holding it for some time. But I don't understand why they're doing a stock split, right? Because it doesn't make sense to me. Why would they do a stock split? Stock's not moving anywhere. So I'd just like to take a view, or should I just stick to my larger holdings like ICICI Bank or a mid-sized bank like IDFC? But I don't understand the strategy for Kotak Mahindra.
Got it, Amit. Let me take this across with Saurabh. Now, Saurabh, a very interesting one on Kotak that they've decided to, have a meeting on 21st November for the same. Any perspective that you can offer Amit and what he should do with his holdings?
See, we do have a positive view on the banking side, and he has already mentioned that he has a lot of banking stock is in kitty. With respect to the Kotak Bank, yes, the valuations are on the comforting side, and bank is doing good on the operational parameters. So, in my opinion, it should be you should have Kotak in your portfolio. Regarding stock split, he has asked. I think it is a banking. I think it is the management call. Maybe they want to they want more activity from more participation by splitting the stock. That is the reason why they are doing too. Because yes, you are absolutely right. The stock has done nothing in the last 1 year or two, and it's been similar in the case with the other private sector banks. Many banks have not performed, especially on the private sector side. But on the public sector side, if you see that the participation in the gains are much higher.
Okay, all right. We've got our next caller. Vinod is calling us from Maharashtra. Vinod, hi, a very good morning to you. How can we help you today?
Hi, good morning to everybody on that side. My query is regarding Carborundum Universal, which I have been buying for last 6-7 years through SIP along with Grandwell Norton, and I have been booking profits regularly. I want 3 to 5 years view on Carborundum Universal because it has been underperforming last 1 year like never before.
Okay, got your question, Vinod. Any particular reason as to why you've done an SIP in this particular counter only?
No, these two, they are industry leaders and the only major players in India and the exposure to exports as well. So I have gone through the fundamental understanding of the company and the sector.
Okay, all right. I'll take this up with Saurabh then. Saurabh, what's the view like since he's been doing an SIP but still sitting on a loss of around 95,000 odd rupees? What would you suggest him to do for the next 3 to 4 or maybe 5 years as well? Should he continue to hold the counter or should he book his losses at the moment?
Hi, good morning. See, Carborundum is a very old player in the industry, and we expect that the industrial activity will pick up in the second half of the financial year. And the company is in basically abrasive business, and the business should pick up. If you look at the operational performance, yes, there has been a degrowth in the profitability, especially if you compare the last quarter result with the year before, and that is the probable reason. Now, having said that, the stock has already corrected a lot, and the valuations are on the lower side, so which gives a bit comfort to for the investor also. I feel there is no point in getting out of the company. You may still hold the stock that you own, but I would rather suggest you do not make further SIPs in the similar stock. Rather, I would suggest you to go for the PSU banks.
Okay, all right. We've got our next question, which is, from Akash, and who's asking about Jio Finance from the next 3 months perspective. Kunal, hi, a very good morning to you. What's the view like on the charts for Jio Finance?
Good morning to everyone. So yes, if you look at the overall formation on the chart, it's looking sideways, right? And Jio Finance has not done much since June 25. The support is at around 295 and the resistance is at around 325. I think this sideways range can be kept into mind and the position can be created accordingly with the stop of 290. One can initiate the position near those levels and think of exiting near this 320, 325 levels. If the counter manages to break 325 decisively on the higher side, I think the levels of 350, 55 are also likely. But for now, it's an avoid because it's reaching the higher end of the range.
Okay, all right. So that's with regards to where Jio Finance is concerned. We've got our next caller. Kiran is calling us from Hyderabad. Kiran, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. My query is regarding Alkem Laboratories, ma'am.
Okay.
I purchased 30 shares at 5660, ma'am.
Okay.
So I would like to know short-term outlook on this counter. This counter posted good results, ma'am. And a recent brokerage upgrade is also there on this counter. So what sort of targets could I expect in the next 2 months, ma'am? Or should I shift to something like Infosys or Rainbow Hospitals, ma'am, by exiting this?
Okay. Okay, Kiran, got your question. I'll take this up with Kunal. Then Kunal, he's sitting on a no loss, no profit almost situation right now with regards to where Alkem Labs is concerned. Would you recommend him to continue to hold or switch to something like an Infosys or Rainbow Hospitals?
See, again, on a friendly note, I would like to suggest our viewer that if your view is only for 2 to 3 months, the looking at the quarterly results really won't help. Look at the trend of the counter. The trend is absolutely strong and positive. The best volume was seen somewhere in the month of August, and since then, this counter is clearly making higher top, higher bottom formation. Even at the present level, that particular trend is open. Unless the counter breaks 5,500 decisively on the lower side, I think one can comfortably stay invested with this counter. Upside, we can expect the levels of around 5,900 to 5,950.
Got the view, Kunal, but we have another query now coming in on something like a Marico, and a viewer's actually not mentioned how much he's holding, but he's mentioned he's holding Marico, Exide and Siemens. So let me take a specific query on something like a Marico today. The results largely were pretty good. He's not mentioned his holding period, but Saurabh, what would you recommend on something like a Marico right now?
I think, as you have already mentioned, the results have been good, and I expect that the volume and the value growth will be better in the second half of the financial year. So, in my opinion, I think he should hold the stock.
Got the view. We have another query now coming in on a chemical counter now, Clean Science, and Siemens is holding roughly 50 shares at almost 1,099 rupees per share. So he's currently sitting at a loss. He's asking if he should hold on or sell with the next 1 year view. Saurabh, it's a counter that's been under pressure post quarterly results over the last couple of quarters. What would you recommend?
See, the company is into specialty chemical business, and it is one needs to have a deep understanding. After seeing the quarterly results, and the management hasn't spoken anything about its near-term outlook, so I would suggest him to get out of the stock when he gets the opportunity.
Okay, all right. We've got our next caller. Sriram is calling us from Chennai. Sriram, hi, a very good morning to you. How can we help you today?
Hey, good morning. How are you all?
All well, Sriram. How are you?
Yes, I'm doing good. Thank you. My question is on Ambuja Cements. I have been holding 200 shares, which I bought about a year and a half before.
Okay.
So right now, I want to know the outlook in the next 1 or 2 months, as I need some funds. Should I exit the stock as it's not performing to the expectation in the last 1.5 years? Or is there any steam left in it to go for a 2 months to 3 months period?
Okay, Sriram, got your question. I'll take this up with Kunal. Then Kunal, what's the view like on the charts for Ambuja Cements?
See, this counter has not done anything. In fact, in this last 1 year, look at October 24 levels, 550. Somewhere it gave a spike to 620, but again back to 520 itself, 550 itself. So not much. It's absolutely lackluster. So if the view is only for next 1 or 2 months, I think, if someone has a long-term view, I would say hold on with the stop loss of 550. But if the view is for short-term, just take an exit. Doesn't really matter much. If the counter manages to break above 600, which is going to be a symmetrical triangle breakout, I think at that point in time, we can reinitiate the trade. I would advise a viewer to come back to the channel and ask someone who is available at that time. Above 600, I think there can be a clear breakout with the target of 650 to 660. But for now, it's a clear exit.
Standard disclaimer, NDTV Profit is also a part of the Adani group of companies, and so is Ambuja Cement. But moving on, we've got our next caller. Balchandra is calling us from Mumbai. Balchandra, hi, a very good morning to you. How can we help you today?
Yes, ma'am, very good morning. I have a query. I have Orient Cement 2001 share at a price of 192 rupees.
Okay.
Yes, I just need your recommendation on it.
Okay, Balchandra, are you looking at this from a longer term perspective, or are you looking at the technicals for the counter?
6 months perspective, ma'am.
6 months perspective. Okay, got your question.
Yes.
Then I'll take this up with Kunal again. Kunal, Orient Cement, what's the outlook like on the charts?
So the entire cement pack has not done anything great. In fact, Orient Cement has massively underperformed. The only observation which I can see on the long-term chart is that somewhere in October 2022, this counter made a high of 180, which was the breakout for October 23. And now the counter has reached the same level, and that level is 180 to 185 zone. If the counter manages to hold these levels decisively, I think we can expect consolidation then with positive bias. But any closing below 180 over the weekend can be a clear exit. So for now, it's just 5 rupees away from that level. So I would advise a hold for now. If the counter slips below 180, it's a clean exit then.
Well, that's Kunal's view on Orient Cement. But we have another query now coming in again from Dubai. And Khadak Chaudhary, and I'm hoping I'm pronouncing the name correctly, is holding something like a Sagility, bought at 40 rupees per share. holding 2,000 shares. So he's sitting, he's done decently, very well for him actually, and he's asking if he should continue to hold, book some profits. Saurabh, what would you recommend for something like a Sagility?
Won't be able to give a comment on this.
Kunal, on the charts, does Sagility have a more momentum on this, because the fundamental factors on the on the quarterly performance was quite strong. Management maintaining that they're seeing a lot of positives. Anything on the charts that suggests Sagility could continue to have an up move from here?
Absolutely. In fact, we are very bullish on it. This counter has reached the previous highs post listing of around Jan 2025. Those highs were around 55, 56 levels. This high was achieved on the result day, which was 30th October. Post that, a bit of correction, and again there is a recovery. I'm very bullish on it. The trend is absolutely strong with the stop loss of 50. I would advise our viewer to continue holding this. There is always common fear in the mind of most of the traders that if there is a profit, let's book out and take some profit home. Rather, I would advise trail the stop loss in such kind of counters. This can give us big surprise on the upside. So with the stop of 50, it's a clear hold for now.
Got that view, Kunal. We have another query on WhatsApp now, and it's on a counter called Azad Engineering. P. Chinna from Andhra Pradesh has been holding 67 shares at 1,657 rupees, so very close to the current market price. Asking if he can, we can share a view for the next 5 years. Saurabh, do you track this counter by any chance?
See, after the good amount of consolidation, the stock is still trading 7 times to book value. While the prospects are good, the order book is good. Since he has a horizon of 5 years, I would suggest keep on holding.
Okay, all right. So that's with regards to where Azad Engineering is concerned. But as always, let's take a quick look as to how the derivative space is looking like right now. And we have Sharad joining us to give a snapshot of what trade today is looking like. Sharad?
Well, Mahima, the medium-term levels are sounding pretty much good. Of course, the last trading session, we saw a significant uptick in the last 15 minutes of the trade. But overall, let's look at the Sensex heat map, how things are actually panning out in the initial hour of trade. We can see, of course, the banking names are doing well, but some selling coming in Tata Steel, Ultratech and Tata Motors PV as well. We're seeing a big sell-off there. Interestingly, let's pull up how Sensex has been forming. It's contracts, not so much of contracts are being made in the initial day of trade, and interestingly, it's below that 85,000 mark as well in the spot markets. Looking at the contracts, it's even Stevens. The congestion levels have been equally distributed in the current hour of trade, but of course, we'll be looking at these changes as the time progresses. BankX, we can see there is a kind of a divergence there, but HDFC Bank is holding up in the green. And apart from that, if you just pull out the PSU Bank's contribution, that has been doing really well. IndusInd Bank also, we see the longs developing. Overall, the contracts in the BankX also seem decent in the day's trade. But let's look at what stocks are actually moving forward. The key long build-up, Hero MotoCorp, RVNL, these are the stocks where the action is there. Looking at the short covering, AU Small Finance Bank and IDFC First Bank make it to the list. And the long unwinding shares, Alkem and Torrent, these are the pharma counters which our eyes on there. And lastly, short build-up coming in for Tata Motors PV and Astral. So these are the stocks in the BSE F&O space.
Well, thanks so much for that, Sharad. But let's continue with some more stock queries. We have another one coming on something like an NCC. Very interestingly, our viewer Satyan has been holding at 230 rupees per share. And he's mentioned that considering the Bihar election, should he average now because they have some big projects there, switch out to something like a Sagility. So we already gave that view out. But Saurabh, all of these road plays are actually not doing too much in this space. Something like a PNC, Infratech, KNR. You named a few. None of them have actually moved at all over the last couple of days, a couple of quarters actually. Would you recommend that, Saurabh, to hold NCC or buy more right now?
You're absolutely right that many of the companies have come out with the results and they have showed decline in the operating profit margins and consequently in the profitability too. But what happens, the second half of the fiscal year does well for companies in this space because the activity generally gets a boost after the monsoon season gets over, and this time around there have been a very erratic monsoon. Now with the continuation of the government in the Bihar, maybe the more orders will be awarded and the activity will pick up. So as of now, it looks like a contrarian call, but I would still suggest to wait for another 6 months.
Got that view. Saurabh, we have another query coming in from N Raja, asking a very interesting one on metal stocks for a period of 2 to 3 years, and he's asking us to select a stock. So Saurabh, anything in the metal space that you like for the next 3 years?
Like metal space, I would rather suggest him to, if he wishes to go for an ETF, then there is a one ICICI Prudential Nifty Metal ETF is available, which includes all the stocks which are there in the metal Nifty Metal Index. Apart from this, in the space, we like companies like Hindalco, JSW Steel, and Jindal Steel.
Got that view. Saurabh, the next one that's coming in is now a short-term view on something like an IDFC First Bank. Our viewer Sumit from Delhi has been holding roughly 1,000 shares at 80 rupees per share. So very neck and neck with the current market price, and asking for the next 6 to 9 months if we can continue to hold the position. Kunal, would you recommend something for Sumit to hold that position right now?
Absolutely. In fact, we are also holding this position on the logic behind that the first breakout was seen somewhere in October. That breakout was at around 78, and post that there was a cup and handle formation breakout with the stop loss of around 75. Now the counter has been consolidating near the highs of around 81. So the trailing stop loss right now is 78. With that stop loss, it's advisable to hold. And the positional target for this can be 90 to 95 rupees. Now, because the view is for next 2 to 3 months, I think 90 is an achievable target. So continue holding it. But just one request, once the counter turns even more favorable, keep trailing the stop loss so that you don't miss out if there is a reversal on the counter. But yeah, it's a clear thumbs up based on the weekly charts.
Okay, clear thumbs up based on the weekly charts for IDFC First Bank. But moving on, Rajesh is calling us from Pune. Rajesh, hi, a very good morning to you. How can I help you?
Hi, am I audible?
Yes, you're audible.
Thank you. Thanks for taking my question. So I have Polycab shares at 150 shares at the average price of 4,000 rupees.
Okay.
Okay, so I just want to know like fundamental view about this company specifically and wires and cable sectors in general. For let's say next couple of years, let's say.
Okay, Rajesh, just want to understand as to what was your thinking behind buying Polycab at that 4,000 levels, because you're sitting on a handsome profit of 5.7 lakh rupees.
So I had bought, like, let's say, I think a couple of years back when there was a correction due to some news flow, this thing on the stock. So and there financially, performance wise, the company was doing good, at that point also. And so going forward in couple of years, let's say I want to know about like what is the fundamental view on wires and cable sectors in general and the company in particular.
Fair enough. Rajesh, you've spotted the right counter at the right level. I'll take this up with Saurabh then. Saurabh, what's the view like for Polycab, one, and second, the entire cables and wires space, considering that competition is heating up?
Is there, but yes, all the companies like KEI, Polycab are posting good set of numbers. If you look at the last 3-4 quarters, the companies are doing well. Our view is quite constructive on the sector, and from the next 2-3 years, companies like Polycab looks good to me.
Okay, all right. So that's with regards to where Polycab is concerned. We've got our next caller. BS Iyer is calling us from Bengaluru. Mr. Iyer, hi. Thank you so much for calling in. How can we help you today?
Yeah, I have 300 shares of Q Investments, bought at an average price of 1,200. I want to know what is the future.
Okay, you want from...
Because it has touched 5,000 and come back to 3,000. That's the reason.
Okay, all right. And this is from a longer term perspective, right?
Very long, exactly.
Okay, Saurabh, what's the view like for Tube Investment? He's still sitting on profits of over 5.6 lakh rupees, but what he's saying is that it's gone to 5,000 and now come back to the 3,000 levels. From a longer term perspective, can you continue to hold the counter? Can he continue to hold the counter?
See, it is the last 2-3 quarters that the company is not performing. Maybe, possibly, it could have been the result of the two outcomes. Like there was a fall in the profitability quarter on quarter and the valuations also. And this company is coming. This is a company of the Murugappa Group, which has a lot of reputation, and this is a very old company. So, if you want to take a contrarian call, you can still hold. But if you wish to book some partial profits, then you can go ahead.
Got the view, Saurabh. And we have had a couple of queries, Mahima, where investors are booking over 5 lakh rupees of profit, still holding on. So definitely one that we need to spot a few as well. But it's that time of the show where we take rapid fire questions with our guest. Saurabh as well as Kunal, we request you to keep your answers as short as possible on buy, sell or hold, so we can take a lot more queries. The first one's coming on a Yes Bank, and Arun is asking if he should, what is the near-term expectation? He has 100 shares. Saurabh?
Can't say.
Kunal, any view?
It's a hold with the stop of 22, but again, momentum is missing out, so I would say take an exit as early as possible.
Okay, Pine Labs is the next one. Jeet from Kolkata wants to know if you can buy at the current level and 2 years the time horizon because he missed the IPO. Any view on this, Saurabh?
Newly listed company did not find merit in investing.
The other one's also another newly listed one, Kryzac Limited, and Sunil is asking if you should purchase as of now. Kunal, anything on the charts that suggests momentum? I know it's a very short term that we've had since the IPO.
Not much actually available, but if you look at the trend, it's clearly downtrend itself. It's a clear avoid as of now.
Okay, Vodafone Idea is the next one. Mosam from Assam wants to know from a 1 to 2 month perspective, what price target can she see on the chart? She's bought at the levels of 9.87. Your view on this, Kunal?
So I would advise to keep the stop loss of the buying level itself. Targets can be 13 on Idea.
Roopchand is asking a question if you should buy ITC hotels, Indian hotels or Hindalco. Saurabh?
Indian hotels, first priority, second priority, ITC.
Okay, Eternal is the next one. Varshist from Hyderabad wants to know from a 1 to 2 year perspective, can he continue to hold the 50 shares bought at the levels of 303? Continue to hold or not? Saurabh, your view?
My view is exit.
EMS Limited is the other counter. Our viewer has bought 182 shares at 712. Saurabh, any view?
Better exit.
GMR Airports is the next one. Soumya from Chennai wants to know she wants to know she's bought at the levels of 85. Can she continue to hold? Your view on the charts, Kunal?
Absolutely, very strong counter. Trailing stop loss is 93. Targets can be 105.
Bajaj Housing, a 5-year view is what Balaji is asking. Kunal, Saurabh, let me get your view.
Good operational performance, continue to hold.
Well, that's the first round of the rapid fire, and viewers will be back with a lot more queries on the other side. Time to slip into a very short break. Stay tuned to Ask Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity. So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move.
Welcome back to Ask Profit right here on NDTV Profit. We still have Saurabh Jain with us. Now joining in Ajit Mishra, he's the SVP Research at Railway Broking. Ajit, very good morning to you and thanks so much for joining in today. Let me go across to the first query on WhatsApp now. Piyusha Kanodia has bought into Siemens at roughly about 3,270, currently incurring a loss, and he's asking if he should hold on or exit the counter. Ajit, what would you recommend for Siemens?
Yeah, good morning, Puneet. So, Puneet, it's been almost like 2-3 months now that the stock has been hovering in a very tight range. I guess on Friday they have announced numbers, and since morning we are seeing a positive uptick. 32.70, I guess that's her buying price, and for that level to come or surpass, we need a close above the long-term moving averages, which is placed around 3,200 mark. So as of now, it's a hold cause. 3,000 to 3,300 broadly is the range. And the moment we see sustainability above 3,200 mark, possibility of a breakout seems high this time. So she should definitely stay put with 30.90 as a stop loss and review her position around 3,300 mark.
Okay. All right. So that's in regards to where Siemens stands. We've got our next caller. Ramesh is calling us from Hyderabad. Ramesh, hi. A very good morning to you. How can we help you today?
Good morning. I have one query on the chemical space. I brought Aarti Industries 1,000 shares at 390. So I wanted to have a long-term view on this sector, how it will be look like. It is underperforming from last 3 years, but I wanted to know long-term view.
Okay, got your question, Ramesh. I'll take this up with Saurabh then. Saurabh, what's the view like for Aarti Industries from a long-term perspective?
See, from the it is a cyclical kind of a business, being a chemical in the chemical space. It's a very old company, and the latest quarterly numbers were not that great, and that is why the stock is still the stock price is still languishing. From the next 2-3 years perspective, it is difficult to take all, but looking at the valuation side, I think it gives quite a comfort, because the valuations have have come to the trough. So my take would be since it is a contrarian call, but I would still suggest to hold for another quarter or two, look for the management guidance.
Got the view, Saurabh, and we have discussed the chemical space a couple of times today, so that's definitely one which a lot of investors are watching out for. The next query that's coming in is on something like a JSW Infra. Now, Sai Karthik was actually writing into us from Dallas, Texas, so thanks so much, Sai, for staying up and watching our show. He's bought it at 297. Currently incurring a loss, so he's asking a 3 to 6 month view on this one, and if there's a decent pullback that's actually expected on the counter. Ajit, would you recommend something like a JSW Infra to have some more upside from these levels?
So Puneet, till September, everything was perfect, means the stock was trading with a positive bias, trading closer to the record highs, but the breakout attempt that failed, and since then we are seeing gradual drift in the stock, and now it's languishing around its long-term averages on the weekly charts. So good part is that at least we are very close to support, so we may see some bounce, some recovery, which can help the stock to inch toward, let's say, 290, 92 levels. But a decisive reversal seems unlikely, at least in the near future. The 3 to 6 months kind of a time horizon, you should utilize any rebound towards, let's say, 290, 95 zone to reduce your position, or at the same time do maintain a stop at 270 as well.
All right, so that's with regards to where JSW Infra stands. We've got our next caller. Prakrita is calling us from Bengaluru. Prakrita, hi, a very good morning to you. How can we help you today?
Hi ma'am, very good morning. So I had bought a Groww stock at around 138.5.
Okay.
The quantity is 225 on an average. So I wanted to know, I'm at a profit of 4, but I wanted to know if I should hold it, or even if I had to hold it, for how long can I hold it?
Okay, Prakriti, I got your question. And if you can try to pull the chart up since listing, what's the kind of returns that Groww has given? Saurabh, I'll come to you on this one. Everybody who's not gotten an allotment or did not even buy at the kind of, did not buy on the day of listing and missed the rally, what would your recommendation be? Up for 57% now. Now, for sure, valuations are not looking cheap for the counter. But what's the view like from a longer term perspective?
You have rightly said that the valuations are not cheap on the book to price to book value or on the multiple side. Looks expensive to me. Yes, it is. The company is growing at a rapid pace, and that is why the market is willing to give the company such valuations. I think she can hold till the company manages to beat market's expectation on the profitability on the result side, and when such thing does not come, then only she can decide to exit.
You, Saurabh, but we have another query now coming in from Vijayawada. Ravi is asking us a query on Gabriel India. Now, he's not mentioned if he's holding the counter. So let me come back to you, Saurabh, on this one. It's a counter that's done very well for its investors this year. Since the unlisted companies got merged into the listed one. At the current juncture, would you recommend buying into this one, or someone who's already holding it? What should we do with this one if you track it?
See, it is a very old company, and the space, automobile and auto ancillary is in good shape. And from the next year, 1 to 2 year perspective, the sector is expected to do well. Since it is a very old company and got re-rated after the merger of the unlisted company, I would suggest to buy the stock on declines in a staggered manner.
Got the views. And that's Saurabh's view on something like a Gabriel India, staggered manner, but 150% returns for those who are holding it or bought into it. Very interesting one. Today, stocks down today, of course, on the back of results. It is very expensive now in that sense. But another caller now, dialing in from Bengaluru. Chandrasekhar has a stock query. Chandrasekhar, very good morning to you. Welcome to Ask Profit. What's your query?
Good morning, sir. I am holding REC at the rate of 440.
Okay.
Next to you says 6-month view.
Okay, you want a 6-month view.
Exit or hold or average?
Okay, got it, Chandrasekhar. Ajit, Chandrasekhar is currently sitting at a loss of almost 3.9 lakhs. What would you recommend for REC? He's bought at 440 at 5,000 shares. So, any view?
Puneet, it's been almost 9 months now that the stock has been trading in a very tight band. There were multiple attempts of recovery and rebound where stock tried to surpass its major long-term averages around 380-85 levels. But on every attempt, we saw that the selling pressure re-emerges. Good part is, at least on the downside also, we are seeing that buying interest emerges the moment we test closer to around 350-45 levels. So it's a very tight range consolidation that we are currently seeing, and for any decisive trend, we need a close above 380-85. So as of now, he should not add to his loss-making position, but he can stay put with 345 as a stop loss. And the moment we, let's say, cross 375, then probably 420-25 is something that the stock might test. So around those levels, he can review his positions again.
Okay, all right. So that's with regards to where REC is concerned. The next question is on Rain Industries. Shweta from Hyderabad is asking this question. She's bought at an average price of 145 and 10,000 shares is what she's holding. Wants to know as to what should be the next course of action for her. On the charts, Ajit, what is it recommending? She's sitting on a loss of, by the way, 2.5 lakh rupees.
So Rain also, Mahima, it's multiple attempts of, rebound recovery after a very tight range consolidation. But now it seems more of like, distribution to me, because, the moment we started forming lower lows and lower highs, and now currently we are trading closer to 52-week lows. So all indications are in the favor that there could be further dent, let's say, or, decline towards 100 levels, in the coming days. So the ideal approach is to exit, take losses and exit from current levels, or in case if she wishes to wait and see, then her stop should be at 115.
Okay, all right. So that's with regards to where Rain Industries is concerned. The next one is an interesting one. Ram is asking this question, and this is on Restaurants Brand Asia. He's bought 3250 shares at the levels of 78. He's saying that he did taste the burger last night and it tasted good, and that's why he's saying that he can remain invested into this counter from a longer term perspective. He's saying that he doesn't mind a near term turbulence, but from a longer term perspective, can he continue to hold this counter or not? Saurabh, what's the view like?
I think the problem is with the operational on the losses on the net profit side. If you look at the latest quarter numbers, sequentially the losses have grown, which is not liked by the street. However, there was a view that maybe companies like Restaurant Brand Asia will surely do good because in India, a lot of culture is developing for going outside to the restaurants and having food. The brand is good, but yes, the company is not able to meet the investors' expectation. That is why the stock is not doing good. I think you should wait for one more quarter and look for the management guidance.
Got the view, Saurabh. So definitely, I think keep eating the burger. Wait on the stock for now, at least on Restaurant Brands Asia. It's been a very volatile counter to say the least. But we have another caller now dialing in from New Delhi. Brijesh has a stock query. Brijesh, a very good morning to you. Welcome to Ask Profit. What's your query?
Hi, good morning. So my query on the Netweb Technology, I have bought a 14 share at the price of 4,200, and the share price is already down 16%, and it's currently it is on 3,381 rupees. Okay. So can I hold this share for 1 year, or should I sold?
Got it, Brijesh. Saurabh, Netweb Technology, it's not a cheap stock by any means. Would you recommend, Brijesh, to hold it for the next 1 year to see any kind of recovery in price?
See, the market cap is close to 20,000 crore, and the company is doing revenue of 1,200 crore in the last 4 trailing quarters. On the valuation side, the stock is trading around 140 times to trailing earnings, and on the book value side, it is too expensive. My take would be that it is better. It would be better if he can get out on any bounce.
The next one is on IRB Infra. This is from Chandan Jain, who's writing us from Hubli, Karnataka. He's bought at the levels of 67 rupees, and 1,000 shares is what he has in his portfolio. Wants to know if he can continue to hold or exit right now. Ajit, what's the view like on the charts?
So my recommendation is to hold because the damage has already been done, and after this, yeah. So now the base formation around 40-45 levels is something that the stock is currently continuing with. A decisive break above 47 might trigger some decisive recovery, let's say to about 50-54 levels. But for buying price to come, it might take several months. So in case if it's okay with, let's say, 6 months to 1 year kind of time horizon, you can continue to stay put.
Okay, all right. So that's with regards to IRB Infra. In fact, viewers, we're going to do a Know Your Company on IRB Infra today at 11:30. So you can take a look at the company's fundamentals and a deep dive as to what the outlook of the company also looks like, and also, we'll also bring you a conversation with the management as well. But we've got our next caller. Venkat is calling us from Bengaluru. Venkat, hi. A very good morning to you. How can we help you today?
Mahima, very good morning to you. See, I have got a query regarding RVNL, Rail Vikas Nigam Limited, and I've been holding about 250 stock and at the rate of 452. Okay, and it went up to the level of 600, but now when it has been going down only, there is no movement at all on this stock.
Got it.
And I would like to have a view for about another 1 year or 2 years. I am a long-time holder. So I would like to have a view on one maximum 2 years.
Okay, Venkat. Got your question.
What is the outlook?
Sure. Got your question, Venkat. I'll take this up with Saurabh from a 1 to 2 year perspective. Saurabh, what he's saying is that he's kept a lot of patience with this counter, right? Still sitting on a loss of around 30,000 rupees. What should he do? Should he continue to hold for the next 2 years to see some, profits on that counter?
See, the company is good. The business is good, but if you look at on the operation side, they have posted degrowth on the net profit side. Moreover, what happened during the PSU's rally, many of the stocks went ahead in terms of their if you compare on the operation side and on the valuation side. Even after the correction, the stock is trading around 7 to 8 times to book value and above 60 times to its trailing earnings. Now, only one thing which I can say is that yes, the business is expected to pick up in the next 2-3 years, and probably it will take a while for the stock price to again see the highs it has made. So it would be a contrarian call, but still I feel the valuations are on the higher side, but you can hold.
View, Saurabh, but we have another query now coming in from Vishal Gupta. He's asking if it's the right time to buy into Ather Energy shares. Saurabh, I'm not sure if you have a view, but it's a very interesting counter in that sense because it has seen some pullback from the highs and market share has been increasing for the company in the electric two-wheeler space. Do you track this counter?
Not much, but in the two-wheeler space, I would recommend him to go with the traditional player like TVS Motor.
Ajit, anything on the charts that suggests some more upside, because we have seen that pullback? Anything on the charts that can give Vishal some perspective on this one?
Puneet, you rightly mentioned that after this phenomenal surge, it's been almost 1.5 months now that the stock has been experiencing a bit of a profit-taking correction. The good part is that again it's trying to reclaim its short-term averages. So there could be a rebound trade at least, so which can help this stock to inch toward, let's say, 710, 720 in the near future. So with stop at 620, if the view is very short-term, you can definitely consider long positions.
That's Ajit's view on Ather Energy. Definitely a counter that you need to have your focus on. But we have another caller now dialing in from Mumbai itself. Shankar has a stock query. Shankar, very good morning to you. Welcome to Ask Profit. What's your query?
Good morning, sir. Actually, I bought a Ashok Leyland at the price of 144. Okay, and quantity is 500.
Okay.
I wanted to know about the next 2-3 months update because I took for a short term only, 2-3 months.
Okay, short term view on Ashok Leyland. Got it. Ajit, let me come back to you very quickly. On the fundamentals, lot of positive momentum post quarter 2 earnings. They're increasing the bus building capacity. LCV is doing well. Growth for MHCV as well. On the charts, a 3-month view?
Puneet, that is all reflecting on charts as well. Means the stock is trading at the record highs. The kind of volumes that the stock is experiencing at the higher levels, speaks volumes about its overall strength. So definitely it should stay put. From the 3 to 6 month kind of a time horizon, I'll not be surprised that if we inch toward, let's say, 170, 75 levels. So with the closing stop at 140, it should definitely stay put.
Okay, all right. So that's with regards to where Ashok Leyland is concerned. We've got our next question, which is from Mubina, who is writing us from Kerala and holding ABFRL. 3,500 is the quantity and the buy price is 82.5, sitting on a loss of around 13,500. But Saurabh, with regards to the two twins, right, ABFRL as well as ABLBL, there is the lifestyle brands which is doing better than ABFRL, but the growth targets that the management has given for ABFRL is also quite constructive. What's the view like?
The management has always guided for the good for the ABFRL, but what I feel is that the company is always short on delivering upon the expectations. That is why the stock hasn't done well. My take would be it would be better if you can get out.
Okay, all right. We've got our next caller then. Parab is calling us from Pune. Parab, hi, a very good morning to you. How can we help you today?
Well, my question is regarding IEX. I hold 1,000 shares at the rate of 240.
Okay.
My question to a fundamental analyst, whether is he think that IEX now is heading for a business change, like from the exchange to the broker, and because of it, is there any financial changes, means their margins and their top line will get deteriorated because of this?
Okay, Parab, got your concern, and it's valid as well, and I take this up with Saurabh. Saurabh, he's sitting on a loss of around 1 lakh rupees, and his concern, though it's not confirmed yet, but what's the view like? Would you recommend him to continue to hold IEX, or should he book his losses at the moment?
I would suggest him to try to get out, because the there are a lot many players have come up in this space, and the company is not showing the growth it should show at which the valuation because at the valuation it is trading close to 11 times to book value and 30 times to trailing earning is not actually matching up with the growth the company is showing in. My take would be better to get out.
Got the view, Saurabh. We have another interesting query from Roopchand. He's asking if his view on Infosys buyback, if he should, tender his shares given the current view and the pressure that the stock is under, given that he's holding very limited, low percentage of shares that will actually be bought back, as well as the procedural issues with taxation amongst others. So, Saurabh, it is a different kind of query. Firstly, what would you recommend for Infosys, your quick view? And secondly, if he should get out right now, is it advisable to hold on for a little while or get out at the current market price?
See, first of all, our view on the IT sector is positive for the next year because we feel that maybe with the interest rates coming in, the discretionary spending will come back for the Indian IT companies, since Indian IT companies garner 60 to 70% revenue especially from the US markets. So for the big one companies like HCL, Infosys, TCS, we believe that 2026 would be a good year. With respect to the buyback, we expect that the retail shareholder may get made. It is not actually calculated, but the markets are suggesting that maybe the company will take in around 40% of the holding from the retail investor, and moreover, the promoters are also not participating. So my take is better to stick with your holding and do participate in the buyback.
Got the view, Saurabh. So definitely, Roopchand, I hope that answers your query. Another one from Sumit from Ahmedabad. He is dialing in for a stock query. Sumit, very good morning to you. What's your query?
Good morning, everyone. My query is with regards to HDFC Bank. 500 shares at 1,000 rupees, 1,000 rupees per share. And I have another RVNL Bank, 500 shares at 326.53. So what should I do with this, and what sort of return should I expect in near short term or mid term?
Got it. Sumit, unfortunately, we can only take one stock. So I'll take your query on HDFC Bank with Ajit. Ajit, he's bought it at 1,000 rupees per share. What would you recommend Sumit to do?
So Sumit, you should definitely stay put because the kind of buoyancy that we are seeing in the banking space means the sector is already at the record highs. We are seeing this momentum continuing with every passing day. No doubt the PSU pack is outperforming by big margins, but we are seeing a base formation in HDFC Bank also. So for the short-term view, the moment, let's say we cross 1,020 mark, probably 1,080, 1,100 is something that the stock might test. In a month or two. So with stop at 960, you can definitely hold your long position in HDFC Bank.
All right, we've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning to you. How can we help you today?
So I have just bought 225 shares, mostly in technologies at 257. So
okay.
I'm looking for a long term, whether I should hold this for or I should buy. I should sell it or I can add some more quantities on it.
Okay, got your question. I'll take this up with Saurabh. Then Saurabh, any view with regards to where Netweb Technologies is concerned? It's a slightly small company, 4,000 odd crores market cap.
Very small company. Basically, this company is into the chip business and marketing. Small investors do have expectation for these companies to do wonder. But simply looking on the valuation side, it looks very expensive with close to 4,400 crore market cap. My take is it is a very volatile stock in terms of stock price movement, both on the upside and on the downside. My take is better to get out.
All right, so that's with regards to where Netweb Technology is concerned. But moving on to the second rapid fire round of today's Ask Profit edition. Saurabh, as well as Ajit, you both know, try to keep your answers as short as possible. The next question is from Shubham, who's writing us from Pune and asking about Shriram Finance. He's bought 500 shares at the levels of 200. What should be the strategy? Should he partially sell and book profits? Your view on this, Ajit?
Yeah, book partial profit and hold remaining with 780 as a stop.
A 1 to 2 month view on Astral, Ajit. Today there is news from PVC price being reduced by a key customer. Your view?
Seeing correction, 1400 immediate support, so that should be the stop. Use recovery to reduce position.
Vari Energy is the next one. Arup wants to know if we can continue to hold this from a 2-year perspective. 15 shares at the levels of 3,600 is what he's holding. Your view on this, Saurabh?
Hold.
Tata Motors passenger vehicle, Ashwini from Chennai is holding at 411. Saurabh?
Convert to Tata Motor commercial vehicle.
Okay, Sun Pharma is the next one. Rajiv Jain is holding 200 shares at the levels of 1550. Long-term target on this, Saurabh?
Expect 20 to 25% return in the next 1.5 years.
Sign DLM is the other one. Our viewer P. Srinivas Rao has bought at 445. Ajit?
Hold.
Okay, Tata Elxsi is the next one. Suman from Hyderabad wants to know if she can average or continue to hold from a slightly long-term perspective. On the charts, Ajit?
Avoid adding, continue to hold.
Aarti Industries, we have actually answered Aarti Industries. BL, a long-term view for the next 2 to 3 years. Saurabh?
Hold.
Balrampur Chini Mills for the next 6 months. Is this the right time to make an entry? Neha from Bengaluru is asking this. Ajit, your view on the charts?
Buy with 425 as a stop.
JK Cement, a long-term view. Our viewer has bought it at 7,158. Hold or sell, Saurabh?
Hold for next 2-3 years.
Cochin Shipyard is the next one. From a 6 months perspective, can the person make an entry? We don't have the name. But Ajit, your view on the charts?
1620 stop with 1980 to 2000 as the immediate target zone.
Varun Beverages, Ajit, a 2 to 3 month view. Our viewer has bought 100 shares at 465.
Consolidation likely, wait for a breakout above 500 to re-enter.
Well, that's the end of the second round of the rapid fire, Ajit, as well as Saurabh. We've answered 53 queries today, so it's been a phenomenal day here. Thanks so much to both of you for joining in. But that's all the time that we have on this edition of Ask Profit.
Is that a record?
It might be a record. It might be a record. You might be able to tell me actually if it's a record.
55 was the life, I'm not wrong, but we're nearing to that.
We're nearing to that. So come back tomorrow. We'll try to aim 55 queries on a Tuesday. Thanks so much for joining in. KYC comes up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakaria, and today the company in focus would be your IRB Infra. Of course, stock has been buzzing on the face of its Q2 earnings as well as its important order win. But there are certain questions which we need to ask at why this company is there in KYC.
Right.
The first question, of course, Anushi, is decoding their deal. That's around roughly almost 10,000 crore, you could say. Order win for NHAI. Now, how much does it actually boost its assets overall in its InvIT? That will also something which you'll be looking out for. Another important reason for IRB in focus being is NHAI ordering. Will that pick up after a muted H1, let's say? Will this actually pick up, especially in various projects, right?
And this has been going on for a couple of quarters, you know, where NHAI awarding has been on the weaker side, which has impacted other infra players as well. So, very important question to
Exactly.
ask.
The numbers are also weak for the infra players. Third question is debt reduction and asset monetization. What's the strategy ahead? And for an infra heavy player, this makes sense. And they are having an InvIT also to give a perspective to our viewers that this is a way to do the debt reduction.
Right.
And of course, the last point, the main question is, will this momentum of strong collection continue? It has been a single-digit growth, but decent overall if you look at the last 3 to 5 odd years. But Anushi, let's just break the business model. What's the company all about?
Of course. So, if we talk about IRB Infra, it's one of the prominent names that we are seeing in the infrastructure space. It's a developer in the road and highway segment particularly. While the total kilometers of land, it has an asset base of over 80,000 crore. This is across pan India that we are seeing its presence, currently about 12 states or so. And this covers about 21 years of weighted average residual concession life if we take all of its projects in consideration. With them having about a 10% of a market share of pan India when it comes to the overall toll revenue picture which is there. Now, you know, with this addition of the 9,200 crore plus of the project that we're seeing, their market share in the TOT segments, that is increased to about 42% with this itself.
So, Anushi, this is the recent order which you're talking about,
yes,
right?
This is
so
just
this
the
becomes
one.
very massive, 42%.
This becomes absolutely massive, considering that they had about, if I'm not mistaken, about a 30%, 33% or also market share before in this particular segment. So an important development for the company in this regards. But other than that also, if we just look at its operations, it's into construction, tolling, operating, maintaining 19,000 lane kilometers pan India. Now this includes about 18 BOT projects. Along with that, this includes 5 TOT projects. BOT is build, operate and transfer. TOT is toll, operate and transfer, and 4 HAM projects. That's hybrid annuity model.
Yes.
Exactly. So its presence is across these 3 that we are looking at. Of course, BOT and TOT would take precedence now with a huge pipeline of opportunity which is there, roughly at the size of 55,000 crore or so, which is expected to start from this December itself. But apart from that, if you look at its key segment also, in terms of how they've distributed their overall total lane kilometer, the parent company currently handles about 2,456 of lane kilometer, but it's the InvITs wherein the focus is now there. Private InvITs up to 10,567 kilometer. A majority of chunk is what we are seeing in this particular regard, and public InvIT about 2,400 crore.
Yes, and it's pretty interesting for our viewers that if you are wondering why this number is so high. So basically in a private InvIT, generally what happens is asset monetization happens, and this gets packaged in, it's sold to larger players, the PEs and the VCs.
Right.
So that's why you're seeing that this number is looking very high.
Right. So considering all of these projects which are there, if you take that total order book in consideration, that roughly stands at about 32,000 kilometer or so. And this is a kind of growth that we've seen from 2016 to 2025. almost double the value is what we are seeing in terms of where the presence has been. So this brings the total order book to about 32,000 crore. This includes O&M, that's about 32,500 crore, operation and maintenance. With operation and maintenance, they have a annuity check in terms of this income coming in years particular, while if you look at the EPC side of it, about 1,500 crore is the kind of contribution that we are seeing. So this is essentially how the company's business model operates.
Well, that's a pretty interesting one, Anushi, but let's get back to our format of our show. How do we give the ratings? What are the parameters for KYC? And first and foremost is we take in the income statement, balance sheet, cash flow. These are the three holy grail for financial statements. Of course, return ratios are very important. If you're an investor, why should you invest in this stock? Includes shareholding, street cred, which is nothing but the stock movement for short-term, medium-term and long-term investors, and valuation. That's very important when we compare them with peers. And last but not the least is the outlook going ahead. Based on that, we give the numbers. But Anushi, let's start with income statement. What are you gathering?
So in terms of income statement, if you are seeing, considering how the stock has done over the last 3 fiscals, we are looking at an average growth of about 9%. This is the compounded annual growth that we are seeing. So this is with regards to about 3% growth in FY25, which had been more on the muted side, considering the order book, which is also in picture. But in terms of margins and net profit, a higher growth trajectory is what we are looking at. About 23% plus of our profit CAGR, and with this addition of new asset coming in place now, that was going to aid their O&M income as well as we speak forward. So in the Q2 also, if you look at the numbers, they reported about a 10% of a revenue growth, while margins inched upwards to 53%, while net profits are about a 41%. So overall, considering the 3-year trajectory and how the first half has panned out, we've given this a thumbs up.
Well, that's pretty interesting, but balance sheet numbers also, Anushi, we checked the numbers and we added the H1 FY26 numbers as well. There is a lot of strength coming in. Look at the borrowing, that has come down for H1 FY26, and that's a very major positive thing when you look at an infra company. Also, overall, you look at the cash and bank balance, that has actually come down from 3,446 crore to almost 1,366 crore rupees, but the H1 numbers overall has been strong. If you judge a balance sheet, and overall it's a thumbs up from my side.
Right. If you are looking at the cash flow now, cash flow from operations, we are looking at a fluctuation in terms of your 24-25 figures with regards to operating cash flows which are there. And this is on account of receivables that we are seeing while there's this fluctuation figure that we are seeing. Of course, with a lot of these infrastructure companies with higher government contribution as well, there had been issues regarding to their payments and about their payments which were made, which impacted their receivables. But the trajectory forward is something that we'll see. But considering the overall net cash flow of FY25, that was on the positive side compared to FY24. So considering this, we've given it a neutral rating.
That's pretty interesting on that, but return ratios is what matters, Anushi. When an investor comes in, what's the ROC, what's the ROE? These are ratios called return on capital employed, return on equity, not much to offer. If we don't get something between 15 to 20% then of course there are concerns about it. And you see single digit numbers coming in for both ROC and ROE, nothing much to look at here. So it would be a thumbs down from my side.
Now, if you look at the shareholding pattern of the company, it's interesting how we are seeing that over the course of these last few years, it has majorly remained on the stable side. Promoters holding about 30% of stake in this last few quarters or so. This is a trend that we've been seeing from June 24 to September 25, while there was some dilution which happened between March 24 to June 24, but overall promoter holding has remained stable, while FIIs and DIIs mix also. DIIs have seen a pickup of around 2% from the last 2 quarters or so, while FIIs majorly in the range of 42 to 44% is what we are looking at. So consistent pattern is what we are looking at, given that we've given it a neutral rating for now.
Well, that's pretty interesting on that, but let's see the street trade, how the stock has actually performed. 1 month it's been flat, 6 months it's been on the negative side, it's down 16%, year to date it's down 25%. You see the NHI orderings have actually come down, and of course execution also matters if you're coming from a monsoon related season as well. See, the 5-year earning has been strong for 279% gains, but if it's a short term or even a positional investor who has come in. We see there is nothing in for that investor. From that basis, I would be, kind of giving this entire rating right now currently, you could say a thumbs down coming in from here.
Sharad, if you look at the valuation picture now, so if you just take firstly the PE in consideration, here
so for a big company we take both, right? PE as well as EV.
Yeah, what we've done basically is that since they also have InvITs, they have a huge asset base as well. Along with that, even in terms of the monetization strategies which go on, we've also considered there's a lot of fluctuation in terms of debt structure which is there. We've considered both the price multiple as well as where the EV to EBITDA stands for both of these. So IRB, if you take it in account with the other three peers which are there, it's majorly in line as what we are seeing, about 18 times forward multiple over there. So nothing much to talk about it with that regards. Even if you look at the EV to EBITDA multiple, while we are looking at something like Ashok and Dilip Bilcon at relatively cheaper valuations, do note that their growth has also been on the muted side since these last couple of quarters. While for IRB and PNC, the mix is something between 10x to 14x. So considering all of these, we've given this one a neutral rating.
Well, that's pretty interesting, but let's focus on the last but not the least, outlook, how the company's outlook has shaped up. And you look at it, they just got a 10,000 crore almost order coming from NHI, and this is a long 20-year order. Now what happens is ISB's trust portfolio, that's expected to increase 20% to almost 65,000 odd crore rupees. Toll collections are expected to remain strong. That's what the commentary has been coming in. But the most important project which the company is undertaking, that's name is Ganga Expressway project. Their exposure, their timelines would be something which we'll be looking out for, and if that comes before the timelines, then it will be very important. Asset monetization, that's something which Anushi had mentioned earlier. That's a very important strategic outlook going ahead. So overall, net the outlook remains strong. So I'll be giving a thumbs up for the company, and just because the pricing, the numbers have been coming down, so this makes it a compelling investment case when it comes to the valuation. But let's just revise the entire ratings, Anushi, which we have given for this company in our segment KYC. Income statement, balance sheet has been on strength. We have given a plus to both of them. Cash flow largely neutral. It's an infra company, but return ratios, that is questionable, and that's why a thumbs down coming in. Shareholding neutral, street kid not much happening, valuations still attractive, but even Stevens, but the outlook, that remains solid, +1. So overall, we are giving the company 4.5 out of 8. It's net, you could say a neutral rating as per our average numbers.
Yeah, in fact, this is the rating that we've got, and considering the outlook for FY26 and this new project win also, we also spoke to the management, that's Anil Yadav, CEO, Business Development and Investment. I spoke to him firstly about the order win which was there of this 9,270 crore of project involving the Lucknow Ayodhya section. This is an important project that they've received. How that would enhance their overall portfolio, their overall share in TOT segment. Along with that, what's the kind of outlook that they're building with this addition and even the H1 picture in place? I had just a conversation with him, so do listen into that as well.
So with respect to this is the TOT project which we have bagged. It is having a two section. One is from Lucknow to Ayodhya going up to Gorakhpur, and second is the part of stretch between Lucknow and Varanasi. So as you are aware that this is the religious places. So this corridor is covered by the various religious places in the state of UP.
So just want to understand, you had outlined about 55,000 crore worth of opportunities in the con call. Was this a part of this project? Are there any more such projects in progress that we are looking at? If you can give us perspective in terms of the order pipeline opportunity that you're seeing, where does this take your current order book at, and the subsequent increase in your O&M business as well as your market share?
I think before moving to the opportunity, I will just touch upon certain aspect of this order itself. So now this order is increasing our asset base from almost 80,000 crores to 90,000 crores plus. We are reaching closer to the 1 lakh crores mark in terms of the asset size. and this is expected to increase the toll revenue of the group by around 8 to 10%. And as our growth, if you look at the past quarters, the toll revenue growth was around 10 to 11%. We after addition of this asset, we expect around 18 to 20% growth in terms of the toll overall toll revenue. And as you rightly mentioned, this has also increased our putting in the TOT space. We have 42% market share as far as TOT is concerned. And this project is we post the financial closure, post the payment of the payment to the NHI. Project is expected to start by end of this financial year. So from next full financial year, revenue will be coming for the next full financial year. Now, in terms of the strategic location and the importance, because this covers the prominent tourist places in the UP, this has the strategic importance as well. Now, coming to the opportunities which you have discussed, we have around 25 to 30,000 crores kind of worth of TOT opportunity, which will get bidded out before end of the December. So this is the near-term opportunity which will be available, and we will be participating on that. Apart from that, there is almost 28 to 30,000 crores opportunity on the BOT side as well.
Right. So, Mr. Yadav, you just mentioned that this is expected to close by around this financial year. So, what's the kind of incremental growth that you see in terms of revenue by the addition of this project, and for what period of time as well?
So I think if you look at as it will probably start by end of the financial year. So from next financial year, we can look at the revenue growth coming from this asset will be in range of 8 to 10%. So since we typically the toll existing toll business will also grow in the range of 9 to 10%. With this addition, that the growth in the toll revenue for next financial year is expected to around 18 to 20%.
Okay, so 18 to 20% is the kind of growth that we expect from next year onwards. Understood. Now, coming to the second quarter results, you've reported a decent set of growth in terms of where the top line is concerned, 10% growth there. Margins have expanded to 53% versus 48%, while net profit also saw a significant uptick is what we are seeing. However, if you look at the construction business, that's about a 18% of a downtick. So just want to get your perspective in terms of FY26, if you have any targets in hand for the construction business, as well as your guidance for FY26, FY27, considering that, while you have seen this particular big order win, the NHI ordering has continued to remain muted, just like the last couple of quarters. So I want to get your understanding on all of these aspects.
Yeah, I think in terms of the second quarter, it was also impacted by the severe monsoon and extended monsoon. And secondly, if you look at the business for IRB, 85-90% business valuation comes from the asset business. With this asset addition of TOT 17, I think 90-95% will be coming from the asset business. We don't do any third-party EPC. Largely, our EPC is restricted to the O&M of the two units which we have formed, and plus O&M of the IRB asset. And in terms of EPC, I think with respect to the O&M order book, we have order book of almost 30,000 plus kind of crores, which will be executed over the period of 10 to 12 years. So considering a good pipeline available for 10 to 12 years, and that is the steady state order book and also a stable margin. So going forward, definitely we'll be eyeing for the BOT opportunity whenever viable project comes. But our largely focus will be on the asset business, which comes in form of TOT. And in terms of the EPC, it will be gradually shift more towards the O&M side than the actual execution of the EPC job.
So just considering all of these aspects, what's the kind of number that you have in mind in terms of the top line growth, in terms of margins? Where would that stand at?
So I think the asset business, since this quarter the EPC business was on a lower side, if you have seen a significant increase in the EBITDA margin by 500 to 600 basis point compared to the corresponding quarter of the last year. So asset business has 85-88% EBITDA margin. So as we will be shifting more revenue will be coming from the asset side, automatically there will be improvement in the EBITDA margin of the company. And as we will move closer to the year end for FY27, we can provide towards the end of towards the end of this financial year. Having said that, for toll business, that I have already discussed that with the current asset and the asset which we have bagged, the toll growth expected around 18 to 20%.
Okay, got it. So 18 to 20% is the number that we should be looking forward to. Now, coming to the order book, you've given us an outlook in terms of the breakup between the kind of pipeline opportunity that is there between BOT and the TOT segments. Just want to also understand how execution of this 32,000 crore of existing order book is going to pan out for FY26 as well as FY27 as well. And along with that, what's the kind of outlook that you're building in terms of new orders which are there? If you can help with the timelines or so.
So I think in terms of the existing order book, roughly 4,500 crores is the executable order book for next 2 years. That it largely includes the O&M order book. And as we will back the new project, whether it's a TOT or BOT, there will be an order inflow which will be coming in. So I think that will be additionally contributing to this EPC order book. And as I was discussing that we have roughly 5 to 6 TOT project which is up for bidding till December. We will be eyeing for those TOT project as well. And there is around 28 to 30,000 crores of BOT opportunity. We will be looking at on the basis of the viability. We will be bidding for those projects as well.
Also, looking at, you've talked about O&M, there's been a lot of emphasis from this segment as well. You're eyeing for 50% of a mix as well versus the current 25% to 30%, if I'm not wrong, if that's the correct number, which is there currently. So just want to understand between the O&M business and the EPC, which is there, how do margins differ across both of these?
So I think that is the very good question. In terms of the O&M, gradually we are from 8 to 10% kind of O&M execution, we have moved to around 25 to 30% kind of O&M execution. And we have aim in next couple of years, we'll be reaching almost 50-60% as a O&M execution. Good thing about O&M, apart from the healthy margin, O&M order book have a consistent visibility because typically the life of the project is around 20-25 years. So automatically you will have a visibility for 25-30 years in terms of the O&M order book. As against the EPC order book where you have only visibility for the 2 years. And if there is lower awarding in next 2 years, then automatically your EPC order book will vanish. So comparatively, O&M book has a healthy margin and also good visibility.
Okay, Mr. Yadav, let me also talk about the InvITs which are there. Just a quarter ago, we had discussed about the sale of the 3 SPVs which are there. This was from private InvIT to public InvIT that we'd seen, which released some capital as well. You also had a QIP launch of around 3,000 crore, which was later upsized as well. These are all, towards these BOT and TOT opportunities that we are seeing along with the debt picture as well. So just want to get an outlook in terms of the InvITs as well. What's the kind of asset monetization strategy that we are looking at, and how would that aid in financials in terms of where your debt structure is currently?
So I think if you look at IRB will be today lowest debt to equity ratio. We have net debt to equity 0.6:1. And the group always aims for that, not increasing the leverage position. And as you rightly mentioned, we have monetized 3 of the asset and we have got a equity release of close to 5,000 crores. Now that equity release will be used for the upcoming opportunity. We have formulated one strategy, that is the bid, execute, stabilize and transfer. That is best strategy for the IRB. And on that basis, we will be bidding for the project, executing those, stabilizing. Once the revenue is stabilized, we will sell it to the public InvIT. And by that count, we will be freeing up the liquidity, and that liquidity will be used for the bid, will be used for as a growth capital for upcoming opportunity. So I think going forward, the focus will remain on that line itself, and we will be consistently monetizing the asset and growing our portfolio.
Okay, well, thank you so much, Mr. Yadav. Yeah, please go ahead.
One thing to add, if you look at the three assets which we have transferred, was around 8,500 crores kind of EV. And the asset which we are adding is close to 10,000 crores kind of EV. And the 5,000 crores of equity which is released, that can take, with a 70-30 debt equity, that can take more than 15,000 crores worth of project in terms of the future opportunity available.
That's pretty interesting. The management are speaking about their key order wins and also their asset monetization plans. But during the entire show, Anushi, the KYC segment, let's just pick up all the three main takeaways which we have taken during our conversation. First one is, of course, the new order win. That's expected to increase the asset base size to 90,000 odd crore
and
rupees.
eventually moving to 1 lakh crore as well, right?
Wow, that's a very big number coming in. Might be one of the largest players actually coming in. Also, they're expecting 18 to 20% growth in toll revenue with the new project addition. So that's a significant up move, right? For the toll collections, what we are seeing. Now, if this also comes in, that's a significant top line addition coming in.
Yeah,
and lastly,
it's a big project that we are seeing, about 9,200 crore size. And this is going to add revenues from next year onwards. About 8 to 10% is the kind of growth that they're seeing from just this one project itself. So even that is a big opportunity that they're getting from this
that means it's going to be a waterfall year, FY27. That's pretty interesting for IRB Infra, and that's why we had given the outlook also 1 and overall KYC rating at 4.5 out of 8. This is it. Thank you very much for tuning on to KYC. Stay tuned to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome. You've joined us on Markets at 12. I'm Nisha Podar. Straight look at the market. Well, Nifty 50 movement today has been muted. It's a very tight range in a very small band that the Nifty has moved today. But there are heavy hitters when we talk about the contributors and the components of Nifty 50. And let's take a look at some of the ones which are really performing well in trade. The types of Kotak Mahindra Bank, Bharti Airtel, ICICI Bank, M&M, all of them are doing well and contributing well. In fact, take a look at Bank Nifty. That is clearly showing an outperformance to the market. So let's take a look at that. And otherwise, there have been many aspects that the market has been reacting to. When I look at some of the components, Adani shares, which had shown great momentum in the week gone past, today are seeing some bit of profit taking. Adani Enterprises is down 3% in trade. Asian Paints had come out with its results. It's showing a muted growth in muted kind of a trading session. Axis Bank over 1%. So it's a day of the banks. In fact, whatever contribution is coming in for Nifty 50, a large part of it can be owed to Bharti Airtel and the financial space at the current moment. When we take a look at some of the other components as well in the market, it's Groww. Take a look at that. It's a new kid on the block and new company that has been listed. And let's take a stock check of all those components which have been coming to the market, especially from the new age space. So that growth seen in Billionaire's Garage is also something to watch out for. All right, when we talk about the earnings momentum as well as the stock impact because of that, let's take a look at Pace Digitech, which reported, remember, a Q2 solid growth in terms of revenue of 37% on a YOY basis, which was driven mostly because of their energy part of the business, which grew by 4.8%. We are joined by Mr. Venugopal Rao, Medi Shetty, who's joining us now to give us more details. He's the chairman and managing director of Pace Digitech. Hi, sir. Good to have you on NDTV Profit. My first question to you, there is a huge divergence between your two businesses when we talk about the telecom business and the other is the energy business. You are improving your energy component in your overall revenue while the telecom space has been degrowing. Can you give us a snapshot of what really transpired in this particular quarter and how is it looking in the present quarter?
Yeah. See, yes, our focus has been on this telecom and energy sectors.
Yes.
And energy, we are doing extremely well even in the Q2. We have booked very good orders for the energy, like from the SECI, the Solar Energy Corporation of India. We got about 1,159 crores order, and there is another big order which we'll be announcing today. Even in the telecom, we are doing well, but for the reason that last year It was more of a supply of the, because in telecom also we are doing large turnkey projects. What happens in turnkey project is that, in the year, it's about 2 years project. Now, year one, we supply the material so the top line grows much faster. Whereas the year two, which we are into now, we are doing the execution part of it, which is more of services. So that is where the numbers look slightly lower than the last year. But there is no order booking. Even Tata, we got one order for telecom, and some more orders are also in the pipeline. So our focus, as I said, energy, we are growing much faster. At the same time, telecom, the way markets are growing, we are also trying to book the orders in telecom as well. But then telecom doesn't grow the way which we are growing in the energy sector. So that is the market scenario.
Right. So the base of energy space of your business is also small, and therefore the percentage rise also is much higher, Mr. Medichetti. Now, I want to understand, you spoke about the telecom business order book, which you are trying to capture. Can you give us a sense of the status of the order book?
So we have about around 3,000 crores of orders we have on the telecom, and about 7,000 crores of orders booked we have for the energy sector, and we are going to grow further till March. We have a good pipeline, a strong pipeline rather we have. And on the energy sector, to just give you the inputs that this is the first year of energy business for us. Now this year more of we have set up the factory, we got the order book. Now the execution is underway. So the results will be seen on the balance sheet majorly for the next financial year. This year it will be slightly, a very small portion will be added to the balance sheet, that too in the Q4 only. But whereas the strong numbers will be seen, or it will be reflecting on the balance sheet of FY27, all these orders that we have booked will be converted into the billing in the next year for sure on the energy side.
Right. On a YOY basis, you have seen a degrowth of 58% when it comes to the telecom space. I want to understand a little bit on, you said that we have booked the order and it will show results in the next financial year. I wanted to understand for this particular financial year, how much more decline is to be estimated when we talk about the telecom business and your order book at the current moment, giving a comparison on a YOY basis.
Yeah, so no, we are not reducing our for the Q3, Q4 is going to be better, and the overall year on year, if you see for the FY26 to FY27, we are going to grow as per our commitments given to our investors, and we are well on the target. And also you should see the strong, our PAT is strong, the 11 to 12% we are still maintaining the PAT, and that percentage remains same for the Q3, Q4 also.
All right. So the guidance that is given, you're on track for that. But when we shift focus to your energy business now, and that has grown at a tremendous pace, 4.8 times. How much of this growth is really recurring versus the tender driven versus the one-time execution?
This is a large business and it is just booming in India, and we are in the front run. We are the front runners, I must say. And our factory was inaugurated about 4 months back, and there are a lot of tenders that have been published. So our pipeline is quite strong. We are going to see much more orders coming in, and these are all about 15 months to 18 months execution timelines. So we are well on the target, and for executing this energy business, as I mentioned to you, it will be seen in a full-blown way on the FY27.
All right, FY27 will show you much better, performance when it comes to the energy business which we are building. But how about the competition at this particular point? In this battery storage space, a lot of competitors are really entering. Vis-a-vis that, what is going to be your competitive strength and also the medium-term growth target, if you can put a number to that?
Yes, the competition is there, but that's part of the business. We are quite aware of it. But the advantage we have is that we are a backward integrator. We do the manufacturing of the major products which contribute to about 70% of this business. So that means if the project value is about 1,000 crores, almost 70% of the material goes from our factory, which is a good situation for us. So that backward integration, I would say today, as we stand today, we are the only company having this much capacity in India. That was declared by the Honorable Minister when it was inaugurated. And people are building the factories, but that will certainly take about 2 more years. And we do have that advantage of time, and we are building up on that. And we are also adding the second, the manufacturing line, which is equal to the first one, and that would be also ready by next June. So we are building the capacity by seeing the demand, and to meet the competition, since we are the backward integrator, fully backward integration facilities we have. So that is going to help us in our one, winning the projects, two, maintaining our PAT as well.
Right, and also just your final outlook on the way you are going about in both these sectors. Is the contribution from the energy space, energy business going to improve, and how is the revenue mix expected 1 year down the line?
Yeah, I think the energy business would certainly take over the telecom business as per our estimates, because that numbers are also visible. Like today, the total order book 70% is contributed by the energy, that means it's taking over the energy, the telecom business. As I mentioned, the execution would start. Already started some for one project, and other projects also will be starting. So as I mentioned, it will be seen on the balance sheet for FY27 right from the Q1 onwards. But having said that, this Q3, Q4, some numbers are going to be reflected on the energy business also. But the full-blown numbers will be seen on the FY27 balance sheet right from the Q1.
All right. Thank you, Mr. Mehdi Shetty, for joining us with your view and also on the company's performance and for giving us clarity on the impact on the telecom business of yours. Thank you so much for joining us. The stock is under pressure after the results today, almost 4% down in trade. All right, shifting gears then, remember that we have come to the end of the earnings season. As it wraps up, our colleague Sharad is right here to give us details on how especially the Nifty 50 earnings panned out and the overall scenario for this particular quarter. Sharad, take it away.
This is a pretty interesting quarter, and we expected that this would be a weaker quarter, but there has been a significant up move when the numbers, if you talk about, but there are roughly 51 companies. You must be wondering why 51 companies is there in this list, because Tata Motors, PV and CV, both of them are there. Earnings beat 21 earnings over here. Earnings in line largely 20. That means 41 earnings. More than 80% earnings have been either beat or in line, and that's a significant improvement for Q2. Of course, the entire GST benefits also were not factored in. And let's look at the stocks. Which are the stocks which have done really well? Which are the important beats? So first and foremost is Asian Paints. A very strong turnaround quarter coming in. Volume recovery was also good, both decorative segment and also the margin improvement we saw. Bharti Airtel, the good subscriber addition coming in, and ARPU growth, that was also something which the street was liking. Hindalco, the EBITDA numbers went up, and this is because of better aluminium spreads coming in from the upstream. And M&M, strong performance coming in volume growth, be it the tractors or even the cars. Looking at Sun Pharma, it was expected that this would be a weaker quarter, but the company withheld the challenge which was coming from the US tariff, and the growth drivers are intact. We spoke about the top 5 beats, but let's see the top 5 misses. And of course, Axis Bank comes to this picture. A very big asset provisioning was undertaken, and that impacted the numbers in this quarter. While Coal India, as it was known that the volume growth would be impacted because of a subdued power demand. ITC, the top line numbers were not very good, especially because of agri-business being hit. And also, if you look at trend, there was a significant downtick in that. Of course, a high valuation stock. The revenue growth was 17%, but way below the guidance range of 20 to 25%, and that's why the stock took a hitting. And Eternal Food Delivery numbers were marginally below expectations, but the quick commerce inventory business model change was there, and because of that, the numbers were also impacted. And that's the main reason why I have chosen these 10 stocks, which were the key significant beats and misses for the second quarter.
All right, Sharad, thanks so much for giving us all those important details. And we also spoke to Gurmeet Chadda of Complete Circle about the earnings and the quarter gone by. Take a listen.
The IT companies had no shocks right? They actually either in line or actually delivered a little better. So I think HCL did much better. Midcap IT, Persistent, Coforge, even KPIT, despite all the issues with auto, especially in Europe and some of the key accounts they manage, actually delivered a very steady set. So my sense is even IT could be a bit of a dark horse selectively, as it's completely under-owned. And I think banks can come back. I think with inflation being what it is, you will possibly see a rate cut. I think we missed out in October, in my view, personal view, humble view. I think in December you'll see another rate cut. And I think even banks, which are a large part of the Nifty, should start pitching in. HDFC has already now spoken of growing faster than industry. SBI has spoken about 12-13% credit growth. Now that's auguring well for me with whatever little I'm seeing.
All right, so that was the view from Gurmeet Chadda, but let's shift focus and shift gears to the auto space. And remember that Motown is really split when we talk about the upcoming CAFE 3 fuel efficiency norms. In fact, let's take it straight across to Danish, who's been tracking this very closely. Tell us, Danish.
Well, you very correctly said that the auto industry is completely split over the CAFE 3 norms. Well, the CAFE 3 norms are at the draft stage at the moment, and in September end, BEE, which is the Bureau of Energy Efficiency, they had floated these draft norms. Over here, the industry is divided on the fact that small cars are getting a weight-based exemption, and for the first time ever, as far as these CAFE norms are concerned, the government came out with the provision of giving relief as per the weight of the car. So as per the proposal, small cars which weigh less than 909 kg and have less than 1200 engine capacity, they will be getting some kind of more discount as far as CO2 emission norms are concerned. Because of this, the auto industry is completely unhappy, and a few days back we saw Mr. R.C. Bhargava, who is the chairman of Maruti Suzuki. He said that the current CAFE norms are not good for the small cars, and hence the CAFE norms should not be there at all, and it is favoring the bigger cars. But on the other hand, Mr. Shailesh Chandra, who is the MD and CEO of Tata Motors Passenger Vehicles, he is clearly of the view that no concession should be given on any type of the vehicle, and he feels that if the government goes ahead with the weight-based exemption, then the cars in India will not be that safe, as then this might force automakers to probably reduce the weight of the car, and hence we are seeing that the industry is completely split over this. Besides this, there is another concession for hybrid as well as flex fuel engine cars, so because of which the EV industry is completely unhappy with the overall CAFE norm. So all in all, if we see SIAM, which is the Association for India's Auto Manufacturing Industry, they have already given their viewpoints to BEE, and they have clearly informed them that the auto industry is split right now, and it looks like that the government will have to take a final call on these norms as far as these CAFE 3 norms are concerned.
All right, so that debate is really hotting up. But Danish, stay on. The ED sources also tell you that Anil Ambani skips the ED summons for the second time. Take us through the details.
Well, that's correct. Mr. Anil Ambani, he was supposed to appear in front of the ED today. He was supposed to reach at 11 a.m. But we are well past that time. And for the second time in a row, Mr. Anil Ambani has skipped his appearance before the Enforcement Directorate. Even in the previous hearing, he had requested that if he can appear virtually, but ED did not allow that. And then from Friday, that summon was, the date of the summon was changed, and he was supposed to be produced in front of ED on today. But if we look at this matter, this is a 15-year-old FEMA violation matter, and Mr. Anil Ambani is also being quizzed over about the whereabouts of his company, and moreover, this one of the facts that ED has really investigated is the fact that Anil Ambani's company, they had been awarded a contract on the Jaipur highway, and the ED found out that at least 40 crore money was siphoned off to Mauritius and to Dubai, and the ED found out that this brings out to a larger conspiracy which talks about around 600 crores in Hawala money. So this is why Mr. Anil Ambani was called for questioning in the ED at the ED office today, and he did not turn up, and we'll have to see that when the next summon will be furnished by the ED to Anil Ambani.
Right. Thank you so much, Danish, for getting us all those exclusive information. So that's coming in from the ED sources. All right, let's take it straight across to the CII summit, where the SEBI chairperson, Tuhin Kanta Pandey, is speaking.
Mechanism in a market after
We have also undertaken important steps to improve the experience of issuers. The rationalization of minimum public offer scale-based thresholds that allows companies with substantial market value to achieve public float requirements through a gradual, orderly process instead of rushing to dilute ownership. Enabling founders to retain certain ESOPs post-listing measures that the alignment of incentives remains intact while at the same time maintaining transparency and fairness. Similarly, expanding the scope of electronic book provider platforms to include REITs and InvITs discovery in these fast-growing market segments, which are now playing a central role in financing India's. By lowering the threshold for mandatory electronic, we have improved transparency in price formation in the corporate debt market. A market can deepen only when both supply, whether it's new equity, debt, and other issuances, by investors, evolve in a balanced manner. In recent years, efforts have been made to expand participation from smaller towns and revised distributor incentive structures now encourage onboarding of first-time investors from B30 cities and aim to increase women investors in the mutual market development is financial inclusion of a profound kind. But the investor inclusion is meaningful only when it is accompanied by trust in the system. For this reason, we have introduced reforms that are increasingly focused on transparency in disclosures, accountability, and
all right, so that was the SEBI chairperson Tuhin Kanta Pandey talking about the importance of the markets. Well, let's take it across to one very important commentary really coming in. IPOs are increasingly becoming the exit route for early investors, warns the chief economic advisor of the country, Ananta Nageshwaran. He calls for deeper bond markets in India to drive the real long-term growth. Take a listen.
Our capital markets too must evolve not just in scale but in purpose. India's equity markets have grown impressively, but initial public offerings have increasingly become exit vehicles for early investors rather than mechanisms for raising long-term capital. This undermines the spirit of public markets. India cannot rely predominantly on bank credit for long horizon financing. A deep and reliable bond market is a strategic necessity, particularly for financing long-term national objectives. Insurance and pension funds, whose horizons naturally align with long-term investments, must play a larger role. However, the edifice of the bond market will be built on the foundations of trust and transparency, to which corporate leadership must commit on a durable and demonstrable basis.
All right, now remember that Tata Motors passenger vehicle segment has really reported a sharp jump in the second quarter financial results. Well, the management says that the second half of this financial year will even beat the performance in the first half.
The guidance there, where we believe now with production fully stabilizing in November, the whole of month of October has been impacted. To that extent, there will be an impact in Q3. But here onwards, we should expect to see things picking up. So we expect H2, therefore, to be better than H1 as far as JLR is concerned.
All right, so there were very positive commentary coming in from Tata Motors management. Let me take it across to my colleague Puneet, who tracks this sector very, very closely. Puneet, what are brokerages saying about Tata Motors and how are they assessing the growth path?
Well, it's definitely something that was much worse than expected in terms of JLR and its performance. In this quarter, they've actually come out and cut its guidance for the EBIT range to just be 0 to 2% versus 5 to 7%, and that's what something like a JP Morgan has also said. They've highlighted that they have a target price of 385 with a neutral rating, but the guidance seems, the guidance cut essentially seems realistic. They've also highlighted that the margin delivery in the India car business, while was good, the JLR performance was much worse than they had expected. Essentially, something like a Jefferies also highlighted that view. They have actually a steeper cut in target price to 300 rupees per share, and they highlighted one key point that they're seeing multiple headwinds for the Jaguar and Land Rover business going forward, including the increased competition as well as the consumption tax in China, so amongst other key factors that are having a negative impact on earnings as well as the demand momentum going forward. So these are the two key views. Stocks down almost 4.5% on the back of the cut from JLR as well as a weaker operational performance in Q2.
All right, thanks so much, Puneet, for getting us all those important details. Let's shift focus on Dixon Technologies. That particular counter is up over 1%, where the management says that the company's joint venture with Longcheer will become operational in the next 4 months, which, remember, will lead to enhanced capability as well as capacity expansion.
Competitive intensity has gone up, but we continue to be the leader across the various EMS players in India. We continue to have the largest share or the lion's share of all the large brands. And I think so over the last couple of years, we have been able to stitch some good partnerships, like partnership with Longcheer, which is a large ODM. So once that JV is operational in the next 4 to 5 months from April onwards next financial year, I think so we will be able to pull in more volumes in that JV. Also, we feel that our relationship with another anchor customer of ours is going strong. So our volumes have not come down with that particular anchor customer. It's just that anchor customer has diversified and has added one more EMS player. But we continue to gain the volumes, and we continue to gain a larger share of export volumes for that anchor customer. So we are pretty much confident about our order book of 60-65 million for next financial year. And the addressable opportunity is, of course, 100 odd million on the outsourcing side. So yes, there will be some more EMS players which will be having some market share, but we will have the largest portion of the market share. And gradually, with all these brands and also these ODM partners, we feel that our export volumes will continue to go up.
All right, and before we wrap up on markets at 12, there's news coming in from Saudi Arabia. In fact, a tragic bus accident near Medina has claimed multiple lives, with several Indian pilgrims feared dead. The incident occurred earlier today when the bus carrying pilgrims traveling between holy sites reportedly met with a major crash. Local authorities and emergency teams are on the ground carrying out rescue and relief operations. Now, the Indian embassy is closely monitoring this situation and is working with Saudi Arabia at the moment and the officials to really verify the details and also to assist those who have been really affected by this tragic accident. So keep your eyes out for this one, and our hearts and our prayers are for the ones who have been victim of this tragic incident. All right, with that, then it's a time to wrap up on this edition of Markets at 12, but do keep it with NDTV Profit. Thank you so much.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer.
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri, and over the next hour or so, we'll try and get you all the key stories, all the key stocks that you need to have on your radar in today's market session. Before that, and getting to a lot more, stock-related, updates, let's first look at how the markets are doing, because we have seen that the Nifty has shed some of its gains for today. We're at 25,950, but the momentum seems to be quite positive, to say the least. We had seen the implied open for the Nifty indicating a 43-point uptick. We are maintaining a little more than that as of now. When you look at the Nifty 50 stocks and the heat map very quickly, you will see some key movers in trade today for the benchmarks, and it has been the area of strength for the markets over the last week or so. Something like Bajaj Auto, something like Shriram Finance is up 1.5%. Bajaj Auto has been one of the biggest gainers for the Nifty throughout the trading session. Tata Motors also up 1.8%. While in the loser side, we have seen some kind of negative impact coming in on the IT players. The momentum has quite been subdued ever since the last Monday, where the momentum had started off very well, waned out by the end of the week. When you look at the advanced decline ratio, that's the other one. Roughly around at 10:30 when we did Ask Profit, we were at 2:1. We have sold off on some of these advances, and that's largely been one of the key aspects of the market today, that individual movers, while have been in foray, it is starting to give up on some of those gains. So we'll continue to monitor that over the next 3 hours of trade. Also looking at the mid cap and the small cap, that's the other one which has actually shown strength today again. Up almost 0.5% on the mid cap 150. The small cap 250 is also continuing with a similar trend as well. But the Nifty Bank has been one other key area of strength, above another historic high today. Last week on Friday, it had that positive momentum. Today, it's led by AU Small Finance Bank, something like a Canara Bank, and PNB. Finally, the BSE 500 is the other one very quickly. I mentioned about individual stocks, something like a Narayana, Rudralaya, Maharashtra Scooters. Equita Small Finance Bank is seeing buying for the first time post its results. It was under pressure. Maybe something like an Utkarsh is rubbing off on that particular counter. While Utkarsh had the fundraise today, maybe investors coming back now to the MFI space. On the losing side, Tata Motors Passenger Vehicle Limited is one of the biggest losers today on the back of earnings. And we'll talk about that during the show. Something like an Adani Enterprises Astral is also something that we'll discuss in the show. But overall, we are at least in the green for now, and hoping that we will be continuing to keep that momentum up over the next, some time as well. But Anushi is also joining in now at this part of the show. Anushi, very good afternoon. I think there are some key movers today that you are also having, you are also keeping a track of in terms of earnings. What are some of those counters?
So a couple of earnings in focus is what we are seeing. I'll start off with something like a Ashoka Buildcon, which is in focus, and a very weak set of numbers is what we are looking at. In fact, if you just take a look at the revenue, that has seen about a 26% of a dip, and this is the fourth straight quarter wherein the revenues have been impacted. This is also due to the weak ordering overall for NHAI, which has been a case scenario for majority of these infra players out there. Total order book stood at about 14,888 crore, while toll collection, if we say, has seen about a 13% of growth, which is in line with what the industry average is, around 11 to 13% or odd. So another trigger for this company is also the 4% downtick that we are seeing is also the 288 crore worth of project of MMRDA being cancelled. So some bit of an effect on that front as well. Apart from that, Ajax Engineering is another stock in focus. Here they are seeing strong revenue growth along the likes of 47% or odd. So looking at a uptick of around 7% in trade currently. However, if you take a check at the margins, they had about a 276 of basis points of contraction. And this is on account of these transition costs which had impacted the company's operations. If you take a segment-wise check, spares and services saw about a 26% of an uptick, while SLCM revenue that saw about a 55% of an uptick. So that remains on the stronger side for the business, which has worked out for the quarter as well. Apart from that, there are a handful of other stocks as well, which includes the likes of Ahluwalia Contracts seeing about a 10% of an uptick, along with something like a Siemens as well, which had a mixed performance in regards with revenue being comparatively strong, but it was EBITDA wherein digital industry segment continued to weigh down on its margins is what we are seeing. But the stock seeing about a 3% of an uptake. Let me go across to Mr. Chokalingam, founder and MD of Economics Research, who will be talking to us about a lot of these stock, giving us perspective on all of these stocks that we are going to be discussing. Mr. Chokalingam, thank you so much for taking out the time. I just want to start off with a lot of these earning reactions that we are looking at. Any one of these which are interesting to you? This includes the likes of Ajax, Siemens, Ahluwalia Contracts, or even Ashoka Buildcon.
Ashoka Buildcon, the latest quarterly performance is quite bad, so that doesn't give me confidence. Other two stocks you mentioned?
Ashoka, this includes Ajax Engineering as well. Then there's Siemens Limited as well as Ahluwalia Contracts.
Yeah, so Ahluwalia I have not studied, but Siemens is going through a difficult time in posting growth. So at best one can hold because it's not able to come back to the growth path like L&T. Ajax I have studied. It looks, product profile, the technology business look very impressive. There is no doubt. The only concern is that slightly, stretched valuation, but then certainly one can buy this for long term. Siemens hold, and Ashoka Buildcon I would avoid at this juncture.
Well, that's Mr. Chokalingam's view on a bunch of stocks, which all are actually seeing a reaction either on the upside or the downside. Something like Ashoka Buildcon, something that Anushi highlighted, is under pressure as we speak. The other counter, that's let's pull up something like an Amber Enterprises. What's that stock doing? It's marginally up now, 1.5%, and that's largely on the back of a acquisition that the company has done. So Ilgin Electronics, which is one of the key subsidiaries in the electronic space, has actually gone ahead and made an acquisition of Shogini Technocrats. Now it's an acquisition in the PCB space, which is the printed circuit board space. One aspect is that they are looking to increase materially over the next few years. They've highlighted that Shogini is a long-established player in this particular space, and some of the key details include applications in automotive, defense, medical electronics, industrial electronics, telecom, power electronics, amongst the others. And the acquisition will, of course, be completed in one or more tranches, but largely funded entirely through the cash considerations of the company. Shogini, of course, will become one of the key subsidiaries of the company, and in terms of acquisitions, it will strengthen the bare PCB vertical of the counter. In terms of financial strength, Shogini has a revenue of 390 crores in FY25, and while Amber is a conglomerate in that space, the PCB revenue was 330 crores for Amber. So this will double the company's electronics revenue and will be EPS accretive as well. Mr. Chokalingam, I'm not sure if you have a direct coverage on something like an Amber Enterprises, but is it one of, how do you view this particular acquisition for the counter?
I have not gone into details of acquisition, but I have looked at that performance in the recent time. It's really fabulous. There is no doubt about it. And the only concern is that, its operating profit growth year on year is around 48-50%, whereas the stock is trading at 118. So I would give even, 2 times PEG ratio. I would compromise instead of giving 1 time. Still, it is slightly stretched. So anything less than 7,000 would be a good, price point based on the, the recent performance.
Let's also quickly pull up something like Marico as well. It's in focus after the company delivered their Q2 earnings, and honestly, largely quite a decent quarter for the company, to say the least. Almost a 30% growth that they've shown in revenue. EBITDA as well subsequently saw an impact in this quarter. The management highlighted that was under pressure due to higher input cost prices, which impacted margins. as well as higher investments in advertising and promotions as well.
While we are looking at margin contraction also, that was something which was already penciled in by the street, that there's going to be pressure on account of these raw material costs also which are there. But overall, a positive stance is what we are seeing. In fact, the company delivered a strong top line is what we are seeing, with margins remaining under pressure due to these higher input costs and all that. But our colleague Mahima caught up with Saugata Gupta, the MD and CEO of Marico, to understand company's expectations for the second half. So let's listen into that.
My first question to you is with regards to where volume growth is concerned, because this time it came in at around that 7% mark versus that of 9% earlier. Slight downtick there, but overall it has outperformed the way peers have done, right, in the FMCG staple space. Just want to get a sense as to what is leading to this kind of volume growth and outperforming the peers.
I think a couple of things, if I had alluded to earlier, is that I think we have been, consistently able to anticipate risks and convert them into opportunities, whether it's in the diversification agenda, whether in the distribution of protection of general trade through our Setu. And I think there's been a significant amount of institutionalized resilience. And today's world, resilience is a very, very critical thing. And ability to, for example, I think very few places in the world where you get 100% input cost increase, you take a 60% increase in your power brand pricing and still deliver volume growth. Although Parachute has been transactionally flat, but I think this would have impacted significantly. And if you look at historically, ever since the COVID ended, there has been not a single quarter, in spite of significant adversity, including inflation and other things, we have ever have a surprise on our bottom line growth. We have delivered consistently EBITDA positive growth. So I think the diversification agenda is playing out well. Recently, value-added hair oils growth, for repivoting towards focusing on category building, fundamental brand equity building as opposed to trade spends, in spite of the fact that there has been competitive headwinds at the bottom of pyramid, and a very, very solid, resilient international business. So I think it's been a factor of all three. And I think obviously we have also invested significantly in the last 4-5 years in leadership development from within, and it's a very, very experienced and tenured leadership.
I agree completely, Mr. Gupta. So, getting a sense of volume growth, there has been, recovery in the entire space, right, in terms of where FMCG stands on the back of a lower base as well, of course. But Q1, we saw a slight recovery. Q2 also, we've seen volume recover. Since you've been already doing high single digits, do you think that early double digit is possible by the end of FY26 in terms of volume growth?
Very difficult to get, because it's also is a function of how the input prices play out, especially in Parachute. Having said that, I think if you ask me this quarter, the entire sector faced some transient headwinds during September during the GST transition, but the entire GST, this entire whatever has happened in GST has been transformational, extremely bold step by the government. Long term, it will drive accessibility and affordability, and it will drive definitely better growth in the sector. I think sector growth is expected to improve, a function of overall demand as well as anniversarization of a low base. And we expect our volume growth to be a tad better in the second half of the year than what it was in quarter two.
Okay. With regards to your food business, that's seen a consistent growth of anywhere between 20 to 25% over the past few quarters, and it's been very impressive where the food growth is concerned. This quarter, it's slightly moderate, and I understand that this might be on account of one GST, and if at all there's some other reason, you can give us an explanation towards that. But in terms of a recovery with regards to this food business from the 12% mark, do you think there was a one-off which has happened this quarter? Do you expect the recovery soon in Q3, or how does it pan out?
I think I must say that I've set high benchmarks, because at 12% is not seen as good, which is good for us, I think.
Absolutely.
I think we're extremely confident of getting it back on 25% back.
Yeah.
And 2-3 things have happened. One, I think there was obviously some transient issues. Secondly, as you know, that we are just integrating True Elements, and last year was the last year of earn-out of a founder, and then we are getting the business, repivoting the business a bit, focusing far more on profitability and break-even. Similarly, on Plix also, the Plix nutraceutical part of the business, we are focusing on, break-even which has happened, the break-even has happened, and getting into mid to high single-digit EBITDA growth in the next 2 quarters. So there's a focus of both profitability. So it's a little bit of a small pause, I would say, for 1 or 2 quarters. Similarly, in Saffola, we are rejigging the portfolio to focus on a few things. Our learning is, if you look at our oats, masala oats franchise at a scale level, it makes company level EBITDA. So our entire mantra for foods is, especially for Saffola, is fewer, bigger, better, and relevant. And therefore, having done all this, we are extremely confident to get the food growth back into the 20s sometime in Q4 and well into the next year.
Understood. With regards to your EBITDA margin, because you've said that there will be improvement FY27 onwards, just want to get a sense of what range is something that you're aiming at, because I understand that copra prices have kind of moderated and have been benign. What's the outlook like?
So it's still high in the sense that copra prices have gone down 15 to 16% from its peak. The next crop will come around March, and the current outlook suggests that the crop is good. And therefore, as the season comes in, there will be a correction in prices definitely sometime in March. So what we believe is, while second half will be better than first half, and we are reasonably confident of delivering double-digit EBITDA growth, as far as next year is concerned, we will strive to deliver at least a 200 bips improvement in the margin and ensure that over a 2-year CAGR, it's still double-digit.
Interesting. Okay, copra prices, you said that the coming crop is expected to be a good one. Just want to get a sense as to that, pricing compared to where it was last quarter. Do you think there will be some change in terms of where, the pricing is concerned, some reversal in terms of pricing grammage will take place, or no, that will not be the case?
No, absolutely. I think wherever required, I think at the end of the day, we operate in emerging markets. Our job is to ensure to protect volume and market share. And whenever there could be opportunity, we'll pass it on to the consumer to provide value. For us, as I said, driving value to the consumer and protecting market share and volume is paramount importance. Margins has always come.
Value-added hair oils has been growing in high teens. Do you think this can reach early 20s? Again, setting your expectations higher. Do you think this can reach early 20s maybe by the end of FY26 or maybe early in FY27?
I think our first endeavor is to consistently deliver this, teens growth and a double-digit growth. I think it is, as you know, the portfolio struggled quite a bit. And the reason is not only internal, external. We faced, I think, what I call irrational competition, especially at the bottom of pyramid. A lot of money was taken away from above the line to below the line. We decided to repivot sometime 3 quarters ago, because as a market leader, it is our job to invest behind category growth, long-term equity building of brands. That is delivering the results. And I think first let us settle down and then we'll see. But I think for us, if I can deliver double-digit, consistent growth, value growth, and the fact that growing, and as you know, that this part of the business where we are focusing on makes high margin, it will not only lead to better value growth, it also lead to better mix and therefore margin improvement over the medium term.
Understood. Okay. One last question to you, Mr. Gupta. 10,800 plus crores is what you did in FY25. First half, you've already done over that 608 crore mark. Where do you see the top line going by the end of FY26?
So I think we hope to end with a 25% kind of a number, around that 25%. That will at least definitely accelerate our ambition to hit the 20,000 mark in the next 5 years, because in the first year we do a 25% growth, delivering a 11-12% CAGR for the balance 4 years becomes easier.
Okay, well, that was the management of Marico Limited in focus. The stock currently up over 3% in trade. While the management does remain confident on its target of about 25% growth in this financial year, he also expects a double-digit growth for margins going forward as well. Mr. Chokalingam, let me come to you on Marico. Now, the first half, we did see that impact of raw material prices playing into the margins as well. But it's the next half that we'll be focusing in terms of improvement or recovery in this particular area. Just want to get your overall perspective on this stock.
Certainly, it's a great management for last 6-7 years. Consistently, there has been growth, though the annual year-on-year growth rate has been fluctuating. There is no doubt that it's a growth stock, and also return ratios are too good, no doubt about it. And also third, whenever the margin slipped below 20%, they were able to pull it back quite successfully. The only areas of concern is that, in the last 3 years, profit growth is only 10%. And Q2, the margins have come down almost 400 basis points. And stock is trading at 59 times. So, which I believe, quite difficult to justify on the basis of the latest performance. So, still considering the past performance, at best, I would give a hold rating and look for any, effort in improving the margin back to 20% as management has indicated. Also, around 14% revenue growth to reach about 20,000 crore revenue in 5 years. So if these things can start showing some signs, then this can become a good buy. Otherwise, right now, I would give at best a hold recommendation.
Well, that's Mr. Chokalingam's view on something like a Marico. But let's quickly pull up something like a Tata Motors passenger vehicle business. And we have been talking about it that post the quarterly earnings, there has been a weakness in the share price performance. Let's go deep into why is that. The three key takeaways has to be that the results were weaker than what brokerages and analysts were expecting. Cyber attacks as well as the US tariff impact has had an impact on the overall business of the company. And finally, in terms of JLR business, they've also seen a guidance cut for FY26. So largely revenue was down 13.5% in this particular quarter. EBITDA actually reported a loss of almost 1,000 crores in this particular quarter. And while the net profit, you will see a subsequent very high jump because at 76,000 crores, that's largely because of a notional gain on the commercial vehicle business that was demerged. So there is the net profit on the notional gain. When you look at the JLR FY26 guidance, we know these numbers that the guidance has now been cut to 0 to 2% for the EBIT margins versus 5 to 7% earlier. And free cash flow is also expected to be negative at minus 2.2 billion pounds versus almost near zero in this year. Now, brokerages like Jefferies have maintained an underperform rating on the stock. Let's pull up Jefferies very quickly first. It's a target price of 300 rupees per share that they've given and highlighted that the cyber attack related disruptions have continued in this particular quarter and highlighted that they see multiple headwinds for the JLR business going forward with the increased competition as well as the consumption tax going up in China. JP Morgan, on the other hand, has highlighted that 385 rupees per share is their target price. Guidance cut seems realistic for now is what they highlighted and mentioned that the margin delivery, while in the India business has been strong, the extent of margin erosion in the Jaguar Land Rover business is a key negative. But the group CFO, Mr. PB Balaji, also said that the company is expecting a better H2 performance compared to H1, obviously. Let's listen into what he had to say.
We have given you the guidance there, where we believe now with production fully stabilizing in November, the whole of month of October has been impacted. To that extent, there will be an impact in Q3. But here onwards, we should expect to see things picking up. So we expect H2, therefore, to be better than H1 as far as JLR is concerned.
Well, Mr. Balaji was, of course, responding to a question in the media call from me and largely highlighting that there could be some multiple key factors positive going forward. But Mr. Chokalingam, we have spoken to you in the past about the auto space. You highlighted you like something like a Mahindra and Mahindra. But how do you view the results of Tata Motors, the PV division? And if someone's already holding the stock, would you recommend them to get out of it right now and buy something else in the passenger vehicle space, if any?
I would suggest, two options, either considering M&M or Bajaj Auto within automobile, or moving towards Tata CV company, commercial vehicle company. Because, the Tata Motor passenger vehicle is not able to outperform the domestic competitors in India. And secondly, JLR business is always, giving you a lot of uncertainty. And third, it's a subsidiary technology company also depends upon the global growth story. So Tata Motor PV is largely on a global growth story, 2/3 of the business on global markets, whereas the CV business largely domestic. Even it's an investment in Tata Capital, it's a play on domestic. So I believe medium to long term, the domestic story would more stable and steady, growth scenario is possible. So therefore, I would prefer Tata Motor CV to Tata Motor passenger vehicles.
Well, we also had another brokerage from Morgan Stanley that actually turned bullish on something like a Hero MotoCorp. Now, that's another result that came last week on Friday, and stocks flying in trade right now, almost up 4%. Now, Morgan Stanley has actually upgraded the counter in this particular quarter post the results. They've upgraded to an overweight rating, hiked the target price to over 6,400. Mentioned some key points that the market share declines have actually paused, something that was a key concern for Hero MotoCorp as well as something like a Bajaj Auto, and mentioned that Hero is starting to now see market share gains in both the electric vehicle scooter space as well as the ICE scooter space. And here is the difference between someone like a Hero and Bajaj, that Hero is present in both the ICE and the EV scooters. A better mix has also helped the company lower their losses in the electric vehicle division, and that will be something to watch because their market share on a monthly basis has actually inched from 7% in April this year to almost 13% in October. And current valuation, according to Morgan Stanley, at 16 times price to earnings with a 3% dividend yield also is a key positive. But let me go back to Mr. Chokalingam on this. How do you feel about Hero MotoCorp, Mr. Chokalingam, given the valuation, dividend yield, as well as the company's gains in the scooter segment? That's something that they were absent from over the last few years.
Yeah, one can hold, but I have a preference for Bajaj Auto for a couple of reasons. Recently in October, Bajaj Auto has got the leadership position in two-wheeler electric vehicle. So I see that they would be able to maintain, if not first rank or at least second rank in EV. In the long term, that can become a potential value unlocking source. And also the export, though it is fluctuating, I am pretty bullish on export segment of Bajaj Auto because of the recent rupee depreciation. The margin should be quite healthy in export business, and also stock has corrected quite significantly from 52-week high. So therefore, I prefer Bajaj Auto within the two-wheeler space.
So Chokalingam, just to follow up as well, because Bajaj Auto, while has shown promise in the EV scooter space, we are seeing that even in ICE, customers are now preferring to buy a scooter compared to a bike, and the share has now moved to almost 39 to 40% versus 32% earlier for scooters. Don't you think that could be an area where Bajaj seems to be lacking, and only export momentum would be something for an investor to look at, a key positive, but limited in that aspect?
I agree. That's why in the beginning I said one can hold Hero Motor. I didn't say sell it. I agree with you, but the previous month, October, they slipped down. If you see in September month, the export business grew very fast, extraordinary strong double digits. So I believe that performance can outweigh the limitation in scooter segment. I may be wrong, but that's my belief. And in the last 2-3 months, the rate of incremental sales in EV also is phenomenal, pushing player like Volandal into very low ranking in EV. So therefore I believe Bajaj Auto can probably in relative terms perform better. But I would give a whole call. I would agree the plus point of scooter segment for Hero, and I would give a whole call on Hero MotoCorp.
Okay, so currently it's a hold that we are seeing for both of these counters and the overall perspective for the auto space in general. But it's time that we slip into a short break. Do stay tuned, lots more coming up on the other side.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top
Welcome back to Profit Buzzers right here on NDTV Profit. But you know, there is a key story that we are also covering on a national level. Anil Ambani once again skips the enforcement directory summons, marking the second consecutive no-show in the ongoing FEMA investigations. My colleague Danish joins us with all the details and a lot more. Danish, over to you.
Mr. Anil Ambani, he was supposed to appear in front of the ED today. He was supposed to reach at 11 a.m. but we are well past that time, and for the second time in a row, Mr. Anil Ambani has skipped his appearance before the Enforcement Directorate. Even in the previous hearing, he had requested that if he can appear virtually, but ED did not allow that, and then from Friday, that summon was the date of the summon was changed, and he was supposed to be produced in front of ED on today. But if we look at this matter, this is a 15-year-old FEMA violation matter, and Mr. Anil Ambani is also being quizzed over about the whereabouts of his company, and moreover, one of the facts that ED has really investigated is the fact that Anil Ambani's company, they had been awarded a contract on the Jaipur highway, and the ED found out that at least 40 crore money was siphoned off to Mauritius and to Dubai, and the ED found out that this brings out to a larger conspiracy which talks about around 600 crores in Hawala money. So this is why Mr. Anil Ambani was called for questioning in the ED at the ED office today, and he did not turn up, and we'll have to see that when the next summon will be furnished by the ED to Anil Ambani.
And we'll keep getting you some more key updates as and when they happen, but largely a key story that we're tracking. But we still have Mr. Chokalingam, Amit Bhoptani, also the derivatives and technical research analyst at Netweb Bank Securities, who's also joining in. Amit, let me take a very quick view from you on the Nifty Bank actually, because it's been one of the key ones which has hit another high in today's trading session. Where do you expect, at least for today in the near term, for the Nifty Bank to go?
Good afternoon. So overall, if you look at the today's scenario, it is continuously trading in the upper range, and we are seeing that the momentum will be continued while going ahead. In today's day of trading session or next 1 to 2 day of trading session, the resistance for this index is likely to be placed near 59,300 levels. So 59,300 will act as an immediate resistance zone for the Bank Nifty, with a support placed at 58,600.
Okay, all right. So that's with regards to where the Nifty Bank is concerned. But moving on, Anant Raj, Trualt, IRB Infra and EPAC Durable are some of the counters that are, flying in trade today on the back of news flow, of course. And we have Jasmeet joining us to tell us as to what's, worked for these counters today. Jasmeet?
Well, Ray, thank you for that. I have a couple of stocks buzzing on the back of the MOUs they have signed, starting off with the Anant Raj. Well, company signed an MOU with Andhra Pradesh government, and the MOU is to invest with 4,005 crore for development of data centers and IT parks in Andhra Pradesh. Starting with the next one, I have Trualt. Well, the company signs an MOU with Andhra Pradesh government again, and this MOU is signed is to develop world's largest SAF facility. Well, SAF stands for Sustainable Aviation Fuel. Well, this facility will integrate the regular fuel into the SAF fuel. Well, that's something to watch out for, where it converts the ethanol. Now, we're company to invest 2,250 crore for this particular project, and facility can produce roughly 80,000 tons of SAF per year. Well, going with the next stock, that's IRB Infra. Company received an LOA from NHAI for rupees 9,270 crore for development of 2 highways. While the LOA received will be linked to the revenue for consecutive of 20 years going forward from here on. Well, next one is EPAC Durable. Company enters into a non-bidding MOU with APEDBA. While this MOU stands to invest rupees 1,083 odd crores to facilitate expansion of the plant of the company, which will help company to grow further in the development facilities. While in terms of expansion to be undertaken for the collaboration of this particular organization, while the APEDB stands for Andhra Pradesh Economic Development Board, while helping the company to grow and establish further expansion of the capacities.
Jasmeet, for bringing us those details. Amit, I'll quickly come to you first on some of these names. Something like a Truort is, flying in trade. And of course, all of these in focus on the back of, either MOUs with the other government or order wins from the other government. Any of these counters that you still think there's steam left and one can make an entry right now?
Still, if you look at the overall setup for all these counters, there is not much of confirmation coming ahead. If you look at the Anantraj, IRB Infra, both these counters are facing the resistance on the upside levels. But if we need to select Anantraj, then we should place the alert of 645 level. Once the counter goes above 645 level, then the confirmation will come for this counter to get the buying approach towards the 700 level. But another three counters, I am still expecting to wait it for some time.
Got it, Amit. Mr. Chokalingam, let me just get a quick question from you on IRB Infra. Do you track this counter by any chance? Because it's a strong agreement that they've gone for the next 20 years. Anything on this one?
I found difficult to understand the IRB model because of this, liabilities, all that. But I looked at Anandraj. That's okay to go gold. The last 3 years, Anandraj has done very well in terms of growth and both revenues and profits, but IRB I'm not able to form any view.
Got that. So Anantraj is something that Mr. Chokalingam is looking at, but another counter that's actually buzzing in trade today is Glenmark Pharma. Now, it is expecting to return to a high growth trajectory with major improvements in revenue, margins and balance sheet strength over the next year or so. But for more on the roadmap, let's go across to my colleague Varsha, who's giving us a perspective on all of this and a lot more. Varsha, over to you.
Overall, if you see, there was a weak set of numbers that Glenmark has posted, but it's the strong commentary in a con call which has led to the recovery when it comes to their stock price. So they're expecting to be back on high growth phase. Onto the revenue expectations for H2 FY26, they're expecting revenue of more than 8,000 crore. For FY27, they're expecting revenue of around 17,000 to 18,000 crore. Overall, they're expecting almost 15% of revenue growth, year on year. While on the EBITDA margin expectations for H2 FY26, they're expecting EBITDA margin of around 23%, and in medium term, they're expecting EBITDA margin to go around 25%. They're expecting a significant free cash in FY27 and beyond, and a company is expected to go gross debt is expected to have gross debt as zero by the end of FY26. Onto the India business, which was impacted this quarter because of the GST changes. They're expecting the India business to be back at 1,200 crore run rate from Q3, and India business is expected to have 4,800 crore of sales in FY27. Provisioning, onto the provisions, they are expecting no further provisioning as of now. So overall, a good commentary is what is coming from Glenmark Pharma, and this is the reason why we have seen, why we have seen the recovery in the stock as of today.
Thanks so much for that, Varsha. But Mr. Chokalingam, very quickly on something like a Glenmark Pharma, how do you view the commentary from the management in the con call, something that Varsha highlighted, and within this space, is it something that you like?
I missed it. It rallied, but recently it has corrected. But when you look at it, particularly this quarter, there seems to be significant expansion in the margin, and stock price also slightly corrected. And third, the return ratios are very decent. It's not too impressive, but quite decent at around 19% ROCE. And also, the debt has come down a lot in September quarter. And at the same time, a lot of investments is going into fixed assets. So therefore, I believe, the current PE of around 20 also quite attractive. One can buy for medium to long term.
All right, so that's with regards to where Glenmark Pharma is concerned. But Varsha is still with us, and she's going to speak about Max Healthcare, because that's in focus after reporting its Q2 numbers, showcasing a significant rise in bed capacity and occupancy. Varsha, how has the quarter shaped up for Max Health? Tell us more, because the stock is seeing gains. Overall, for Max, if you see the revenue growth that you're seeing was led by occupied bed days. The PAT growth was led by favorable tax impact. So that sudden spike or the high spike that you're seeing when it comes to the net profit is because of the favorable tax impact. The international patient, if you see the revenue was up 25% year on year, and which contributes 9% to the overall revenue. Onto the operational highlights, the bed capacity increased to 4,760 beds versus 3,949 last year. When it comes to occupancy was at 77% versus 79% year on year, and the ARPOP, that is average revenue per occupied bed, if you see, was up only 1% year on year. Onto the expansion projects for the company, so there are 160 new tower commission at Mohalli, and the 268 bed tower at Nanavati Max is expected to go live next week, and the new 130 led Dehradun hospital has been approved, which will be commissioned by 2028. All right, Varsha, thank you so much for giving us those details. The stock, although has cooled off from its day's high point, but still up 1%. In terms of the chart, Samit, do you think they're promising enough? And if somebody wants to make an entry right now, does it make sense?
There is not much of activity on the chart perspective. If you look at the weekly chart and the monthly chart, the stock is having the upward rising support at 1080 level. So if any negative need to come, then below 1080 it will come. So if counter is going below 1080 level, then the longs need to be exited. So whomsoever is holding the long position or need to create any long position can place with the support of 1080 level. Upside breakout for this counter is at 1150. Once counter gives a closing or stability above 1150 level, then we will witness a fresh momentum in this counter towards a 1220, 1240 levels. But at this point of time, whomsoever is holding 1080 will be the nearest support for this counter.
Well, let's pull up something like an Supreme Industries and Astral as well, because both those counters were under pressure. Supreme's down almost 1.6% still, and Astral as well, continuing its downward momentum. Now, that's actually happened because Reliance, which is one of the key suppliers for PVCs, which is a key raw material for pipes, has actually reduced prices by 3 rupees per kg with effect from 15th of November. Now, why is this important? Is because the current inventory of PVC that all of these companies might have will have to now be adjusted by 3 rupees, because the customer will want that discount on their purchases from now onwards. And because all of these companies bought inventory essentially at 3 rupees extra before 15 November, this will have an impact on the margins for all these counters. So that's one of the key triggers for all of the weakness today. The other aspect is that the government has still not accepted the anti-dumping duty to be established, which was expected to come in by 12th of November, according to the management of Astral, when we last spoke to them post their quarterly earnings, and highlights that the government still doesn't seem to be in favor of actually implementing the anti-dumping duty so early as of now. So it is something that we're tracking, and that's largely leading to the fall in the stock price for both of these counters. But Mr. Chokalingam, for Astral, the Q2 performance was actually quite strong. Do you expect that this could be a key negative again? Because a lot of investors had priced in that the PVC price volatility is now behind them, and it's come back to hurt the company again today.
Yeah, but not only that, if you see last 2 years or even some cases 3 years, both Astral and Supreme Industry, they're not able to grow the profit substantially. And within this business segment, these two are the the costliest stock, but not supported by strong profit growth year-on-year basis in the last 2 years. So therefore, I would sell on Astral and perhaps give a hold recommendation on Supreme, because the stock has corrected a lot from the 52-week high.
Okay, all right. So that's the view with regards to where Astral and Supreme are concerned. But moving on, Dixon Technologies Group CFO Saurabh Gupta says the company's joint venture with Longshore will become operational in the next 4 months, marking a key capacity and capability expansion for the electronics manufacturer. Listen to what he had to say.
Competitive intensity has gone up, but we continue to be the leader across the various EMS players in India. We continue to have the largest share or the lion's share of all the large brands. And I think so over the last couple of years, we have been able to stitch some good partnerships, like partnership with Longcheer, which is a large ODM. So once that JV is operational in the next 4 to 5 months from April onwards next financial year, I think so we will be able to pull in more volumes in that JV. Also, we feel that our relationship with another anchor customer of ours is going strong. So our volumes have not come down with that particular anchor customer. It's just that anchor customer has diversified and has added one more EMS player. But we continue to gain the volumes, and we'll continue to gain a larger share of export volumes for that anchor customer. So we are pretty much confident about our order book of 60-65 million for next financial year. And the addressable opportunity is, of course, 100 odd million on the outsourcing side. So yes, there will be some more EMS players which will be having some market share, but we will have the largest portion of the market share. And gradually, with all these brands and also these ODM partners, we feel that our export volumes will continue to go up.
All right, so that was the management of Dixon Tech. Amit, anything on the charts? I mean, what are the kind of support and resistance that you're seeing from a slightly longer term perspective? Year to date, if you take a look at the charts, it's down by about 13%. But do you think from here on, you can expect an uptick?
Definitely, setup is looking positive. Currently, the stock has given a breakout at the current levels, and stock is well trading about 200 DMA level. Upside confirmation will come above 15,700 level. Once counter gives closing above 15,700 level, then almost around 1,500 points momentum we can witness in this counter. So currently, setup seems to be in a positive front. We should wait for the breakout of 15,700 level.
Mr. Chokalingam, a quick question on something like a Dixon Tech. It's actually seen a lot of sell-off post touching that high of 18,000, 18,200. And that's one of the key concerns, right? Because the company is still not yet received approvals for its joint ventures from Chinese companies like Vivo, amongst others, and still not one of the key winners in the ECMS scheme. How do you view Dixon and your view also on the sector?
Yeah, the sector has extraordinary potential. There is no doubt about it. I agree with you. I have a concern for the stock for the long term, but short to medium term, it might still do well because, as you said, stock has already corrected. And last 3 years, there has been a tremendous increase in the fixed assets and the growth in the business, growth in the sales, very good. And even September quarter, 16% sequential growth in operating profit. So, yes, there are few concerns which is in price, I believe. So, in the short to medium term, it can reward. So I would give hold, and in case it falls, I would give buy. But long term, as you rightly mentioned, the competition is getting intensified. Recently, media reported, huge number of players getting into EMS and seeking PLI support. Second, a couple of weeks ago, L&T also proposed to get into EMS. So I think L&T is a formidable player in this kind of business. So in case they get into this business in a big way, it is going to make a structural change. But that is all for the long term. Short to medium term, hold and buy if it declines.
All right, so that's the fundamental view with regards to where Dixon Tech is concerned. The other counter, that of course has not done much in trade today, but has been in focus on the back of a news flow is Indian Hotels. It's forayed into integrated wellness. It has gone ahead and acquired 51% in Sparsh Infratech Private Limited. The investment is expected to be approximately the 240 odd crores, and the enterprise value at which this transaction has been done is around 415 odd crores. Sparsh Infratech basically owns health and wellness resort by the name of Atmantan in Mulshi, Maharashtra. In terms of the financial snapshot for the company, in the past 3 years, the company has gone from a 4950 odd crore to a 76 odd crore in FY25. Morgan Stanley did come out with a note saying that they've maintained overweight with a target price of 811. That this tapping into holistic health market is positive for IHCL. It has said that Atmantan posted a revenue CAGR of 25% over the past 5 years, that is from for 7 years from FY19 to FY25, and EBITDA margin of 50% is something which is accretive. Acquisition is implying an EV to EBITDA multiple of around 10 times, which is not very expensive. In terms of synergies, they should see synergies from cross-selling opportunities with J Wellness Circle, loyalty program, as well as integration and expanding presence in Maharashtra. And overall, although this is a small transaction, acquisition. They're viewing this as an interesting foray into the holistic wellness space. Mr. Chokalingam, I'll come to you quickly on your view regarding this acquisition. It's not like, these particular niches that, these big names are getting into can easily tap or, build a brand around what they're trying to do. But how are you viewing this acquisition, one thing, and do you expect this, to expand further? Do you expect IHCL to expand further into this wellness space?
Certainly, very interesting question. This is a very small compared to what they are already doing in the business in terms of size. So therefore, logically, it leads to strong expectation that this could be only a beginning, and they should do a lot more, because this kind of niche businesses also give you very good margin, and so therefore it can help. So they may not stop at this. So they may go, it may be just a beginning of a long drawn acquisition and a consolidation in this niche business. And secondly, standalone, this Indian hotel business has done well. The last 3 years post-COVID, the growth has been phenomenal. Stock also corrected quite significantly. So I would give a hold recommendation. In case it further falls, I would give buy. But otherwise, my recommendation would be on East India Hotel and Taj GVK. Of course, they are small and mid cap, have little risk. But for conservative investors, Indian Hotel would be better. For little risk taking investors, East India Hotel, because there are a host of expansion projects, huge number of expansion projects they have announced. So next 2-3 years, the capacity is going to increase enormously. And also Reliance and ITC hold together more than 30% stake in EIH. So that also I believe can lead to re-rating of the stock. So for risk-taking people, EIH is better than Indian Hotel. But otherwise, for conservative investor, Indian Hotel is a good stock to hold.
Amit, very quickly on the charts, apart from Indian hotels as well, is there something that you like in the hospitality space? Because you've seen some big movers, something like a Chalet post results, amongst others. Anything that you like on the charts for the hotel space?
If we need to select any of this counter, not much of action we are seeing in any of this counter. Indian Hotel, we can select for some momentum gains because the chart has retraced sharply from the upside levels of 800 and the stock is having the strong support at 680 zone. So once if it goes below 680 level, Indian Hotel, then only we might witness second leg of selling. Till that point of time, there will be some sort of up move in this counter around 20-25 points as our of 740 to 45 will be the near resistance for this counter. But as per medium term to long term perspective, there is not much of action visible in overall the hotel counters.
Okay, all right. So that's the technical view with regards to where Indian hotels and of course Chalet hotels is concerned. But moving on, Voltas is another counter that's in focus on the back of brokerages. While the earnings were not very impressive this quarter, largely also impacted by the GST transition taking place. There have been different brokerages view that have come out. They've maintained their stance, but some of them have also cut their target prices. But I think what the street probably is liking, the slight positive stance that the management has given in the con call. I'll start with what Goldman Sachs has to say. They've maintained sale with a target price of 1100. They're saying that the weak unitary cooling product is something that was not they were expecting, and they're saying that the demand is set up better for second half, but most of that has already been priced in the counter. The EMP segment seems to be returning to normalcy as execution was stable. Positive surprise was there on AC margins, but that's unlikely even though AC is on a structural growth path. Going forward, margins is something that they'll be watching out for in terms of where AC is concerned. City on Voltas, they've maintained buy, but the target price is being cut to 1775 from 1800 earlier. They're saying that it has started to recoup market share. Non-perishable nature of demand can boost FY27 onwards is what they're penciling in. Channel inventory is inching up towards normalized level, but in terms of where the positive stands, pent-up demand in last summer season as compared to the entire GST transition that has taken place could be one of the reasons as to what could aid demand going forward. And the other factor being that there is likely uptick in terms of where the real estate completion is concerned, and that could probably boost demand for ACES. So this is the overall view of what brokerages right now are penciling in for something like a Voltas. Mr. Chokalingam, Blue Star versus Voltas, although not completely in the same businesses, of course, but if you want to play this consumer durable theme, which one would you prefer right now?
I have not studied a comparative valuation of these two, but I have studied Voltas. So one can hold, considering the management quality, and also annual basis, it has done reasonably very well in the last 3 years. September quarter has been quite pathetic in terms of operating profit coming down and margin coming down to 1%, which is very low in the recent period. But again, it can bounce back. In the lean period, on a small base, margin can fall quite badly. The stock also corrected, so one can hold. But however, if you ask me, I would not go overly bullish on the sector as a whole in white goods, because last 2-3 years it is a little bit of struggle for the whole industry, and also a lot of competitive pressure is coming. So I would prefer, the banking space, which is the topmost sector in terms of anticipated outperformance. But otherwise, standalone Voltas, yes, it's good to hold for medium to long term.
Well, Mr. Chokalingam as well as Amit, we'll leave it at that. Thanks so much for joining in, giving us perspective across a whole bunch of stock spaces and sectors. But viewers, as we wrap up the show, we leave you with some key commentary coming in from SEBI Chairman speaking on the sidelines of CII Financing Summit 2025. Listen in to what he had to say, and thanks so much for watching.
पहले इशू पे तो मैं ये कहूँगा कि उस पे ही सेबी ने जो नियम बदलाव किए थे उसमें मैट्रिक्स को भी चेंज किया था कि ओपन इंटरेस्ट जो पहले था उसको हम डेल्टा लाए हैं, तो वो डेल्टा से वेटेड है, और वो बात कर रहे थे कि प्रीमियम वर्सेस ओपन इंटरेस्ट की। और दूसरे प्रश्न का जवाब ये है कि आईपीओ में एग्जिट भी होता है और रेज भी होते हैं, पैसा रेज भी करते हैं। वो कंसर्न आईपीओ के बारे में निर्भर है। हमारे मत में बहुत सारी कंपनियां पहले पैसे से बन जाती हैं, और जब विकसित हो जाती हैं, यदि वो आती हैं, तो उसमें कुछ लोग एग्जिट भी करेंगे क्योंकि वो कंपनी पहले ही बन चुकी है। और कुछ ऐसी भी कंपनियां हो सकती हैं जो कि ग्रीन फील्ड में आएँ और वो पैसा रेज करके आगे बढ़ें, वो दूसरी तरह के आईपीओ होते हैं। हमारे दृष्टि से सब तरह के वैरायटीज़ कैपिटल मार्केट में और सब तरह की संभावनाएं कैपिटल मार्केट में रहनी चाहिए।
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया, आपका काम क्या, आपके तो नाम में प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has
Good afternoon. You are watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the market, this sixth straight day of gains comfortably above the 25,950 level, and today's gains are largely led by the banking stocks, especially the PSU banks.
Yeah, absolutely. We are looking at more than a 1% of an upside for these PSU bank stocks that we are looking at. Currently for Nifty 50, we are looking at about a 0.3% of an uptick, continuing those gains from the last half an hour of trade that we saw Friday's session. In fact, that's if you pull out the point contribution table here, we'll see all of these banking names right at the top. Something like a HDFC Bank is in focus. Along with that, if you're looking at even ICICI Bank, M&M, they're all in focus right now. What's not working out so well and is in red is something like a Reliance Industries as well as Adani Enterprises. So that's some of the stocks which is dragging the index down. But coming to the overall sectoral heat map, if you just pull that up, we'll see that overall gains are Nifty PSU Bank right at the top. 1% of an upside is what we are looking at. Even in terms of Nifty Media, we're looking at about a 0.9% of an uptick currently. In terms of what's happening with the broader markets though, they are outperforming where the benchmark indices are. Currently, mid-cap 150 up over 0.7% in trade today, and even small-cap 250, we are seeing about similar sort of gains is what we are looking at. This is reflected in the advanced decline ratio as well, which is majorly in the line of advances is what we are seeing about 1300 in comparison about declines of around 1000 or odd. So, in fact, if we also see the BSE 500, here also, if you are looking at that, we'll see something like a Narayan Hrudayalaya right at the top, while Tata Motors PV is under pressure along with Astral and PNC Infra. In fact, talking about these small cap names, in small cap 250, what's buzzing currently is something like a Narayan Hrudayalaya. Along with that, even LG Equipment and All Cargo Logistics are seeing gains of anywhere between 5 to 10% or odd so. While what's not working out so well in the small cap space is something like a Jai Balaji, seeing about a downtick of around 2% or odd so. Easy Trip and Archean Chemicals also are the two stocks under pressure today. While in terms of higher volumes, we are looking at a couple of earnings reactions here. Ahluwalia Contracts currently seeing about a 12% of an uptick, and this is on the back of its revenue as well as margin uptick that we'd seen in the quarter compared to other players in the space wherein they have reported a degrowth or odd so. Idea Forge also, we are looking at about an 11% of an upside, and this is on the back of new order wins. We'll in fact be addressing this in detail much later on in the show. Along with that, even SKF and SP Apparels are some of the stocks in focus, seeing gains of over 7%. Other counters which are also in focus is something like a, in regards with higher volumes, is something like a Gabriel seeing a 10% of a downtick currently. Capacite Infra continues to remain in focus after its strong second quarter results, 6% up in today's session as well, and even Paka is seeing about a 4% of an uptick. But let's talk about Idea Forge Technology, and this is a leading Indian UAV manufacturer that we are seeing, which continues to gain traction with fresh new orders. Let me go across to Jasmeet for more details on this.
Well, right, thank you for that. The stock is buzzing on the back of order wins. The company has won an order over 110 crores. So we understand the order wins. Let's quickly understand what does the company do. Well, company operates in manufacturing of unmanned air services. While if you look at company's order book as of FY25 stands at 238 odd crores. While the use cases of the company products are used across civil uses, that's surveillance, securities, paroles. While they also have mapping users, that's the land surveys, estimates, and oil and gas surveys. While it also is used across applications of anti-terror as well as border securities. Now, if you look at the recent order win, company has won 2 orders from Ministry of Defence. The starting off with the first order, that's rupees of 75 crores, where they have to supply of tactical class of UAVs to the government, while the next one is rupees 32 crore, where they supply hybrid AUVs to the government. Now, in terms of the order book flow, we look at the order book being increasing from 192 odd crores in FY23. We saw a slight dip in FY24 at 124 crores, and as per the latest order book stands at 238 odd crores. While this buzz comes on the back of the same strong order books and the recent order wins.
Okay, so that was with regards to IDFC Technology. With that, let me welcome in our funder guest for today, who will be giving us perspective on all of these small cap stocks that we'll be discussing. Avinash Gorakhshekar, founder and head research of joins us as well on the show. Avinash, let me come to you on something like IDFC. We are seeing like 2 of these defense orders for the company. If you take FY25 in context or even H1, that has been more on the muted side. Just want to get your understanding on overall space with regards to where IDFC operates and what's your view for this company?
Yeah, I think, Anushi, this order win has definitely resulted in a spike in the stock price today. My sense is, the execution has to be also equally efficient and robust because, in the past, what we have found is that this company has got a lot of orders, but execution has not been very great. In fact, if you compare it on a quarter-on-quarter basis, some quarters have been good and some quarters have been bad. So my sense is that, today the stock is up by about 10%. I think we'll have to see how quickly this execution needs to be done because I believe the new orders which the company has got from defense is executable over the next, say, 12 to 18 months. So I think you could see some part of this order getting implemented in FY26 and some part of it getting implemented in FY27. But overall, I think the opportunity is very large for the drone opportunity. And I think considering that they have already made a kind of a win from the defense, segment, we expect some more orders to also come in. So we are constructively positive on the stock, but I think fresh buying is advisable only on declines.
Okay, so that's with regards to IDFC, but let's stay with the defense pack. If you look at another counter which is in focus in this particular sector is Premier Explosives. Now, in the second quarter, you've seen the company posting a weak set of results. We're looking at a revenue downtick of around 20%, with margins coming down to about 8.6% in comparison with 15.2%. Net profit also stood at about 17.8 crore as of September end is what we are looking at. Other than that, the company has also signed a MOU with Andhra Pradesh government for an investment of over 500 crore in state. This is mainly with regards to defense and aerospace product manufacturing is what we are looking at. But let me go across to Mr. TV Chaudhary, who will be giving us perspective with regards to what's happening with the company. Mr. Chaudhary, hello. Thank you so much for taking out the time and speaking to NDTV Profit. Now, what I'm seeing here is while the first quarter had been on a stronger side, you've seen about a 70% plus of a growth. Second quarter, on the back of delayed order execution, that impacted your revenues as well as margins for the quarter. So just want to understand from you, does the guidance of 600 crore which you'd given earlier, does that stay? What's the kind of outlook that you have for H2? Will you make up for the shortfall which was there in the second quarter?
Yeah, we are still in the range of 550 to 600 crores turnover for the current financial year. And I always tell you that quarter to quarter, there can be differences because of the deliveries and because of the other things. So this business is not something that month to month it maintains. It's rather year on year, it keeps on going up and down based on the deliveries we make to the defense services.
Just want to get a perspective on what happened this quarter. In which particular orders did you see these delays playing out? What's the outlook? Would you see a higher growth in terms of where this third quarter is concerned because of this delay in execution which was there?
Yeah, one of the important orders which got delayed is mines, land mines, where the deliveries got delayed because of the inspections and then clearances, which we are hoping that the next quarter that will be made up.
Right, sir. So you're maintaining your top line guidance of 500 to 600 crore. That means the ask for second half is too high. What are the factors because of which you're so confident that you will be able to achieve this guidance?
Yeah, other than the mines and other things, they are going consistently. The deliveries are happening. And then all export orders, we have to get the export license. So some of the orders which we are holding, we have applied for export license. Production is completed. Dispatches will be affected after getting the export license, which we are hoping that it will happen in the coming 1 week or 10 days. Yeah.
And the margin is at 15 to 20%, right?
Yes.
Right. In first quarter, your order book was close to 990 crore. That increased to close to now 1300 crore. Do you expect the similar trend in order book growth for the second half as well?
Second half may not happen in the same way, but yes, next year also it will be maintained and it will be further numbers will be added to that.
And the current order book of around 1300 crore, what is the execution timeline here?
This is in 2 years' time, because some of them are 12 months, some of them are 24 months. But since this financial year almost it is over 50%.
Mr. Chaudhary, I hope you're audible to you. Just want to get a sense in terms of, while you said that it's a 2-year execution that we are looking at. I think there seems to be some kind of an issue with regards to the audio.
If you look at their order book, it has continuously increased from 965 crore, what we had seen a couple of years back. It has been on a consistent increasing part to now 1300 crore. And defense contributes the most to their top line. 90% comes in from defense.
Well, that is what I want to understand. Considering that we are seeing this pick up from 900 to 1300 crore, the management had earlier said that they want to maintain the run rate of around 800 crore. So how is execution going to pan out is something that I want to address. Mr. Chaudhary, I hope I'm audible to you now. So earlier you mentioned that 800 crore is the kind of run rate that we'll see with regards to where the order book is there. I think there seems to be some issue again with Mr. Chaudhary's feed, but let me go across to Avinash meanwhile for his view on Premier Explosives. Avinash, in the second quarter, we did see an impact in terms of where the overall growth was concerned on account of order execution. But for the second half and for FY26, the management continues to see more than a 40% plus growth, and this is mainly going to be defense-led versus bulk explosive segment, which is which has seen some bit of contraction. Just want to get your outlook regarding this company.
No, I think structurally, Anushi, this company is on a very strong wicket because, as you said, the order book is 1300 crores. These are confirmed orders. So, the company has to only execute and deliver it to the final customer. So our sense is that normally the second half is supposed to be a much more stronger period for defense companies. And as the management rightly pointed out, on a quarter-on-quarter basis, we cannot evaluate these kind of companies because business is very lumpy. Maybe in one quarter execution gets weak, but in the third or fourth quarter, whatever revenue has been lost in the second quarter gets more or less recovered. So I think clearly, if they are able to execute the orders which they are planning to do in the current year, then I think you could see a good ramp up in the revenue and the profit. So I think, one good part is that the order book is pretty large. Visibility for the next 2 years is very solid. So to that extent, I think the company should do well, not only in FY26, but in FY27 also.
That's with regards to Premier Explosives. In fact, we have Mr. Chaudhary right there with us again to discuss about the outlook. Mr. Chaudhary, we were talking about the order book. You said that, the overall execution period is around 2 years or so. Just want to understand, what's the picture in terms of order inflows? What's the target for FY26 and which new products are you seeing more of these order inflows coming in picture? And are you also expanding your product range which is there?
Yeah, we have multiple products. So one is our expansion, increase the capacity of the RDX and HMX plant will come into operation by, I think, April or full operation. Trials production will be completed in the January itself. That is going to give a good contribution. In addition to the orders in hand, we are also expecting better orders and bigger orders for ammunition and also mines, anti-armored vehicle mines. And of course, rocket motor business is going on in full hog, and then that will continue exports and also to the domestic market.
Right. So you also had a fundraise plan of around 300 odd crore. Can you give us some update on what is the status of this? Because you will be needing that funds for your capital expenditure plans, I believe.
See, this fund requirement we estimated for the coming 3 or 4 years for phase-wise development at Orissa and also in the new Andhra Pradesh site. So presently, the requirement for our expansion projects is being met through borrowings and internal accruals. So once the bigger fund requirement comes, we may go for the QIP, for which we have taken the board permission.
No fundraise at least for FY26. FY27 you might need something. That's what you're indicating?
Exactly. Correct.
Right.
And would it be in the size of 300 crore or more requirement would be there?
Yeah, with the new developments and the allotment of land from AP government, it can be more.
Can you give us a size with regards to that? Because I'm just seeing that you need about a 500 crore of an investment for Andhra Pradesh. So would it be around 800 crore or more or so?
No, that is 800 crores is if Orissa land also comes. So together it can go to 800 crores, out of which the internal accruals should and also the borrowings are the present thinking, and QIP is also there. So I don't think there will be any issue related to fundraising.
Okay, well, thank you so much, Mr. Chaudhary, for joining and sharing that perspective on Premier Explosives. So, defense is going to lead the growth forward for this particular counter. But as usual, let's take a deep dive into the derivatives market. Let's bring in Sharad Dubey to bring us a snapshot for the trade today.
Interestingly, Anushi, the market has gone into a very small range, and of course lack of triggers are also there. That is what the market is actually moving around with. But let's just see how the Sensex is moving. Let's take out the heat map for Sensex where the action is, and we see largely M&M Eternal in the green. Titan also is showing a good strength, but Tata Motors PV, that has taken a big beating. That's down almost 5% odd. Let's look at the contracts, how it's actually panning out for Sensex. Not much movement, and actually the open interest is shrinking a little bit as well. Looking at the contracts, it's a kind of, action has moved to a little bit of puts, especially coming in that 84,600 level marks. But let's move on to the BankX. That has also seen a narrow range movement, but still in the positive, especially aided by HDFC Bank. And also the another group of banks which should be in focus as per BankX top trades. This also includes SBI and IndusInd Bank. So most of the constituents are in the green. Overall, the action in the contract space is something which we are looking at, but the important stocks which should be in your radar. The first one, of course, strong longs being built up. These include Siemens and Angel One. That's a good up move coming in. Most of the capital theme stocks are also rising in trade. Short covering, let's see which stocks are up front. Samman Capital in Yes Bank make it to the list. Long unwinding, that's on the negative side. We see BDL and Vedanta make it to the list. And the last but not the least, the short build up, Tata Motors PV and Inox Wind, reactions of the earnings coming forward. So this is the action in the FNO space.
Right, Sharad. Thank you for that FNO snapshot coming in from BSE. Moving on, Arvind Singhania, the Chairman and Managing Director of Ester Industries, is now joining us to discuss its second quarter numbers. Sir, firstly to start off with, how has the second quarter panned out and what is the outlook for the second half of this financial year?
Well, the second quarter was impacted, as we have identified, largely because of two reasons. Number one, there's been big dumping of polyester films by China, Thailand, and other countries at predatory pricing, at ridiculous pricing, which has impacted the domestic margins. And secondly, because of the US tariffs, our export margins have got impacted. Now, we are expecting that both of these concerns will be addressed very shortly. We have applied, the association, the polyester film industry has applied to the government, to the Ministry of Commerce for anti-dumping against countries who are selling to India at predatory pricing. And we are very hopeful, because we have a very, very strong case. We are very hopeful of the government putting anti-dumping duty on the countries which are selling at unremunerative prices. And number two, we are seeing a lot of media coverage that the US trade deal is going to be announced very soon, which will sort out the problem of the export margins, because America was one of our most important markets. So both these things, once it gets addressed, I think the second half, well, honestly speaking, I think the third quarter of this year will not be as good. It will be better than second quarter, hopefully, but not as good. But once these two issues are resolved, we should be back to profitability, more than decent profitability.
So a couple of questions from my side. Firstly, any timelines on when the government might come out with an anti-dumping duty? And secondly, in the second quarter, if you had to quantify the impact of trade tariffs on the company, by how many basis points did it actually impact your margins?
If I were to put both the things together, I think it is tremendous. I think both the things put together are costing us close to about 10 to 12 crores a month.
And any timeline on by when can you expect the anti-dumping duty from the government side?
Not possible for me to give a timeline, but I think we have addressed our concerns to the government, and the government is very, very, is taking it up very seriously because we have a very, very good case.
Singhania, while there's uncertainties for the second half itself, would it be possible for you to give a guidance in terms of where FY26 would stand for revenues as well as for the margins as well? Because margins, we are looking at a sharp contraction, and while you did say second half did see that impact, third quarter would be better off. So just want to understand what's going to happen.
So the revenues for FY26 should be in the region of about 1,400 crores. Margins is very difficult to say because it depends entirely on when the anti-dumping duty will be put and when the US trade agreement will be signed. If both these things were to happen today, I think there can be a sharp turnaround in quarter four.
Just also want to understand on the overall sectoral picture as well, across your segments, which would be the ones driving growth going forward, and which ones in particular you see a higher uptick in terms of where the revenue is concerned?
Well, specialty polymers remains for us our major driving factor because it's a technology business, it's IP related. And like we have reported, there has been a sharp increase in the turnover and the profitability of specialty polymer business despite the US tariffs. We've been able to sustain that, and we expect the momentum to continue going forward, not only into the next year but beyond. We will have very solid growth. We expect very solid growth from the specialty polymer business. Even on the polyester film business, once these two issues are sorted out, we expect the momentum to continue because there is a very sharp increase in demand for polyester film. And we are now focusing more and more on value-added products. And once the US trade agreement is signed, we will be increasing our sales to the US on the value-added products very sharply over the next year or 2 years, 3 years continuously. Our plan right now from our level of 24-25% value-added products in polyester film, our target over the next 3 years is to reach 60 to 65%. This will take cyclicality out of the equation completely.
Okay. Sorry, please go ahead.
Yeah, so this is it. So our main driving force is always going to be specialty polymers plus the specialty films because we're going to convert more and more commodity into specialities.
How do the margins differ across both of these?
Oh, of course, there is a big difference between margins and between commodity and specialty films. It's chalk and cheese.
What's the quantum of difference? If you can give us that breakup as well.
Well, the difference could be as much as on an average, I would say the difference could be about 40 to 50 rupees a kilo.
Got it. Also want to understand on the overall multi-year agreement that you've had with Nike, how would that lead to revenue growth for the company? Just want to understand on this particular agreement as well.
So this agreement is not with Ather Industries. This agreement is with Loop, our joint venture partner. So as you know, we have signed a 50-50 joint venture with Loop Industries of Canada. So the new company is called Ester Loop Infinite Technologies Private Limited. It is 50% held by Ester and 50% by Loop. And Loop has signed this agreement with Nike. And the material will be supplied by Elite, which is Ester Loop Infinite Technologies. The plant is coming up in Gujarat at a capex of about 1,600 crores. Expected startup date is end of 2027. So we expect to sign up a lot more deals with the major brand owners around the world to supply sustainable material. And this plant is unique because it will be one of the first for textile to textile recycling. And it will go a long way in solving the textile problem, the textile waste, polyester textile waste problem in India. This was also mentioned by Honorable Prime Minister in his Mann Ki Baat in March 25. So this will go a long way in addressing and clean up the textile waste, polyester textile waste in India.
Thank you, sir. Thank you for joining us and giving us the way ahead for Ester Industries. Well, that was the management of Aster Industries. Avinash, you heard the management. They're expecting the second half to be better. They're also expecting anti-dumping duty to come in for one of its key products. And given the fact that if the India-US trade deal signs off, then that leads to a lower rate that could also be beneficial for the company. So how are you looking at this counter Aster Industries at the current valuations?
No, I think, Somit, whatever negative had to happen is more or less factored into the price. So I think, downside is now protected. The company has a very strong product lineup, has been a very well-established player in the polyester, film packaging space. And I think the specialty business is one of the key drivers for them. So, once the anti-dumping duty comes in, obviously the US-India trade deal happens. My sense is that January could be a kind of a recovery month, and I think we could possibly see a softer third quarter, but I think the fourth quarter could be a pickup quarter. So I think longer term, yes, I think the company has the potential to bounce back, but we'll have to wait for at least the December quarter to culminate. Till that time, from our side, it's a hold. We would suggest that it's better to wait for the December quarter numbers and then take a fresh call.
Okay, so hold is currently the view for Aster Industries. There might be some pressure in terms of how the third quarter would also pan out, considering what's happening on the macro side. But viewers, that's all the time that we had on this edition of Small Cap Buzzers. Stay tuned for India Market Close coming up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
You're watching India Market Close here at NDTV Profit. I am Mahima Vachajani and with me is Sharad Dubey. Well, there you go. As I speak, we've crossed that 26,000 levels. Just 3 points or 4 points odd above that 26,000 levels. You know, I was going to start by saying that, you know, the traders today are trying to tease that 26,000 level, and we've, you know, reached that 26,000 level at the day's high point, up 0.4% for the Nifty 50. We did close above the 25,900 levels on Friday, and as Sharad was pointing out, that we've been closing on a higher end for the 5 consecutive past days, as we've seen on the Nifty 50. Now slightly above the 26,000 mark, and we'll have to see as to now we'll have to see as to how today's day ends, whether it is going to be below above the 25,900 level or above the 26,000 levels is something that we'll have to watch out for. But let's try to pull up the Bank Nifty as well and see as to how Bank Nifty is doing at its day's high point as well, almost at its day's high point, up 0.7%, and this is led largely by the rally that we've seen in PSU banks. Private banks also doing fairly well in trade today, by the way. Let's try to pull up the Nifty 50 heat map and see as to what's changed there. Tata Motors leading that pack, up 2%, followed by Tata Consumer Products. So Tata names doing fairly well. Bajaj Auto, Max Health, Eternal, Eicher Motors, M&M, Maruti. A lot of auto names are doing very well in trade today. Eternal seeing gains of about 1.4% as well. But something that's not doing well includes some names like Jio Finance, Ultratech, HDFC Life, Interglobe Aviation, as well as BEL. Let's try to pull up the sectoral heat map, because that will give us a picture as to what sectors are doing right now. PSU Bank still leading that chart right now, followed by something like a Nifty Media, Nifty Auto doing very well in trade today. Nifty Private Bank also doing fairly well. Consumption has picked up 0.6%. Nifty Realty also up 0.5%. But something that's slightly not doing well is Nifty Defense, down by about 0.08%, and Nifty Metal almost flat as we speak. Nifty Pharma also flat as we speak. Let's try to pull up the advanced decline ratio, because that will give us a picture as to what broader end of spectrum is looking like. That gap has narrowed. We were at around 1500 odd advances at the 10:30 a.m. or so, but that has come down. So there, the kind of bullish momentum in the broader markets has slightly come down. You have around 1300 odd advances versus that of 1000 odd decline, so that 1.3:1 ratio, and the gap has narrowed. Let's try to pull up the mid cap 150 and the small cap 250. The mid cap 150 is still around 0.7% higher, in tandem with where the Nifty Bank is. The small cap 250 also up around 0.7%. So both in line with where the benchmarks are. Let's try to pull up the BSE 500 before I go on to Sharad for the trading strategies. You have Tata Motors PV, which is down 4.7%. Astral on the back of the PVC pricing down by about 3% Easy Trip on the back of earnings not doing very well. Arkin Chemicals, Bajaj Holdings as well as KSL, some counters down by about 2 to 3% each. But on the other side, Narayana Hrudayalaya doing fairly well, up 10%. You have Equitas Small Finance Bank, IRB Infra as well as Just Dial up by about 4 to 7% each. That's with regards to where some of these names are concerned. But Sharad, just crossed that 26,000 levels and hovering around that 26,000 levels. What are the trading strategies looking like?
Well, it's a very strong strategy, Mahima, and especially Nifty Bank. You spoke about the PSU banking, but ICICI Bank and HDFC Bank are also participating in the rally, and they're having roughly 60% plus constituents in the Nifty Bank area. Okay, first I'd like to just point out the key levels which you should be actually watching out for. Nifty, that's around roughly 277 to 280 odd points from its lifetime high level. The support levels have given it on the lower side, 25,850, 25,950. Resistance, luckily if the closing is above 26,000 mark, 26,050, 26,080 is the number to look at. Nifty Bank support 58,700, 58,800, and the range for resistance is 59,100 to 59,300 odd numbers. Now I expect this benchmark to remain in a tight range, and the broader indices luckily are outperforming Nifty. Last 3 trading sessions we have seen value buying coming in the small cap space, but overall the market triggers are becoming lesser and lesser. So we can of course expect some reversals also maybe during this day's trade as well. Street is still waiting for US-India's trade deal. We saw a spike in last trading session, and overall the global cues are still remaining strong. European markets, however, they have opened mixed. So no clear trend is coming out as most of the global factors are getting digested. And banks, of course, ICICI Bank and HDFC Bank are helping the Nifty Bank as well, as we had just pointed out. So overall, it seems like this market setup is good domestically as well as globally. But how's the technical setup looking like? To answer all our queries, we are joined by Samir Dalal from Netweb and Sun Stocks Broker. A very good afternoon to you, Samir. Technical setup sounds pretty good, at least on a medium term basis and even on an intraday basis. What are your views for Nifty and Nifty Bank now?
Okay, so I'm not as much of a technical analyst as I am on the fundamental side. So I'll give you my broader view on the fundamentals. For me, basically, I think the markets are trading at valuations which are already a bit rich and a bit expensive, right? Earnings, if you look for the quarters, it's been a very mixed bag. Some have been decent, some have been subpar, but nothing exceptional to speak of. Now, the basic problem we face going forward is what are the triggers? And while you were speaking earlier, you said we are running close to the end of triggers for the short term. Yes, absolutely, we are running short of triggers for the near term because all the the Bihar elections is done. US trade deal is going to get signed. It's kind of put in the price. But you got to remember the US trade deal that gets signed will never be as good as what we used to have before the imports were put in. So it'll always be worse off than that. The question now comes is, how will we be compared with the rest of our neighboring peers who we compete with in exports for those markets? And if it's in the similar lines as them, then it kind of just brings us back to on export front where we were. But on import front, it opens up a lot of avenues for imports to come through, which will probably bring down some pricing in India, which could be margin negative for companies that are doing business in India, right? So we got to look at all of those things. So I think it's going to be buy the rumor and sell the fact when the actual trade deal is signed. The next real triggers for me in the market will be Q3 numbers now, which are probably a month and a half away. But I think that's when we'll first start to see positive upticks from the GST cuts and from all the efforts that the government has been putting in. But for me, even though the market continues to rally the way it is, it's being driven purely by liquidity from domestic market. But there are two big problems when it comes to the liquidity-driven market. One, there is a constant flow of IPOs that is happening, which is sucking off liquidity. And two, the FIs continue to sell. So as long as the FIs continue to sell, it could be problematic for the markets.
Right, absolutely. We also have Hemen Kapadia of DR Choksi FinServ joining us now. Hemen, your view is very crucial right now with regards to where the Nifty 50 is concerned. We did touch the 26,000 levels. And right now, 12 points above that 26,000 levels. How sustainable do you think this is?
Very good afternoon. Thank you for having me on the show. It's always a pleasure. I think 26,100 was the level, 100, 104, where we've turned back twice in the past, Mahima. So, frankly speaking, we need to take out 26,104. On the positive side, you have the Bank Nifty doing well. We're at all-time highs. So, outperformance over there. Stocks like Reliance have bottomed out. So, things are looking okay. But we need to take out 26,104. Even IT, which was wobbly, has now stabilized. It's forming a medium-term base, and things are beginning to look up. So the VIX has also come sub 12. Everything seems to suggest that markets are looking good, but somehow that all-encompassing bull run doesn't seem to be yet. It still seems a bit narrow, but setup is positive. I think as long as we take out 26,100, I think it would be fillip to the bulls, basically.
Okay, so setup looking positive, but kind of bull run that everybody in the street is expecting right now is yet to come, as per Hemen. Hemen, despite of that, do you have buy calls today? What are the picks that you're looking at?
Yeah, looking at contract call stocks which have come off significantly are at supports with oscillators turning positive. Okay, firstly a buy call at DMart. It's negative today, but it's virtually fallen off a cliff. 49.52 sub 4,000. Now stabilizing. The daily oscillators have turned positive, giving crossover buys after reflecting positive divergence. So one can buy DMart at 4040, stop loss 3990, target 4140. Second one is Hindustan Unilever, same logic, off from 2770 to sub 2400, has formed a mini base on the daily chart. Oscillators have all given crossover buys. Stock seems set for a shorter term bounce. So one can buy HUL at 2420, stop loss 2380, target 2500.
So both buy calls coming in from Hemen, HUL and Avenue Supermarts, consumption names, interesting. But moving on to our next segment, our stock of the day segment, Tata Motors PVs under pressure of JLR facing setbacks from cyber attack and even US tariffs. Joining us is Puneet. Puneet, can you just give us like the entire reason why the stock has actually fallen? Is it just the FY26 guidance cut, or is something more to it?
Well, that is one of the key aspects, but it looks like it will be a tougher turnaround for the counter. And when you likely see the 3 to 4 key reasons, first one's of course that the cyber attacks as well as the US tariff had a big impact on Q2. And subsequently, it seems to be having an impact in Q3 as well. The second key point is that Jaguar and Land Rover has actually gone ahead and cut guidance for FY26 on both the EBIT as well as on free cash flow, which was expected to be near zero in this year, will now be in the negative territory. The third key reason is that the management is expecting that impact on JLR business on Q3 in terms of production. And finally, that the India PV business, that's some silver lining in all of this, but it's unlikely to offset the drag that we've seen in the Jaguar and Land Rover business. That's the 4 key reasons. So let me first highlight all 4 of them. The first one being the JLR cut. It was 5 to 7% earlier, has been cut to just 0 to 2%. It's a multi-year low in terms of EBIT margins for Jaguar and Land Rover, while the free cash flow is expected to be an outflow of £2.2 billion. FY25 was the first year where the free cash flow was positive for the whole company as a whole, when the commercial vehicle division was there as well. So this is going to be a key negative for FY26. When you look at the other impact of cyber attacks, the company has come out and quantified this. They mentioned that cyber attack resulted in a loss of about £196 million, and the tariffs impact, which was there in Q1 as well, was a £74 million impound. Now, when you look at the impact of JLR production, 20,000 was the key impact in Q2. We are seeing over 30,000 units that will be impacted in Q3, with the total loss production at 50,000 units. The company sold 4 lakh units in the last year of FY25. So this is a subsequent impact on the business going forward. When you look at the outlook, what they mentioned, they're expecting the PV margins to grow in double digits in the second half of FY26. This will get the PV margins to almost 5%. And we mentioned the guidance for Jaguar and Land Rover, but this won't have the subsequent impact to offset the losses coming from the JLR business. Finally, in terms of brokerages, something like Jefferies is what we've highlighted. They maintained a target price of 300 rupees per share with an underperform rating, and mentioning two key points. The first, that they're seeing multiple headwinds for the Jaguar and Land Rover business, including increased competition, as well as what they're seeing in China right now with the increased taxation, and that benefit is now gone. The PV business, as mentioned, is unlikely to see any kind of offset for the JLR drags, and that's largely the reason why the stock is down today. In discovery prices, the PV business did get a higher value, but this is going to be a turnaround story you're going to have to watch for, but wait for a little while for it to actually turn around.
Interesting, the street will be expecting one more turnaround from Tata Motors, and interestingly, if you look at it, almost 70 to 80% of the SOTP valuation comes from JLR. Well, that's pretty interesting on that. Samir, I needed your views on that, especially for Tata Motors passenger vehicles. We have seen largely, you saw kind of a negative impact coming on the earnings. Will this pressure continue more in the coming quarters, or is Tata Motors, PV still not out of the woods yet?
So, to say the stock price is out of the woods, I wouldn't say totally out of the woods, but is the worst for the business probably over, this kind of cyber attack and things? I don't see that repeating multiple times, and if it does, then obviously Tata Motors, the management needs to get its act more in order than they have. So like I said, fundamentally the worst is already in. We know the losses that are going to happen. To be very honest, I'm a little surprised that the stock reacted even a little bit negatively the way it has, about 5% down today, because we knew, the company had very clearly indicated that production losses were there in the second quarter and they were going to continue, and they were just going to scale up operations in quarter 3. So this is nothing that the street didn't already know. So a little surprised by that, but yes, given the fact that cash flows are going to be negative, the street doesn't like that at all. It means that you're going to have to raise borrowings, because like you also said that the bulk of the profitability comes from Jaguar Land Rover, which is now going to be actually losing some money this year. But I think over a period of time, we will see them recoup. The impact that came from the US tax duties is also now going to stop impacting them, because the US and UK kind of have a trade deal in place. They know exactly what they're going to have to bear, and they're going to be able to start their exports back to the US, which is a big, sizable, almost one third of the total sales of the for Land Rover. So I think things will start rebounding. Is the stock probably going to go grind a little longer? I think that will probably happen, but I think there is good upside over the next year and a half. So for me, I take a contra call and actually go long on a Tata Motors at this point.
The contra call coming in and going long, as Samir has stated, for the company. But moving on, CBDT chairman Ravi Agarwal has spoken exclusively to NDTV Profit on tax collections, TDS rationalization and steps to reduce litigation. He remains confident of meeting this year's budget target and says more simplification is on the way. Listen in to a slice of that conversation.
You should appreciate it in this manner that the due date for filing the tax return for an audited tax return is 10th of December. So at the time of filing the tax returns, also self-assessment tax is paid. And then apart from that, there are 2 advanced tax dates also, which is 15th of December and 15th of March. So there also the revenue would come. So then we will be able to sort of compare the trend. The other very important aspect is that the TDS rates were rationalized last year, which would have implication here. Also implication in terms of the reduced refund claims. So it may be reflected that the refunds are, the growth is negative, but maybe that is also because the refund claims have also gone down. So therefore the gross collection minus the refunds net, right? Since the refunds claims have gone down, so therefore we cannot compare just the last year's refunds and the current year's refunds. I am hopeful, I am very sure that by the end, when we close the year, we should be able to meet the target.
You rightly mentioned about the TDS rationalization which happened in the last budget. Are you also seeing and planning to do further easy compliance as far as TDS are concerned?
See, TDS has already been rationalized, and in the Income Tax Act 2025, beginning 1st of April 26, the provisions have been rationalized. It is easy to understand. We are seeing that, okay, what could be a further rationalization or simplification in terms of the compliance, you see. So therefore, once we are coming up with the rules and the forms, we are trying to see what are the pain points where these could be this gap could be plugged, and we are engaging with the stakeholders, the big stakeholders who are filing TDS statements. What is their issue, which is prompting them to file multiple correction statements. You see, so that is also what we are working on. And at the end of this exercise, I think I'm hopeful that once we come up with these rules and forms, it will be a simplified version.
Do we expect any dispute resolution mechanism in the upcoming budget, sir? Any thought process in that?
So far as budget is concerned, I will not be able to make a statement here at this point in time. But we are conscious about putting in place a system which minimizes disputes. And in that direction, last year we came up with this updated returns, you see, concept, wherein taxpayer, in case there is a gap that a person finds or the department finds and communicates with the taxpayer, there is a window for the taxpayer to actually update the return. So that is also one step towards reducing disputes.
All right, so that was the CBDT chairman exclusively speaking to NDTV Profit with regards to where what you can expect this time in terms of where tax reforms are concerned. But moving on, a lot of order wins and MOUs are being signed with the Andhra Pradesh government. And to take a look at what all stocks or what all contours could stand to benefit from these MOUs or order wins and what are actually buzzing in trade today, let's take a look at some of these names. First is Anantraj to invest around 4,500 crore for development of data center IT park. The stock is up by about 2.7%. Next, you have Trualt Bioenergy. We also spoke to the management of this company today with Andhra Pradesh government for aviation fuel plant. They've signed a non-binding MOU and will be developing aviation fuel plant going forward. You have Raymond. This is setting up 3 manufacturing units in Andhra Pradesh going forward. You also have EPAC Durable, which is set to invest around 1,000 odd crore. Going forward, of course, Raymond investment at that 1,200 odd crore, but you have EPAC Durable that is going to invest over 1,000 odd crores for expansion in Andhra Pradesh. You have Websol, which is going to explore development of 4 gigawatt solar cell plant also there going forward. Premier Explosives to invest about 500 odd crores in defense and aerospace manufacturing in Andhra Pradesh. You also have Garden Reach Shipyard, which signed MOU with Andhra Pradesh Maritime Board. Coromandel up to 2,000 crore of expansion for green ammonia and fertilizer, and something like a PG Electroplast, which is set to invest around 1,000 crores for manufacturing the Sri City. Lastly, Sirma SGS will also be in focus. 1,595 crores of PCB manufacturing plant is something that they're planning to set up. So all of these counters are going to benefit from a lot of MOUs or order wins that have happened with the Andhra Pradesh government. Hemen, I'll quickly come to you. Any of these names, a lot of these names are buzzing in trade today, but any of these names where charts are looking attractive to you?
Well, frankly speaking, not exactly. They are sort of all, all over the place. So there isn't anything which sort of, is compelling or stands out. Some of them, if you take a slightly longer term point of view, I am basically bullish on realty stocks from a longer term point of view. So they all look set to make new highs. So if you have a longer term view, yes, I think something like Anantraj would obviously make sense. But currently, they still are in the throes of a correction, which probably is not yet over.
In this current list from Andhra Pradesh, Anantraj, that is something which Hemen is choosing. But important news flow coming in, and as from agencies, Bangladesh Tribunal has ordered a death penalty to the ex-Prime Minister of Sheikh Hasina, and that's important news flow coming in, and we'll be getting you more details in this segment as well. And it's, I think it's a life imprisonment is also there. One charge is there.
So I think there are 3 charges. Two of those charges are quite serious. The tribunal, Sheikh Hasina was found guilty on 3 counts: incitement, order to kill, as well as failing to take action against perpetrators and liable to be punished is the kind of verdict that's come out. Charge 1, of course, is life imprisonment. Charge 2 is a death sentence for ordering use of lethal weapons, drones as well as helicopter. And this is the ex-Bangladesh PM that we are talking about here, Sheikh Hasina, sentenced to death. Now, this is not something that we hear, in an everyday conversations.
Yes.
And an ex-PM being sentenced to death is not something which is normal. But that's the breaking news that's flashing on your screen right now. And as I mentioned, there's 2 charges against her. First one being life imprisonment. The second one being death sentence for ordering use of lethal weapons, drones as well as helicopter. On 3 accounts, this is incitement, order to kill and failing to take action against perpetrators, and is liable to be punished. So that's, with regards to where this entire development has come in, with regards to where the entire Bangladesh situation is concerned right now. Has been ordered death penalty. We'll have to see as to how this pans out going forward, because there has to be some
tribunals thing, so there might be some other court orders as well. And what's the view coming like for the country and the entire SAARC region, how things pan out? That'll be pretty interesting to see. Of course, some disturbances are definitely there, but let's move on to the markets now. Coming back to the markets, if we can just do the check of the markets, of course, Nifty Bank, that numbers have been touching its record high levels. Just let's get back to the markets. Slight dip coming in, but yes, Mahima had mentioned that 26,000 markets, slight dip coming in, 25,900 odd numbers, and even Nifty Bank, we see a slight dip coming. Samir, in the banking space, they have done really well, and we also spoke about it. But if we had to choose between the PSU banks or the private banks, PSU banks have run up, but is there still more value left as we compare it with the private banks? What are your views on that?
So there'll always be value left when it comes to PSU banks if you compare them to private sector banks, right? Because the valuation gap that exists will remain. Can it narrow? That is the question that we got to ask. And I think we've seen some amount of narrowing, and I think we can see maybe another little bit, maybe another 10% of the gap narrowing, in the sense the price to book multiples could get closer. So there is little more upside for some of the PSU banks, especially the high quality PSU like SBI, like a Canara Bank, like a BOB. I think those could probably move up. But for me, I continue to remain quite positive. I've always remained positive on the banking space, because if we believe that India growth story has to happen without the entire banking and financial sector, I don't think that's going to happen, because the requirement of funds is always going to be there, which eventually has to come from the banking system through deposit growths. So where I would actually focus is not on the guys who is, being able to grow their book, but on the guys that are able to garner good amount of deposits at decent cost. HDFC obviously is one of them that's been able to do that. They've been replacing high cost borrowings with CASA, and that over a period of time will benefit. But then I would also look at mid-cap banks, which we've always said, IDFC First, IndusInd, and Axis in the large cap is something that we also like.
All right. Okay, Samir, thank you so much for giving us those insights. And of course, viewers, it's time to slip into a very quick break, but do stay tuned. Up next, we'll bring you all the chatter behind the dealing room in our segment, Word on the Street.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing
Welcome to India Market Close with Sharad, Alex and myself, Hiral Dadia. Clearly, if you see in terms of markets, an interesting day of trade because we've reclaimed that 26,000 mark yet again. And we're trying to again inch towards that, but 25,994 is where Nifty 50 is trading at. Let's pull up Bank Nifty on the screens because we already hit a record high in terms of Bank Nifty early in trade today, and that's where Bank Nifty has maintained itself. Let's look at the contributors on Nifty 50 as well, the ones which are actually contributing to the kind of gains that we are seeing there. Coming in from HDFC Bank, Eternal, M&M, ICICI Bank, that's what is giving that kind of support. Whereas what's trying to pull broader markets or even markets lower is a Reliance Industries, Adani Enterprises, because of the rights issue, is adjusting its pricing today. ITC also slightly under pressure, as well as Ultratech Cement. In terms of broader markets, let's pull up the mid-cap and the small-cap index and see what they are doing in trade with the kind of surge that's coming in terms of Nifty and Bank Nifty. Again, you have the mid-cap 150 also, which is nearly at the day's highest levels with gains of 0.7% coming in there. And the small-cap 250 at the day's highest levels with gains of 0.7%. So that's what the markets are looking like. But let's also get in Sunil Kaul, Global Emerging Market Equity Strategist at Goldman Sachs, to talk to us about how Q2 has been so far and what could be anticipated going ahead. Sunil, welcome to the show and always a pleasure to speak to you at NDTV Profit. We were just doing a report card analysis of the second quarter. Now, basis our internal assessment versus what Goldman Sachs thinks right now, your initial comments on the second quarter.
Yeah, thanks for having me on. Look, I think the second quarter numbers have been pretty decent. We look at MSCI India Universe, which is sort of roughly 160 odd stocks, and second quarter fiscal numbers there have been about 13% year-on-year profit growth, which is better than what we and the street were anticipating, which was around 9% earnings growth. So the season has come in better than expected, about sort of 4 percentage points. If you look at the full year number, it's also tracking at that better than what the historical track record has been, sort of half year into the full year numbers. And so there is a sort of potential for upward revisions for the full year number. And so far, beats higher than misses. The good one of the encouraging data points, though, is that the beats have come in from the top line. So the MSCI India ex-financials revenue growth number is at 8% year-on-year, which is at a 10-quarter high. So the quality of numbers is actually pretty decent. And as I said, the reporting season has come at a decent pace. We do think that trend continues next year, and we are actually looking at earnings growth, which roughly around 10-11% would be for this calendar year. That should improve to about 14% next year, which is a key reason for us being more optimistic on the market.
Hi, good afternoon, Alex here. And so therefore the natural follow-up question to that is that there has been an earnings beat broadly in the second quarter. We're anticipating that the second half and next year indeed is going to be better. At what point do you see that up move in the markets? Because to a certain extent, we're still depressed compared with several markets globally.
Yeah, that's right, Alex. Look, I think, as I said, the September quarter numbers have been decent, but we also know that in some sectors, obviously there was a bit of disruption from sort of GST-related inventory destocking, deferrals of purchases, and so some of that will normalize into the December quarter. We're also anticipating the bank numbers to be even better than they have been in the September quarter onwards. And so from December quarter onwards, we are expecting earnings to pick up meaningfully. I would say, look, I think as I said, for MSCI India, our profit expectations are around 14% for next calendar year, calendar 2026, which is broadly in line to a tad better than what we have for the emerging market pack as a whole, which is 15% or so, and Asia. But they are also upwardly distorted by a couple of tech-heavy, AI-heavy markets like Korea and Taiwan, where earnings continue to be at close to 30% plus. And so if you adjust for those couple of markets, India actually stacks up pretty well relative to the region, probably at number 3, number 4, after Korea and Taiwan, which still have very, very strong numbers this year, but also will carry into the next year. So I would say overall, still pretty decent earnings expectations at 14% next year overall.
Hi, this is Sharad here. Sunil, speaking of financials, a lot of good numbers had come in. Even the PSU banks, private banks, they did give a good kind of H2 numbers outlook as well. So how are you looking at this financial space? Where does the risk reward lie right now?
Yeah, I mean, that's a great question, Sharad. Look, we have been positive on financials. In fact, when we upgraded our market, India, to overweight a couple of weeks back, we continue to remain positive on financials. We think financials will be one of the leaders in the market. As you said, numbers have been decent. I mean, asset quality has been stabilizing. We think a lot of the measures that the RBI has done over this year or so, I mean, right from not just rate cuts, but improving liquidity, and then the recent measures about easing bank credit, we think cumulatively a lot of those measures should free up about 2 percentage points of total bank credit into the system. And we think as demand improves, your credit growth should start to improve as well. So we are expecting around 15% compound earnings growth for the banking cohort as a whole for next year. And it's a sector that we know is trading still at mid-cycle valuation. So the risk reward looks pretty attractive on the sector. And we do think financials, along with consumption pockets, would be the leaders of the market in this leg of the rally.
Sunil, that's interesting. You're talking about financials and consumption that will lead the rally probably. Within financials, which basket would you refer to? Would it be, your pure play banks? Would it be your NBFCs? Would it be your insurance companies? What will that pecking order look like according to you in terms of financials, number one? And two, in terms of the other sectors that you mentioned, your consumption sector, defense materials and OMCs, what would be the pecking order that an investor should look at so that Nifty could probably go to that 29,000 target?
Yeah, look, I think within financials, we have a preference for banks and NBFCs over insurers. We are neutral insurers and overweight the banks and NBFC pack. I would say large private banks, maybe the largest sort of PSU banks, we sort of favor both. So we don't have a strong sort of preference between private versus sort of the large cap PSUs. But overall, most of the measures that have been announced by the RBI that at the margin benefit mostly private banks, but also NBFCs. So we like both those cohorts over insurance companies. Regarding consumption, we like to play it through a variety of sectors. We are overweight staples back. There we think the volume numbers should continue to improve going forward, given not just the GST related tailwinds, but we think that could persist over time. But you also have, as we look over the next couple of years, you have more elections coming up. You also have the pay commission. The tailwinds from those should also help the staples back. We continue to like the autos. They have done well. But we think it's still a much under-penetrated category compared to staples, and we still like within autos the mass market and the compact SUV segments. So both those packs, autos and staples, should do well. We have upgraded recently durables as well. So pretty much the broader consumption pack we like. The only pocket which we have downgraded recently is the discretionary bit wherein there is more competition, so paints and some of the other sort of categories there. But otherwise, like the broader sort of consumption theme, including tourism, by the way, which we play through both airlines, but also some of the online players. The one thing I would add is that if you look at the consumption stocks as a cohort, you did have a rally after the GST announcement, but all of those gains have been sort of taken out in the last couple of months, and so I think the risk reward on the broader consumption pack still looks pretty good. So I would say financials and some of these consumption related sectors is where our preferences lie.
Sunil, and just this conversation drawing to a close, it's already been fascinating. Where I just want to maybe not necessarily a counterpoint, but just to kind of take you a little further down the road to talk about the implications of everything that's happened so far. We're yet to see a private capex boom, and I know a few large companies are saying that they will have to bolster capacity. We're yet to see that, but when do you see that from your study of these various sectors? When do you see that taking place, and what are the implications according to you? Because on the one hand, you're saying that consumption will get a leg up through some of these measures, but durably, one would assume that jobs and paychecks and all of those things, the flywheel, will only really kickstart with private capex.
I mean, that's right. Look, I think over the next few quarters, we do have a stronger preference, as I said, of financials, consumers, over the export-oriented segments and industrials or infrastructure segment. You're right. I think private capex, we have seen a few sectors, some green shoots there. The announcements have increased, but or the intentions have increased in some of the private companies, but we haven't seen that translating to the orders yet. And the reason we are underweight the broader industrial pack is also because we do think that the government will continue to adhere to fiscal discipline, which means at the margin, if you're spending more on consumption, the infrastructure spend will have to continue to moderate, which is where that view is coming in from. Obviously, we know that the supply side conditions are there with the capacity utilizations being high, and the government is doing its bit as well. And so, but we haven't seen yet that playing out in the capex side of the story, barring a few pockets here and there. So I would say, in general, therefore, the preference remains towards the other bits. The one area within the broader infrastructure pack, if I may say, is both power and defense. That's something we like as a theme. I mean, defense is obviously a structural theme broadly, but there the visibility on the order book is very high, and so we like the defense plays, not just the large cap and government related entities, but also some of the more private players, which are getting in more high tech segments of the defense pack, as well as power generation that remains a strong theme in India. So there are bits of the broader infrastructure we like. But the segments that are more linked to government capex essentially would be the ones that will lag in the market.
Absolutely. All right, absolutely. Thanks so much for taking the time. A pleasure having you on the show, and look forward to our next chat.
Thank you.
Right, that was Sunil Kaul of Goldman Sachs. We've joined right now by Aditya Garwala of Invest for Edu as well as Siddharth Khemka of Motilal Oswal. Gentlemen, thank you so much for taking the time. As always, pleasure having you. Good afternoon to you. Aditya, I'll start with you because we're seeing a bit of an up move, right? And we've reclaimed the 26,000 mark. We're currently trading just nudging above that. The question is that going to be durable? And we saw a similar move upwards in the last half hour of Friday. Do we see a significant up move from this point, or do we consolidate a bit here?
Afternoon, Alex. Thanks for the show. My sense is markets will eventually break out of this hurdle of 26,100. Might just consolidate here for some time, but matter of time before it breaks out. May not happen today, might happen tomorrow, day after tomorrow. But overall, my sense is you will see a new high on the indices. The way the Bank Nifty has been projecting, and the setup tells me that 26,100, 200 should be taken out, and you're headed towards 27,000 on the upside. So there's no doubt about the fact that there is bullishness. The undertone is strong, and eventually markets should break out of that hurdle of 26,100, 200 that has been holding on for some time now.
Okay. What about individual stocks that you're looking at? And indeed, we're seeing the 26,000 mark being pretty hard to hold on to for the benchmark Nifty 50. But what individual stocks are you liking right now?
A couple of them, Alex. One is from the capital goods space rather. Cap goods. BHEL is looking quite interesting to me. After a bit of a run-up, stock went into consolidation. We are seeing an up move again in trade today. My sense is it will build onto this move, and further gains will be seen here. So for a target of 310, I'll be a buyer here with a stop loss at 275 on the downside. And Biocon from the pharma space is the another call. Again, this is one stock which has suddenly made a move and charging ahead. So at current levels, I still believe there's room on the upside. I would recommend a buy here for a target of 435 on the upside and a stop loss at 410 on the downside.
That's pretty interesting. Bicon coming in, stock is up almost 2%. Hi Siddharth, good afternoon. Sharad here. Siddharth, we are speaking about defense stocks also, and defense stock seems to be a structural story. But in this case, how is the defense and the PSU, I mean to say only the defense pack, what's your view on that? Will we see more sustenance going forward in the long-term basis?
Hi, Sharad. Good afternoon. I think if you look at one space where the capex continues to remain strong, has been defense, and for unfortunate reasons, you may say so, but that is one space where we are seeing continuous flow of order inflows, special budgetary allowances is being given. And we also see that the government has been supportive of the sector in the sense that a lot of new orders that are being given out even to foreign players. There is a minimum quantity that needs to be made in India, the technology transfers. So I think this is a structural story for the next 10 years. I think defense as a space, both the public sector defense companies as well as some of the private sector companies will scale up and not only provide for the Indian government needs, but exports also forms a big part of the government's plan of reviving the sector. So we remain very positive on the defense space. We believe that it's, as I said, as a long-term structural story. Now, within the stocks, I would say some of the leaders in their space, respective space that we like, Bharat Electronics, Bharat Dynamics, HAL. These are some of the preferred picks, even in the shipyard, if you look at Mazagon Dock. So all 3-4 of them have pretty strong order book. Execution has picked up. And I think valuations compared to the opportunity size is still comfortable. So we definitely see a lot of room for upside at current levels.
Interesting names that Siddharth is giving out, and in fact the defense rally is just yet to stay with us, Aditya and Siddharth, because right now it's the time to do the bull versus bear case, and it's a perfect example. A stock which actually opened lower saw a recovery to the tune of almost nearly 4 to 5% from the opening lows, and a good recovery. Whether the sustenance will be there or not, it's Glenmark that we're talking about. After that recovery, again, it's turned negative. We're seeing cuts of nearly 2%. coming in on this counter. Let's pull up all the bull and the bear case scenarios for Glenmark. Now, first up, if you see in terms of the first bull case, what has happened is almost a 3,670 crore AbbVie payout is what they saw, plus the ISB 2001 licensing that Glenmark did, that came in as a booster for the counter. And this is what actually gave Glenmark a huge financial flexibility to go ahead and clean up their legacy issues and fund growth. Now, to counter this, if you talk about the bear case, they've done a heavy cleanup, and that is what actually masked your second quarter as well. If you see in terms of the core operations, they were weak because their operational performance was mainly on the back of large write-offs that they saw. They did good amount of provisioning. There was correction when you talk about the India business as well. Inventory and R&D were concerns. Now, when you talk about the other bull case right now, we're talking about in terms of US and the European Union business, good growth in that range of 7 to 8.5% that did come in. But it was mainly the India sales which crashed to 165 odd crores, and that is a concerning area there. In fact, in the conference call, they did mention as well that India business will come back to normalcy from the third quarter of FY26. They are expecting a strong second half because their outlook is around 8,000 crores in terms of revenues. And if you counter this bear case, they are expecting two major cleanups in 2 years. Now, they've done two major cleanups in 2 years, and this is what is the major concern, because further down, if they do any further cleanups, it would be cumbersome. And secondly, they've said that their provisioning is going to be next to negligible going ahead. If you see their guidance for FY27, 17 to 18,000 crores in terms of revenues and 25% margin is what they've guided for. In fact, 23% is what they're expecting in the second half of the year as well. However, their near-term margins are still uncertain. So in spite of the 23% guidance, how will they be able to achieve that is the key question over here. Moving on, if you see in terms of the other aspects, their cash position post the cleanup is looking pretty strong. However, on a bear case scenario, their working capital has deteriorated, and this is despite lower revenues, and that is what takes you to what can be considered from here on. If you talk about their free cash flow, that has seen a surge. Their gross debt, that is expected to be zero by FY26, and the near-term margins still remain absolutely uncertain. So both the cases are pretty strong over here. The key over here is your earnings in terms of the second quarter was very weak. There was a lot of provisioning that was done, and that's the reason why the stock reacted negatively. The commentary that the management has given in the conference call is extremely bullish, and that's the reason why you did see that recovery that did come in as well. But Siddharth, let me take this question with you first. Between the bull and the bear case, earnings which are extremely weak, the commentary extremely strong. The company has done twice a cleanup in terms of their balance sheet. Would you still prefer buying a Glenmark at this juncture?
So yeah, Hiral, I think a very weak set of numbers. If you clearly see in terms of the near-term outlook, I think I would remain cautious. Weak fundamentals, high inventory-led adjustments, and as you rightly said, 2 times the adjustments have already been done. And if at all there was a case of another inventory write-off around the corner, I think the market will definitely punish the stock. Long-term, lot of opportunities, specialty portfolio, the ADCs, the derma, as well as the international markets. So I think, as you rightly portrayed, both between bulls and bears, the case right now, purely on back of the management's confidence, one can see that the downside could be limited. But for the upside to resume, I would wait for at least Q3, Q4 numbers for the numbers to start delivering what the management is promising.
So Glenmark down about 1.6% off the high point of the day, certainly, and quite wobbly, quite volatile in trade. But let's talk about certain other stocks that you should keep on your radar, and this is in our special segment that my colleague Somit Sarkar brings you. It's called Heard on the Street. This is all the chatter from the dealing room. Somit joining in now. Somit, good afternoon. What's on your list today?
Good afternoon, Alex. Multiple stocks remain in focus in trade today. Firstly, it's Emphasis, where there are sell flows on large HNI desk, and what dealers are indicating for Emphasis is the fact that there could be a potential block deal that could happen in the counter very soon. The promoter Blackstone is expected to be the seller here, and that's the reason the stock is down 2.5% on the back of a buzz of a potential block deal that is expected to happen soon. Apart from that, multiple stocks when it comes to large cap where we are seeing strong flows. Axis Bank, Dixon Tech and RVNL, there are buy flows on institutional desk on all these three counters is what dealers have indicated. Dixon Tech in fact was part of a segment a few days back as well, where we had seen strong flows on the back of strong export and strong orders expected, and again today it's highlighting in the dealer desk that there are strong flows coming in for Dixon Tech, and delivery volumes are also expected to be on the higher side for these three names. When it comes to Divi's Lab, there are buy flows on PMS desk. The stock has corrected a lot, and what dealers are indicating is that there could be a positive announcement related to one of its related to one of the drugs that to which Divi's is a supplier. So keep an eye out for Divi's Lab as well. For SRF, there are buy flows on large HNI desk. Dealers indicate that the stock should benefit from tariff reduction if and when that announcement comes in. That is the India-US tariff cut that is expected by the street. Whenever that announcement comes in, SRF could be one of the biggest beneficiary here, and the stock has also been an underperformer. So keep an eye out for SRF as well. PB Fintech, there are buy flows on HNI desk. Dealers are not expecting any big impact on yields owing to the GST rate cut. The insurance company, what impact they had seen, that they are not expecting the same to be passed on to PB Fintech, and that's the reason we are seeing such kind of a flows when it comes to PB Fintech. That stock is up around 5% in trade, largely on the back of expectations that there won't be any impact on the yields of PB Fintech. And couple of stocks that were a part of a segment on Friday, which are seeing strong buy flows in trade today as well. Firstly, it was Eternal. There were buy flows on FI desk is what we had indicated on Friday, and this is largely because Swiggy is finding it difficult to raise funds, and if Swiggy is not able to raise as much as they want to, then it would be much more positive for Eternal, and that's the reason that stock is also up around 1.7% in trade today. And the second one was Voltas, where we did indicate that there were strong flows despite the bad numbers. This was largely because of short covering. It seems to be going on today as well. The stock is up 2%, and also the street is taking confidence from the fact that the company was able to gain market share in a weak quarter.
That's two khabar confirmations coming in. Thank you very much, Somit. Eternal and Voltas. Out of this Eternal, that's an interesting stock. We had mentioned earlier with Alex also that the 300 odd levels is where the up moves was happening. Aditya, technically, does it seem that now Eternal will be back? It's a growth phase, a kind of a short-term up move more we can expect from the current levels?
Possibilities there, Sharad, without a doubt, because stock actually corrected and took support at those key areas of 290, 295, and from there it's trying to make a comeback. For a target of 320, 330 on the upside, yes, there is a possibility of a short-term bump up, but I would be a little skeptical for holding on to it for a long-term. A trading bet here definitely can be done for a target of 330 with a stop loss at 300 on the downside.
Let me ask you about another pack that has been doing particularly well. I wonder what the PSU banking pack is. As of this morning, it was one of the top gainers, and I wonder where it is right now. Pull up that index, and then later we can talk about the constituents as well. 86 points or thereabouts. IOB looking good. Bank of Maharashtra, CBI, Central Bank of India, Indian Bank, PS. I would think that PNB is one of the underperformers, in fact. But out of any of these that I've mentioned, Aditya, would you pick one of these, or would you go with a State Bank of India, for example?
Can go for a State Bank of India, but if you definitely have to pick one now, probably a couple of stocks that I'll go for, Bank of Baroda and PNB, because they have not chipped in yet as compared to your Canara Bank or maybe an SBI. So PNB at current levels, I wouldn't shy away from taking a long position for a target of 130 on the upside with a stop loss at 120 on the downside. And Bank of Baroda is second, which I still feel that there is room on the upside still left for a new fresh highs there. So for a target of 300 plus, I'll be a buyer in Bank of Baroda and place a stop loss at 280 on the downside. Overall, the PSU bank still looks very strong, Alex. And if you have to cherry pick one or two PSU banks, maybe Bank of Baroda and PNB at current levels, make a better bet.
It's pretty interesting on that PSU banking front, and for the second straight day, we are seeing a good strength coming in. Also, the buzz was there in the weekend that there would be a merger for the PSU banks coming in over the next
and that has
April
been in the
to May.
offing since quite some time right now, where they've started the discussions in terms of which PSU banks that can merge, but when it happens is the time that you can take it with a pinch of salt.
It's been a while, no?
Yeah, it's been a while that we've been talking about it.
Initial round of
mergers that happened, and now
place.
the second round, which is in the talks, but that we should take into consideration. But two other stocks, what I want to talk about is Supreme Industries and Astral. It's very interesting because it's a counter impact of a Reliance Industries that's, you know, that we're seeing on both these counters. Correct, because if you see both the counters as well trading under pressure, some mild recovery that has come in. Now, if you talk about these stocks, Reliance Industries has gone ahead and cut PVC prices, and this has been done by around 3 rupees per kg. Now, this takes the rate down to almost 70 rupees per kg. Now, why the fall? The reason why Reliance has cut PVC prices, and they've done this from the 15th of November. Now, from October 2025 till date, Reliance has nearly cut prices by nearly 6 rupees per kg. The government has confirmed that the DGTR recommended anti-dumping duty on PVC is what they have looked at. In fact, the ministry had recently looked at the BIS mandate as well on several polymers. Now, this indicates that the government from here on is not favouring anti-dumping duty as well as BIS implementation. And the absence of anti-dumping duty when it comes to all of these products, that may actually limit the primary stocking as well as it will also cap the volume growth when it comes to pipe companies in the second half, unless and until the demand improves. Now, the margin compression is what comes at play over here, because in the past, all of these companies would have purchased raw material at a higher price. Now that this price gets capped right now, or because of that 6 rupees per kg cut, it will compress the margins of both these companies, and that's the reason why you're seeing this kind of pressure. Siddharth, your view, not only on a Supreme and Astral, but even when it comes to Reliance Industries taking PVC as a product into consideration?
Yeah, I think, Hiral, if you look at if this kind of price cut, especially as you highlighted, the government's intention of not having an safeguard duty, I think that opens up the space for further price erosion and the margins hit. On its own, if you look at Astral, Q2 numbers were pretty decent. I would say revenue grew 15%, volume growth of about 21%. Margin saw a decent expansion of 100 basis points. Management gave a guidance, maintained the guidance where they broadly looking at a steady Q3, Q4. So I think apart from the news flows, some of these large players like Astral, Supreme, in terms of results and in terms of the overall numbers, they are pretty set. Supreme, unfortunately, the numbers were not that strong. I think margins were a little under pressure. So overall, building materials do not see that kind of strong growth. And to top it all, if the government's policies are not that supportive, I think the sector could remain under pressure. In the near term.
And we were just also thinking about this. It has a positive effect for the consumption players as well, to the extent that their packaging gets that much cheaper, one would assume. And of course, directionally, they've had the benefit of lower crude prices, which seem to be having a ceiling at this moment and not heading above that $65 per barrel mark for Brent in a durable manner. On that note, Aditya, thank you so much for taking the time and speaking to us this afternoon. Pleasure speaking with you. We have to slip into a very quick break. We'll get you on the other side more stocks that you should keep on your watch list, as well as the top buy today, sell tomorrow picks. Do stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome to India Market Close. You are watching NDTV Profit and looking at Nifty right now. It's near its day's high levels, comfortably above the 26,000 levels. Let's pull up the chart. It's near the day's high level, comfortably above the 26,000 mark. Of course, we'll be talking about the auto stocks as well, as Morgan Stanley has released a note on Hero Moto. They're upgrading it to overweight with a hiking target price to 6,471 rupees. Let's get in Puneet to actually understand why this broking upgrade has happened. Puneet, what are the key takeaways coming from this report?
Well, it's definitely on the back of strong quarterly earnings for Hero MotoCorp, touching 15% EBIT margins, which a number that's eluded them for a while now, and largely, upgrading the stock to an overweight, as you rightly said, target price of 6,471. Now, they've mentioned that the market share decline for Hero MotoCorp has actually now paused, which is a good momentum because it's something that hampered both Hero as well as Bajaj Auto over the last 6 to 8 quarters. And going forward, they are expecting that it's starting to see gains in the scooter segment, which has been actually outperforming the motorcycle segment over the last 6 quarters as well. Now, Hero has a unique advantage that while it has the EV motorcycle and EV scooters with the Vida brand, they've also launched multiple new ICE scooters, and that's what differentiates them with something like a Bajaj Auto. A better mix as well as lower losses for EV business is another key positive, which will give margins an additional tailwind according to Morgan Stanley. And finally, they've highlighted stock trades at 16.8 times price to earnings plus a 3% dividend yield. So it will give that comfort to investors who are looking to take a bet there. And here is where the differentiation lies for someone like a Hero MotoCorp compared to the other industrial players, with valuation comfort as well as margin tailwinds as a key trigger going forward.
That's a strong move coming in on a Hero Motor versus a Tata Motors, which is the stock of the day, seeing some major cuts in trade today if you have to look at the auto pack. In fact, let's get in Jay Bala as well. Jay, welcome to the show. Always a pleasure to speak to you at NDTV. Let's start off with the markets before we talk about stocks. We've reclaimed that 26,000 mark at around 230 in trade today. From here on, what should that strategy look like, and what are the levels that you would be tracking in terms of Nifty 50 and your strategy when it comes to Bank Nifty? Because a lot of positive calls now coming in, especially for the PSU banking space.
Hi here. I'm still positive on Nifty, and I had been projecting 29,000 for the Nifty since April, and Goldman Sachs has upgraded India to overweight with an objective of 29,000 just last week. And so when it comes to short-term levels, the Nifty is unlikely to drop below 21,153. If it were to do it, then we'll be revising our bullish objectives. Strategy remains buy on the dip. And when it comes to the banking index, I'm anticipating the banking index to scale fresh 52-week highs past 59,000 and 59,940. And it's already at fresh 52-week highs, fresh all-time highs. And the mid-cap index clocked fresh all-time highs just last week. And I'm sure the Nifty is set to follow these two indices. And the fact that mid-cap indices clock record highs is a signal of the market breadth widening. So I'm sure the Nifty struggle around 26,000 mark will be just fleeting. And once 26,104 is taken out, the only resistance for the market is an all-time high.
And so just a quick follow-up on that, do you anticipate that it could be taken out in this week itself, or do you think that the wait will be longer than that? And two, what individual stocks are you anticipating will do well in the near term?
Hi, Alex. Yeah, it is likely that the markets are likely to take out the all-time highs this week itself. The setup is quite encouraging. There have been multiple attempts to breach the 26,000 mark, and the number of attempts that markets make, the weaker the resistance becomes. So this is the fourth or the fifth attempt on the 26,100 mark. So I'm sure it will get taken out really quickly. I won't fix myself as being this week, but I believe it's just a matter of time. And when it comes to individual stocks, I'm bullish on two names here. Short-term calls on Aurobindo Pharma with a stop loss of 1,065. I'm expecting 1,500 to get touched for the stock. And the other half is from the tech space, Coforge. Coforge, again, a short-term call with a stop loss of 1711 with an objective of 2025.
Got it. Okay. There's a stock that is buzzing in the broader markets, and this is Ajax Engineering. This is on the back of a Citi note, presumably, because the stock is up about 7%. It has upgraded the stock to a buy with a target price of 735, which implies an upside even from this elevated level. They say that the worst may actually be behind the company at this point. They say that they expect demand and margins to trend upwards, and that improvement in concrete demand is something that is boding well for the company. The market share recovery is also something that should work in the favor of the company going forward. And they're also saying that the company is seeing better acceptance, better pricing, and all of that should reflect in the financials going forward. Siddharth, coverage on this particular counter, and if not, in the space that it operates in, what would your preferred picks be?
So, Alex, we don't have coverage on Ajax Engineering. I don't think we have view on those stocks. But overall, I think if you look at the PC engineering construction space, I think what we like is obviously the larger names, some of the names in the space. For example, Larsen is something that we continue to like. In the sub-segment of the capital goods space is the defense space that again we like. But we don't have much coverage on specifically on this space.
Jay, how are you? Thanks, Siddharth, for that. Jay, how are you looking at Ajax Energy, Engineering, and a Hero Motors? Strong moves in today's session. Would you still be a buyer, or would you advise investors to book profits today?
The Ajax has got a very limited history, so it's difficult to form an opinion from a technical point. But the short-term bottom seems to have been put in at around 557 mark. But I don't have a very good hold on this. When it comes to Hero Motors, I turned bullish on Hero Motors in mid-July, around 4,400 mark, and I projected fresh all-time highs for it, along with Bajaj Auto. Bajaj Auto has been a laggard, but Hero Motors has been working out really well. And I'm sure the 63,100 odd marks, which is a fresh record highs for Hero Motors, that will get taken out in a matter of few weeks.
For those that were wondering, Ajax is the name of the company, not Ajaz.
That's a colleague of ours.
A colleague of ours. But in case you were wondering about the origin of Ajax, it is actually Greek. It's a Greek hero. Do check it out if you're interested in that kind of stuff. But having said that, let's find out the newsmakers of the day. We've got Mahima joining in to talk about some of those, and there are quite a few to talk about. I wonder what she's chosen in her list. Mahima?
Right, so Alex, basically, it's a list of counters that have been kind of buzzing. It's not just newsmakers of today, but I've taken the top movers for the day. I'll start with transformers and rectifiers. After the kind of news flow that came in on Friday, indicating that it was removed from the list of debarring firms and individuals from the World Bank list, the company was granted extension for submitting its explanation against the sanction case. We saw the stock hit an upper circuit, and after that, even today, it's been up that 4% mark since the start of the trade. New deadline for the submission, of course, has been set on 12th of January 2026. In fact, management, when spoke to NDTV Profit, talked about their view in a very positive manner. They said that no impact will be there on order book considering this announcement. Organization image will remain intact with the announcement, and confidence of foreign customers will increase going forward. The next one is Gabriel India. Well, strong volumes coming in here, 8 times its 30-day average. If you take a look at how Q2 has panned out for something like a Gabriel India, which came out with its earnings on last Thursday, overall margins were flat but positive set of numbers. Earlier JV planned having in flat around 51%, and Gabriel at 49% was rejected by Ministry of Heavy Industries, but capex for H1 FY26 stood at around 108 odd crores versus that of 44 odd crores. Major capex was spent on Chakan 2 plant. Export revenue was maintained at around 3 odd %. The other one that is in focus today is Jubilant Engravia. Volumes almost 3 times its 30-day average. In terms of the stock seeing an uptick, overall Q2 performance growth was led by specialty chemicals segment. They're targeting a 12,000 crore peak revenue in the new CDMO contract space, and management has maintained the guidance with regards to where EBITDA is concerned of around 2,000 crore for FY30, by FY30. So this is the overall view of the 3 counters that are buzzing and moving in trade today.
All right. So the one stock that I want to talk about out of this entire list is a stock that is gotten out of circuit today, I believe. Let's pull up Trill if we can, or Tarrell, transformers and rectifiers. Yes, it is in fact trading up about 4.8%. And you know the context. It was put on a debarment list by the World Bank, and that was rolled back towards the end of last week, and it's been buzzing ever since. But Jay, on the charts, how would you trade this? Because it's been extremely volatile all of last week, and it's had a significant up move. If at all, one can argue that it's recovering lost ground. So if you have been able to hold during this time frame, would you book out right now, or would you hold for upside?
I wouldn't have touched the stock in the first place because it's in a very strong downtrend, and it's got a very large gap between 380 and 340. So probably this recovery is a gap filling mechanism, and the momentum is still with the downtrending move. So I would still anticipate lower lows to come through. Since the stock is not an F&O and it can't be shorted, it's an avoid for me. But if you are long, and if you're getting near break even, I would use that opportunity to exit the stock.
Okay, so that's with regards to transformers and rectifiers, but 2 counters which are moving on the back of earnings. Narayana Hridayalaya, strong moves coming in there, and SKF India. Let's pull up both the counters.
Sorry, I can't get over it because we looked at it this morning, Hiral and Sharad. The numbers were good.
Correct.
Okay, 20% upside in revenue, 30% PAT growth, significant 200 basis points margin improvement. Does it warrant a 14% up move?
Yeah, it's the hospital business probably which is in trend right now is what I could say.
I think there was a recent commentary also from the government that for US nationals or abroad nationals, they come in and you get visa on arrival for medical facilities.
Medical tourism is the thing, and I think that's the conversation you would want to catch on NDTV Profit on India Market Open tomorrow as well. An extensive discussion with companies and analysts as to what medical tourism would actually mean for Indian companies.
Our directors are making fun of me because I used to struggle saying Narayana Hridayalaya. Yeah, there you go. I practiced enough.
Okay, so that's what we're talking about. In fact, Jasmeet is with us to tell us more as to what's worked for both these counters today. Jasmeet, over to you.
Well, Ray, thank you for that. Starting up with the first counter, that's Narayana Hridayalaya. While for this company records the highest ever revenue and profitability in this particular quarter. While the growth we see was led by the Cayman business, where the revenue has been 78%. Talking about the Indian trajectory, when that has done really well, even on the back of increased footfall. In terms of the core and non-core business, the core segment is up 15%, while the non-core business is up nearly 16 folds given that. While the other expenses have inched up in the quarter, which is roughly up 43%, which can be seen on the stock movement. So talking about the next one, that's SK SKF India. While we see a positive set of numbers coming for the company, the margins have expanded by 230 basis points in this particular quarter. If you look at the overall revenue, that has inched up faster than the cost. That's why the EBITDA and margin expansion. On the other hand, management has reduced the purchaser in this particular quarter, which is helping the margins. While if you look at the overall purchases, they're down to 35% YOY basis. In terms of the demerger, management makes a commentary stating that the demerger will be effective from 1st of October, which impact can be seen from the Q3 itself. And in terms of the capex plan, the SKF Industrial to invest roughly 800 to 900 odd crores by 2030, while the SKF Automotive to invest roughly 400 to 500 crore by 2030.
For that, Jasmeet, in fact, strong moves in SKF India, but that stock has cooled off slightly. Another counter which comes to my radar right now is a Neogen Chemicals. A strong surge coming in on this counter. In fact, their con call transcript is out. I'm sure there could be some commentary and that's the reason why that stock is buzzing in trade. Bector Foods is another one. 8 to 9% upside coming in the last hour of trade on a Bector Foods as well. Equitas Small Finance Bank, a 7 to 8% up move, and a MRPL, a 7% upside on this one as well. In fact, let me come to you, Jay. Neogen, Bector Foods, Narayan Hridayalaya, Equitas Small Finance Bank, MRPL. Anything that would come to your radar which could still be buy calls, because there is some strong momentum seen on these counters in today's session?
Neogen is an avoid. It's in a downtrend. It's just a blip in the downtrend. And when it comes to Equitas and MRPL, they are in strong uptrends. So, Equitas is already on my watch list. I've been thinking about this as a possible buy today, sell tomorrow candidate. And MRPL, I've been bullish on OMC names for the last 1 month. And also MRPL and Chennai Petro have been rank outperformers. So, but it might be a bit late to get into these stocks, but they are in a strong uptrend. So I like these a couple of names that I mentioned just now. But Neogen is another one.
Okay, all right. So that's the view on the charts. But I wonder, Siddharth, on the fundamentals, whether you had a chance to look at Narayana Hridayalaya numbers. I'm going to go with healthcare, Narayana Healthcare here. But having said that, have you looked at the numbers? Do you like this or any of the other hospital stocks?
Yeah, definitely. I think if you look at hospitals, unfortunately, Narayana is not under coverage, but across we have Apollo Hospitals, Max Healthcare and Medanta. On an aggregate, they delivered about 11-12% revenue growth. This is because of the high base, but otherwise what we see is that they've been consistently delivering strong numbers, and that is something that is as a space within the broader healthcare. I think we continue to remain very positive on hospitals. Purely domestic story, the average room rates, the occupancy, I think that is going up. And even in terms of margins, some of the players like Max Healthcare have been consistently driving growth through both greenfield as well as brownfield expansion. And I think between the three stocks that we cover in the healthcare space, which is your Apollo Hospital, Max and Medanta, our top pick is Max Healthcare.
Okay.
Well, that's a pretty interesting take coming on these stocks. But in our profit intelligence, we will be getting you all the stocks which were a turnaround in the second quarter. I have purposefully taken mid cap and small caps where we have seen the amount of profit actually coming as if you see a turnaround by definition from loss to profit or an increase in numbers maybe after 6 to 8 quarters of suppression coming in. But one by one, let's pick out these companies. First company comes into mode is Tattva Chintan Pharma. The financial parameter which turned around was the EBITDA margin and the net profit. Now what led to this? There was an improvement in the product mix and operating leverage kicking in. Outlook ahead, there's a recovery in the SDA agent segment and the margins. They are expected to normalize going ahead to in 2026 between 20 to 22 odd %. Also, looking at Asian Paints, financial parameters, a significant parameter turnaround happened, moved from losses to PAT. And looking at the overall turnaround that's coming from the decorative business, the volume growth stood at roughly around 11 odd %, and that actually surprised the street as well. Outlook looking like for Asian Paints, it's broad-based growth both in urban as well as rural segment. Honasa Consumer, a very strong top line growth coming in and a better gross margin as well. Now, what led to this turnaround? That's very important. A 17% volume-led growth came in, and the growth trajectory was also on the stronger side. Skincare brand, that's where the bullishness is happening in the outlook front. Now, from financials, it's DAM Capital, which was a very superb quarter. You could say the numbers moved from losses to profit, and after 4 or 5 quarters of suppression, we saw a strong movement coming in. Investment banking segment was the star performer, and a strong growth was coming in this segment. However, if you look at the pipeline, 21 IPOs and 13 as a lead banker, it's there. So that is something which the street will be watching for. And lastly, Rain Industries is the 5th company where we saw turnaround, and EBITDA rebound was there, and this was led by the carbon segment, cement realizations, and a favorable currency for them. And a lot of exports happen in Europe, and that is why if you compare that with the Indian rupee, it augurs well for the company. So these are the 5 important turnaround stocks in the second quarter.
For that, Sharad, interesting stocks that you've mentioned so far. Siddharth, the turnaround stories of the second quarter in terms of individual stocks, would you be a buyer of any of these? And if so, what would your topic be?
I think some of them are really interesting names, especially if you look at the retail space. V2 retail, that is something that has caught my attention. I think even Vishal Mega Mart, they delivered another strong quarter, 22% growth led by store additions plus robust almost 13% adjusted same-store sales growth. I think some of them may not be a pure play buys, but definitely worth a look at it. As I said, within the retail space, we like a Vishal Mega Mart, strong quarters, strong results on all fronts, buy rating with a target of 180. But the list definitely makes warrant to have a detailed look.
Okay, so V2 retail is something that's coming to your radar as well. In fact, another stock that we should be discussing today is what's happening with Groww. If you see in terms of the market cap, it's actually crossed that 1 lakh crore mark, and it actually tells you it's a blockbuster market debut that the stock has made, and it's adding heft at an extraordinary pace as well. In fact, what's the stock growth looking like? A 1 lakh crore market cap is what it's hit. It actually listed at a 14% premium, and this is on the 13th of November. It's added nearly 30,000 odd crores when it comes to market cap in the last 3 trading sessions. And it's seeing following buying from institutional investors as well post the IPO. If you see in terms of the key prices, the IPO price was around 100, the listing price was 112, and the current market price, which sits at around 178 rupees per share. It's actually surpassed the total of the 9 other brokerages. So if you talk about the listed players from a Novama to a Angel One, JM Financial, Choice, IIFL Capital, you can see the names on the list. If you total the market cap of all of these, it's actually surpassed that as well. And you're seeing some strong momentum in the other names. So this is going to be an interesting story that we need to track from here on. Siddharth, your view when it comes to Groww versus the other capital market players?
So I think definitely a surprise for all of us in the capital market. I think what good it does is that the benchmark valuation now what Groww is setting, I think the others need to do a lot of catch up, including the likes of a BSE or an Angel One or an MCX or the other stockbroking stocks. But I think one thing that is key positive is in the last few weeks, the regulator coming out in some of the conferences and clearly saying out that the weekly derivatives expiry is not going to go away. I think that is something that has kind of removed a big overhang, especially for some of the broking stocks.
Interesting. All right. It is also interesting that that the counter in terms of market capitalization is comparable with the one listed exchange in the stock market space, BSE, more or less around that 1 lakh crore mark. Jay, I want to come to you on any BTST ideas that you might have.
Yeah, I'm looking at Bajaj Auto as a BTST, and I'm liking the stock. And with a stop loss of about 8,800, I'm anticipating the stock to reach 9,050 tomorrow.
Okay, so that's with regards to Bajaj Auto. Siddharth, a couple of small cap companies which are buzzing in trade today. From SP Apparel, strong volumes over there. Marico Auto seeing some strong volumes. IDFC Technologies buzzing on the back of, a couple of order wins as well that did come in on a Friday. Anything that you like from the 3 counters? Because there are fundamental reasons to these counters as well. And the volumes are pretty strong.
Viral, unfortunately, again, some of these names we don't cover smaller names, so I will not have a view.
Anything from the respective sectors?
Yeah, so I think from the auto sector, Hero MotoCorp came out with pretty strong, steady quarters, volume led by growth, stable margins. We are witnessing rural recovery, and along with that, improving exports plus the EV momentum. I think the stock is well positioned. Valuations are pretty comfortable compared to some of the peers. Compares like TVS Motors or a Bajaj Auto trading at 16 to 18 times 1 year, 2 year forward on a PE basis. So we definitely like Hero Moto as a recovery play. We have a target price of 6,500 on Hero MotoCorp.
What about Siemens? And I was quite surprised, I must say, Siddharth, coverage on this one, because I thought that the numbers might have been a little bit soft, but then clearly the street is seeing something that they like. What do you think?
Even we thought Siemens mixed bag kind of numbers. Revenue was ahead, but profitability marginally below our expectations. Even if you look at segment wise, smart infra mobility did well, while the digital remained kind of weak. Order inflows grew about 10%. So overall, what we see is that it's just a decent quarter. I think the street is definitely getting excited about the pickup in the inflows as well as in order inflows as well as in execution. Valuation wise, also I think pretty steady, and so we have a neutral rating on Siemens with a target price of 3,350. So don't see much upside until the execution picks up.
That's pretty interesting. Thank you very much, Siddharth and Jay, for joining us and giving your views both on technical and fundamental perspectives. But now let's go back to the market closing. A strong closing we are expecting, and especially we are hoping that this number stays above the 26,000 mark. Interestingly, we are hoping that for 59,000 for Nifty Bank as well. Strength coming from both of these counters, but Nifty Bank, that's the show coming in, as all HDFC Bank, ICICI Bank and PSU Bank, all three are firing the cylinders. Let's look at Nifty's important chart where the constituents, how they are actually moving in their trade. Roughly you could say 60 to 70 odd % of these constituents are trading in the green, led by Eternal and Tata Motors. But on the losing side, we are having Ultratech Cement, Jio Financial, Asian Paints to the list. But net, the overall trend is strong, and it's expected that the Nifty will be closing above the 26,000 odd mark. Let's pull up the sectoral moves, how is actually panning out, and largely we see Nifty PSU Bank, Nifty Auto doing well in the trade, a sea of green coming in, and you see even the metal and defense reversing. So that is a very strong market heat map we are seeing. Let's look at the mid cap and the small cap, how they are actually panning out. And you see the Nifty Mid Cap 100 Index ending near the day's high level, and that's a very strong signal coming in. Same thing goes for small cap. That means value buying is coming in the broader indices as well. Let's get the advanced decline ratio also. Over here we see it has been in a narrow range. Earlier it was a big spike, but still the day is expected to end with higher advances than declines. Apart from this, let's pull up the BSE contribution chart where we see that the movement is happening, and this includes Narayan Hrudayalaya. It's 15% up, and that's a significant up move coming in. And also importantly, we look at the Tata Motors PV that has fallen the most. Emphasis expected a block deal, and Astral and even Supreme falling in the trade as well. So this is the entire picture of the market looking like, and it's strong closing seeing for Nifty and Nifty Bank as well, and that's important. But cues for watch for tomorrow: India's unemployment rate, India balance of exports, macro data is something which you'll be looking at. Interim dividend coming for Venus Pipes, but market might lack some triggers. IPO listings is much important. Both Physics Wala and MV Photovoltaic Power will be in focus, and shares coming out of lock-in, that's Cainstech 20 odd %. So that is something which we'll be watching out for. But that's all for today at India Market Close at NDTV Profit. But after this, there's an interesting show coming up. Himangshi is getting us for Market Express.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So first up, let's see how the markets have fared today. So markets started the week on a cheerful note as Nifty ends above the 26,000 mark. HDFC Bank and ICICI Bank also contributes most to the rally. If we talk about Sensex, so that ended almost 400 points higher. Now it's a sea of green on the Dalal Street today with all the major sectors closing in the positive. Nifty PSU Bank also emerges as a top sectoral gainer and this is supported by strong buying momentum. Let's look at some key earnings. Ajax Engineering has posted a strong second quarter as large contract deliveries lift the revenues. However, margins, come under pressure due to transition costs linked to the new CEV5 emission norms. So the SLCM business sees sharp growth while non-SLCM revenues remain steady. Spares and services continue to expand, adding to the company's stable performance across the first half of the year. Next up, we have Citi, which has upgraded its, Ajax Engineering to buy with a target of 735 rupees, saying that the worst may be behind. Analysts also expect demand and margins to, trend higher, and this is driven by recovery in the concrete demand and also improved market share. Better acceptance and pricing could further support growth in the coming quarters. Next up, we have Ashoka Buildcon, which has posted its fourth consecutive quarter of revenue decline, with its total order book standing at around 14,900 crore rupees as of September. So the toll collections have risen 13% to roughly 360 crore rupees, but the company faces a setback as a 290 crore infrastructure project with MMRDA gets cancelled. Next up, we have Amber Enterprises, which is strengthening its electronics business as its key subsidiary, ILGEN Electronics, has signed a definitive pact to acquire a majority stake in Pune-based PCB maker Shogini Technoarts. So the acquisition aims to boost Amber's bare PCB vertical, to deepen the backward integration and also to expand its footprint in the advanced electronics manufacturing space. And analysts are mixed on Tata Motors' passenger vehicle business. So JP Morgan maintains a neutral rating with a target of 385 rupees, and they've cited a weaker than expected JLR results but better margins in India PV. So CLSA stays positive with an outperform rating and also a target of 527 rupees, noting challenges from a cyber attack and also lower the JLR margins, but expect GST cuts to boost the growth in small to mid SUVs. Now let's look at the brokerage note by Morgan Stanley, which has turned bullish on Hero MotoCorp, upgrading the stock to overweight and also raising its target to 6,471 rupees. So the brokerage notes that market share declines have paused, with Hero seeing gains in scooters, EVs and also the premium segment. So a better product mix and lower EV losses are expected to support the margins, while valuations and a healthy dividend yield have added further appeal. Anantraj's arm, Anantraj Cloud, has just signed a big deal with the Andhra Pradesh government. So they are set to develop a new data centers and also an IT park in the state. So this move is expected to bring in significant investment and also boost the region's tech infrastructure. And India's largest ethanol producer, Trueworld Bioenergy, has also signed an MOU to set up one of the world's largest sustainable aviation fuel manufacturing facilities in Andhra Pradesh with 2,250 crore rupees of investment. So this facility can actually produce 80,000 tons per year. The proposed plant is also expected to create over 500 direct jobs and nearly 2,000 indirect jobs, catalyzing the substantial economic growth across the allied sectors and also contributing to the region's industrial expansion and employment generation. Now from the infra space, IRB Infrastructure Trust has backed a major order from NHAI for the TOT 17 bundle covering 366 kilometers of the prestigious Lucknow-Ayodhya-Gorakhpur corridor on NH27 and part of the Lucknow-Varanasi corridor on NH 731 for a revenue-linked concession period of 20 years. So this deal strengthens IRB's position, giving them a whopping 42% market share in the TOT space. And this is certainly a big win for the company. Next up, we have EPAC Durable, which is lining up a big expansion push. So the company has signed a non-binding MOU with the Andhra Pradesh Economic Development Board. They are committing to invest about 1,083 crore rupees, and this investment will support EPAC Durable's next phase of expansion. And also the company says, the plan will be executed in collaboration with Andhra Pradesh Economic Development Board. Next up, we have Glenmark Pharma, which may have posted weak earnings this time, but the management is sounding far more upbeat. On the con call, Glenmark said that it expects to return to a high growth phase soon. Revenues are projected to cross 8,000 crore rupees in the second half of FY26 and also grow around 15% in FY27. So taking the top line to 17,000 to 18,000 crore rupees. And on the margins front, if you look at, the company is guiding for 23% EBITDA in H2 of FY26 and also move towards 25% in the medium term. So that's a strong management commentary coming in there. Next up, we have Max Healthcare, which has posted a steady Q2 with a big boost to the profitability and thanks to a favorable tax impact. So revenue momentum was driven by higher occupied bed days, while PAT has jumped largely because of that tax benefit. And international patient revenue was up 25% year on year, now contributing 9% to the overall mix. So on the operations front, the bed capacity has expanded sharply to 4,760 beds compared to 3,949 last year, and occupancy stood at 77%, which is slightly lower than 79% year on year, while the average revenue per occupied bed has inched up 1%. So now if we look at the expansion side, a 160 bed tower has been commissioned in Mohali. A 268 bed tower at Nanavati Max goes live next week, and the company has secured approval for a new 130 bed hospital in Dehradun, targeted for 2028. Now, viewers, shares of Supreme Industries and Astral are under pressure today, and the big trigger is coming from Reliance. So RIL has cut the PVC prices by 3 rupees per kg effective 15th of November, and this is bringing down the prices to 70 rupees per kg. In fact, from October till now, Reliance has slashed PVC prices by almost 6 rupees per kg. And this is adding to the sentiment. The government still hasn't confirmed the DGTR recommended anti-dumping duty on the PVC. Plus, the ministry recently rolled back the BIS mandate on several polymers. And this is signaling that the government may not be in favor of the AD or BIS implementation at this stage. So without AD, analysts say that primary stocking could actually remain muted, which may cap the volume growth for pipe makers in the second half unless demand really picks up. Narayan Hrudayalaya posts its highest ever quarterly revenue and profitability in Q2. Growth is driven largely by its Cayman business, which surges 78% year on year. The Indian market also shows improvement with strong patient footfall supporting the operations. The core healthcare segment has grown 15%, while the other segments has recorded a remarkable 16-fold increase. However, other expenses have risen 43%, and this is reflecting higher operational costs during the quarter. Next up, we have SKF India. That has posted a strong Q2 with margins improving as revenue grows faster than cost, and this is supporting EBITDA. So overall business activity has risen, and the ongoing demerger is also expected to bring clarity and also accelerate the growth. So looking ahead, both the SKF Industrial and Automotive plan significant investments over the next few years to drive its expansion. Viewers, Indian Hotels Company is planning to step into the integrated wellness space with a strategic acquisition. So IHCL will pick up a 51% stake in Sparsh Infratech, which is the owner of the premium wellness resort Atmantan in Mulshi, Maharashtra. So the company is likely to invest around 240 crore rupees, valuing the target at an enterprise value of 415 crore rupees for the transaction. So Sparsh has been growing steadily, with revenues rising from 49.7 crore rupees in FY23 to 76.7 crore rupees in FY25. In fact, brokerages are also welcoming this move. Morgan Stanley has maintained its overweight rating with an 811 rupees of target and calling this an interesting foray into the holistic health. So overall, if we look at IHCL is positioning itself to tap into the fast-growing holistic wellness market. Now let's also look at some brokerage notes on Voltas, and they seem pretty divided. Goldman Sachs has maintained its sell rating with a target of 1100 rupees, saying that the unitary cooling products business remains weak. They also believe that the H2 demand setup is already priced in. The EMP segment is only normalizing, and a positive surprise on the AC margins look unlikely. And on the other hand, if we look at Citi, so they have maintained its buy call, but they have trimmed the target to 1775 rupees from 1800 rupees. So Citi is saying that Voltas has started regaining the market share, and the non-perishable nature of AC demand could actually lift the FY27 growth. So they also flag positives like the pent-up summer demand, GST transition, and also realty completions, and channel the inventory returning to normal levels. Viewers, Anil Ambani has skipped the ED summons for the second straight day today. The Enforcement Directorate had called him for questioning in the FEMA-related case linked to a highway project in Jaipur, Ringas, but Ambani does not appear in person. Now, the ED had rejected his request for a virtual hearing and says that it wants to record his statement. The investigation alleges funds from the project were siphoned abroad through shell companies with a broader international network under scrutiny. The agency continues its probe into these alleged transactions. Viewers, Mumbai is facing a widespread CNG supply disruption after a key gas pipeline is damaged inside the RCF compound at Chembur. So the rupture has hit flow to the Mahanagar Gas Limited's Wadala City Gate Station, which is a critical node that feeds CNG pumps across Mumbai, Thane and Navi Mumbai. So through the day, taxi and auto rickshaw fleets struggle to stay on the road, with many vehicles running dry and turning back from shut pumps. So the limited pumps still operating are seeing long queues and extended waiting times, as you can see on your screens right now, the visuals there. MGL is saying that it is prioritizing domestic piped gas customers for now, as restoration work continues at the damaged site. So the company says that there is no definitive timeline yet for full CNG normalization, and this is raising concerns for transport operators, last mile logistic players, and also commuters heading into the work week. Viewers, Indian state-run oil marketing companies have finalized a one-year contract to source nearly 10% of the country's LPG imports from the US Gulf Coast in 2026, Union Minister for Petroleum and Natural Gas Hardeep Singh Puri said earlier today. So the deal will be covering around 2.2 million tons per annum, and it will mark the first structured long-term contract for US LPG into the Indian market. So the agreement comes at a time when both the nations are exploring a broader trade package, and also underscores India's strategy of diversifying fuel sources to ensure affordable and also reliable supplies for its expanding LPG consumer base. Energy has increasingly become a pillar of bilateral cooperation, with the US also emerging as a key supplier of oil, LNG, and now the LPG. The central government has cleared another tranche of applications under the Electronic Component Manufacturing Scheme with a total investment of 7,712 crore rupees. So this was mentioned by the IT Secretary S. Krishnan, earlier today. So 17 applications have been approved in the current tranche out of 249. The current tranche of applications also secured its first investment from Jammu and Kashmir. Other locations where the companies hail from include, Uttar Pradesh, Madhya Pradesh, Karnataka, Maharashtra, Tamil Nadu, and several others. So Krishnan said that the basic objective is to deepen the value chain in India, since the world, is looking at diversification of value chains, and also India is a key player in that. US Japanese investment bank Nomura Holdings is investigating its India fixed income operations amid concerns that reported profits in its rate division may have been inflated in the recent years. So the investigation is focused on how the company value trades and separate trading of registered interest and also principal of security bonds, or the strips. So Nomura's compliance unit started scrutinizing the valuation and also accounting practices of its local primary dealership about a month ago. Samsung Electronics has increased memory chip prices by up to 60% this month compared to September amid a global shortage driven by rising demand for AI. So this price increase is affecting the server makers and actually could raise the cost for smartphones and also computers. So shares of Samsung, SK Hynix and also US chip makers have surged following the development, highlighting now the AI boom has driven strong demand for chips tailored for AI applications and the memory chips used in them. So the price hike comes after Samsung, the world's biggest memory chip manufacturer, has decided to delay a formal announcement of pricing for the supply contracts in October. Next up, we have Ola Electric. That's in focus, as the company said that it has commenced test rides of its 4680 Bharat Cell vehicles at the company's flagship stores across India. So the S1 Pro Plus is the first product to be powered by the company's indigenously manufactured 4680 Bharat Cell battery pack that delivers more range, better performance, and also enhanced safety. So the company recently announced that it secured RA certification under the latest AIS 156 Amendment 4 standards issued by the Ministry of Road Transport and Highways. So the indigenous technology is now available for customers to experience through test rides at Ola's flagship stores. US Dipinder Goyal has sparked a conversation about the potential link between gravity and aging. So in a series of tweets on November 15, the founder and CEO of Zomato, as well as the founder of Eternal, highlighted what he suggests is the most critical and often ignored health factor affecting aging. That is the plumbing system to your brain. So he spoke about the theory known as the gravity aging hypothesis, which suggests that the constant pull of gravity on our bodies, particularly the brain, may contribute to the aging process. So Dipinder, whose venture Continue Research focuses on human longevity, aging research and health tracking technologies, shared that the hypothesis is based on the idea that our upright posture reduces the blood flow to the brain, potentially leading to a decline in the cognitive function and also the overall health. Now, looking at the National Confederation of Central Government Employees, they're calling for changes to the terms of reference of the upcoming 8th Pay Commission. So the group wants pension revisions, arguing that the pensioners' payments have not kept, up with the inflation. So they have urged the Prime Minister Narendra Modi to address this ahead of the Commission's final report. The Confederation also demands better allowances and also improved pay structure for the central government employees, citing stagnation and also the rising cost of living. Viewers, let's look at some global news now. Bangladesh court has sentenced the ousted Prime Minister Sheikh Hasina to death earlier today, concluding a months-long trial that found her guilty of ordering a deadly crackdown on a student-led uprising last year. So the ruling comes months before parliamentary elections expected in early February. Hasina's Awami League party has been barred from contesting. The International Crimes Tribunal, Bangladesh's domestic war crimes court located in the capital Dhaka, has delivered the guilty verdict amid tight security and also in Hasina's absence after she fled to India in August 2024. And in a tragic accident, at least 45 Indians are feared dead after a bus carrying Umrah pilgrims collided with a diesel tanker near the city of Medina today. The passengers are believed to be Indian nationals, primarily hailing from the city of Hyderabad, though the official confirmations are still awaited. Following the accident, Prime Minister Narendra Modi has expressed condolences and said that his thoughts are with the families who have lost their loved ones and also prays for the swift recovery for all those injured. Vice President, Defence Minister and External Affairs Minister, along with other Parliamentary Affairs Minister, have expressed, heartfelt condolences to the affected families. Now let's look at some more global news. US President Donald Trump has warned that any country that does business with Russia will be very severely sanctioned as his administration and Republican lawmakers push ahead with tough legislation targeting Moscow. So responding to questions from reporters on Sunday on whether it was time for Congress to pass the measures aimed at pressuring Russia and President Vladimir Putin, President Trump said that I hear they are doing that, and that's okay with me. The Trump administration has imposed 50% tariffs on India, among the highest in the world, including 25% levies for its purchases of Russian energy. Now on to some national news. A major breakthrough in the Delhi blast case. The NIA has arrested a Kashmiri resident who allegedly conspired with the suicide bomber in the attack that killed 10 people and injured 32 others. The accused, Amir Rashid Ali, was picked up from Delhi. The car used in the blast was registered in his name, and the NIA launched a massive search operation after taking over the probe from Delhi police. So the agency says that this arrest is a significant step forward in cracking the larger conspiracy behind the terror attack. The national capital woke up to dense smog on Monday morning as the average air quality index stood at 359 at 7 a.m., falling under the very poor category despite the Graded Response Action Plan 3 in effect across Delhi and the national capital region. So a layer of thick smog engulfed areas, showing little to no improvement from Sunday morning's AQI of 385, as you can see on your screens right now. Now on to a shocking case from Bengaluru. A 57-year-old woman has been duped of nearly 32 crore rupees in a digital arrest scam. So fraudsters posed a DHL staff, cybercrime officials, CBI, and even RBI personnel, and kept her in virtual custody for almost 6 months. So a scam began after she received a call claiming DHL parcel in her name contained passports, credit cards, and MDMA, and that her identity had been misused. So the 57-year-old victim has made 187 transactions amounting to 31.83 crore rupees. Viewers, Nitish Kumar will take oath as Bihar Chief Minister for the 10th time on November 20th. Prime Minister Narendra Modi and other NDA leaders will attend the grand ceremony at Gandhi Maidan in Patna. The NDA secured a significant victory in the recent Bihar elections. Viewers, on to some sports news now. Kumar Sangakkara is back as Rajasthan Royals head coach for IPL 2026 while continuing as director of cricket, the franchise announced. So he previously led the team from 2021 to 2024 before Rahul Dravid took over. Under Sangakkara, Royals made it to the 2022 final and also reached the 2024 playoffs. So the franchise says that his return brings continuity and stability, highlighting his calm leadership and deep understanding of the team's culture. The coaching staff also includes Vikram Rathore, Shane Bond, Trevor Penny and Sid Lahiri. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1.
Market ends in the green with Nifty reclaiming 26,000 and Sensex gaining over 300 points. All sectors close in the green with Nifty PSU Bank Index as the gainer. Mid and small cap indices outperform the benchmarks.
I think it's a very robust market. We may try to compare with the rest of the world and try to think that we have weaknesses. It's like Sachin Tendulkar's batting.
NSE CEO Ashish Chauhan likens the Indian market to Sachin Tendulkar's batting, says we might score 100 centuries, but people will wonder why we're not hitting a 6 on every ball.
Initial public offerings have increasingly become exit vehicles for early investors rather than mechanisms for raising long-term capital.
CEA calls for scale and purpose in the Indian capital market, says IPOs have increasingly become exit vehicles rather than long-term growth vehicles.
With the introduction of the offer document summary, the requirements of abridged prospectus will be dispensed with, reducing the compliance requirements of the issuers.
SEBI Chief Tuhin Kanta Pandey stresses on the importance of diversity in the capital market, says exits and fundraisers will vary from IPO to IPO, adds that both the aspects are equally important. India and the US remain engaged in discussions on the trade deal, says Commerce Secretary Rajesh Agrawal expects part of the agreement that covers reciprocal tariffs to happen sooner rather than later. Major gas pipeline leak disrupts domestic supply to several parts of Mumbai and Navi Mumbai, leading to long waits at CNG pumps. Damage to the main gas pipeline impacted gas supply to MGL station in Badala. Anil Ambani skips enforcement directorate summon for the second time, says he always served as a non-executive director at Reliance Infrastructure and was not in charge of the day-to-day operations of the company. Once again offers to appear via virtual appearance. Nitish Kumar is set to take oath as the Chief Minister of Bihar on the 20th of November. Sources say the BJP will have 2 deputy chief ministers in the new government. Ram Vilas Paswani's Lok Janshakti party is likely to get 2 to 3 ministerial berths. A bus tanker collision in Saudi Arabia near Medina claims the lives of 42 Indians. Reports say most passengers on the bus were from Hyderabad in Telangana. Consulate General of India in Jeddah sets up a 24/7 control room with a helpline. Bangladesh tribunal sentences former Prime Minister Sheikh Hasina on 3 counts: incitement, order to kill, and failing to take action against perpetrators and liable to be punished. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Mallika Mishra. Along the next half an hour, we'll bring you up to speed on markets as well as national and international news. Let's begin with checking how the markets fared first. Markets ended higher after Nifty reclaimed its 26,000 mark, Bank Nifty hit a record intraday and crossed the 59,000 mark.